at home is holistically more healthy. But of course, we've also seen huge increases in alcohol consumption and the subsequent demand for that. But I think that overall, this has really spurred people to think differently about their diets and think differently about their health, and we've seen that reflect. So our hope is that coming out of this, a lot of those positive trends stay, and we're again seeing trends of that and signs of that on our platform as well.
Thank you so much, Mike Brackett, there, founder and chief executive of Centricity, on what we'll buy or not be buying for Christmas. Now let's stick around and talk about, of course, some of the consumer trends we've seen. Cosmetics giant L'Oréal sees a makeup revival after the pandemic. Well, the chief executive, Jean-Paul Agon, told us that even though e-commerce has gained traction during the crisis, the market will not completely move away from bricks and mortar stores.
I think that, as you've seen, we were already back to growth on the third quarter. The market is still negative, so we are doing better than the market, but the market should recover. There is a very strong appetite everywhere in the world for beauty products. And in fact, as I explained several times, the crisis that we had this year is not really a demand crisis as we used to have in the past, in other crises, but it's more a supply crisis because consumers couldn't buy the products. So we are back, for example, in Europe, back to lockdown, but now e-commerce is getting traction. And I think that because there will be a when the virus is gone, I think that we will be back to a very, very good consumption. The appetite for beauty is absolutely still there, more than ever.
Your chief digital officer recently talked about e-commerce. As you say, you see a lot of demand in there. And they were talking about the fact that it's your biggest market now, all of this clearly fueled by the pandemic. Will it ever be 100% and we see an ease up or a phase out of brick and mortar retail stores?
No, I don't think so. I think that it's a new option for consumers, and consumers are switching. Part of consumers are switching every year more from brick and mortar to e-commerce. Of course, it was accelerated this year. It was already going very fast before. I remind you that last year, for example, our e-commerce sales were growing by 50%, which is already very fast. So this year, of course, it grew even faster because when the stores were closed, of course, there was an acceleration. And it represents now 25% of our sales. So it's going to keep growing, but consumers will always want to have the opportunity also to see products in stores. And so I'm a great believer in what Jack Ma described a few years ago already as the O+O, which means offline plus online, as two options and also a combination of options.
What are you currently seeing, given the fact that Europe is dealing with the second wave, France is in lockdown, the UK is in lockdown? How has that affected your business?
It doesn't help, of course. It doesn't help. I'm really sorry for our partners, our salon, for example, professional salon partners, perfumeries, department stores. It's really difficult for them. So we help them as much as we can. During the first lockdown, we froze the payments of all our small customers, more than 100,000 salons and small perfumeries, and we accelerated payments to our suppliers. So we are doing the same. We try to help our ecosystem. And of course, it doesn't help consumption, but I hope it's not going to last too long. And consumers also, I think, are more now aware of other options. They go on e-commerce, they find solutions, but of course it doesn't help. It should not last too long.
Well, that was the L'Oréal chief executive Jean-Paul Agon speaking on the makeup industry's revival. In the meantime, talk about revival. This is what the markets are doing. If you look at a lot of European stocks, they follow U.S. futures. looking at records. Now, the focus is firmly, of course, on the positive momentum on trade. I'm talking about what's happening in Asia. A lot of the Asian countries signed on this historic trade deal yesterday. There's also signs of opposition to a national American lockdown. That seems to be supportive of a lot of the stocks, and the dollar is falling. Now, again, if you look at some of the other things that we're watching, I would look at European cyclical stocks that seem to have pulled ahead of defensives, certainly in the year-to-date performance. Coming up, Belgium's Prime Minister says the country's intensive care units are pushed to the limit. Our interview with Alexander De Croo is up next. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, Belgium's Prime Minister says the country's intensive care units are pushed to the limit. In an interview with Maria Tadeo, Alexander De Croo told us he believes coronavirus restrictions will be in place for a long time. Well, they spoke at the European Business Summit in Brussels.
The numbers on one dimension are going in a good direction, which is the number of confirmed cases. We've seen over the last week numbers going down, which is a good thing. On the other side, we see that in our intensive care units, the pressure is still very high. We will be able to cope with the fact that we have many people in hospitals. We've always had a lot of hospital capacity and a very high quality healthcare system, but it is really being pushed to the limits. We are here showing again that while there is a very strong link between a strong and healthy and resilient economy and a healthcare system that is strong.
And, you know, I remember this at a press conference. You said we all in Belgium, but also almost Europe, we all need to act as one team. And so I do wonder, the restrictions that you've put in place, of course, they have a huge impact, not just on the economy, but also on people. You know, could you give us any insight as to whether these restrictions you do feel are going to be here for a while and people need to get used to this, or whether there's a timeline going forward now that we have that vaccine news that I'm sure you welcome like everyone else?
Well, it is a marathon. It's a long-term effort, and in Belgium, I've always said, look, it's a marathon. We are for the moment closer to the start of that marathon than we are to the finish. So I'm convinced that some kind of measure, some kind of restrictions will be applicable for a fairly long time. I've seen the positive news on vaccines. That's great. But they're not there yet. We're still looking for the outcome of the medical trials. So vaccines and fast testing and self-testing will be a part of what I would call a containment strategy. And I expect that containment strategy to be part of our lives for quite a long time, yeah.
And you know, I want to pick up on that final point that you just gave, because it really does reflect everything that we've heard from almost leaders across Europe, the Commission too, to really get this message across that the vaccine is not a silver bullet, that we all need to be flexible and adapt. So I wonder, how do we do that on a daily basis to keep the economy afloat? I do wonder, do you have a plan in terms of what the next 6 months are going to look like for the Belgian economy?
Well, look, the way we managed the second wave is different than we did it in the first wave. In the first wave, we went for an almost full lockdown. We closed down all non-essential businesses. This time, it's different. And the non-essential retail is closed, but all the other businesses are open. People have adapted themselves in working from home as much as they can. We now have face masks. I mean, a lot of life is still going on. It's just we've been better at identifying at what is risky behavior and trying to minimize the things of which we by now know that it has an impact.
Well, that was Belgium's Prime Minister Alexander De Croo speaking to us at the European Business Summit in Brussels. Now, the focus on the markets is actually on some of the positive news out there. The fact that Joe Biden's advisors have said that they will not look at a lockdown. Again, so many questions about whether we need to put the economy against the health of people. But this is the way it goes, and certainly that's what the markets are looking at. The number of infected keep on rising, but there's hope that a vaccine will be here sooner than expected. We'll also look at some of the scarring for the economies around the world. Bloomberg surveillance continues. In the next hour, Tom Keene joins me out of New York, and this is Bloomberg.
So when you went to Baltimore, you went initially to be an anchor woman,
Mm-hmm.
and then it didn't quite work out.
Yeah, I got fired.
Well,
well, demoted. I was
got demoted, but they didn't. They had a contract, so they didn't say goodbye. Yeah. And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. You know, lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend Gail, who I met there at the time, she was also working there. She said, "Oh my God, you're 22, making $22,000. Imagine when you're 25, then you're 30." So I'd be making 60 about now. It'd be good, 62. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000,
Right.
so they kept me on and said, "We'll put you on this talk show just to run out your contract."
We don't have a sort of fixed order of use of tools, and I think that's appropriate. It would always be dependent upon the state of the world and the state of the economy that we found ourselves in.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Balancing risks, President-elect Biden's team suggests a national lockdown is not on the agenda. Virus cases in the U.S. surpassed 11 million, but global stocks continue to gain. Trump's last stand, the president comes close to admitting he lost, but walks back all the talk of a concession on Twitter. There are reports he plans fresh hardline moves against Beijing in the final weeks of his term. And best laid plans, Brexit talks with the EU enter another crucial week, but the UK Prime Minister is isolating after coming into contact with a lawmaker who tested positive for coronavirus. Well, good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Of course, if you're watching from Asia, good afternoon to you. This is Monday morning, Tom, and there's a lot going on. First of all, we look at this historic trade agreement with a lot of the Asian countries that was signed yesterday. It may put extra pressure on the next president of the United States to rejoin TPP, but the focus is, of course, on the president, Trump, whether he'll concede and what this means for trade deals with China as well.
Yeah, I read about the trade deal. I mean, it's on the back of the burner for Americans because both candidates, both parties are really reticent to sign those deals. We can touch on that, but you're right. Front and center here in the nation is the step-by-step, the back and forth, the tweet-by-tweet with the president. But even fronter than that is the pandemic. Francine, it was the oddest of weekends.
Yeah, it was actually a really busy weekend, and here, of course, in the UK with news that Boris Johnson, who contracted the virus, remember, in March, who even went to ICU, now having to self-isolate after coming into contact with someone who's tested positive. So we'll have plenty more on that and the consequences for Brexit. But first, let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. President-elect Joe Biden's top coronavirus advisors say a national lockdown isn't on the agenda. One of them, former Surgeon General Vivek Murthy, says the preferred approach to fighting it is, quote, a dial that we turn up and down depending on severity. U.S. case records have hit records over the past 2 weeks. Boris Johnson's attempt to get his premiership back on track has stumbled before it even began. The British Prime Minister is being forced to self-isolate after meeting a lawmaker who tested positive for the coronavirus. Johnson had hoped to regain control of the national agenda following a chaotic turf war in Downing Street. In sports, Dustin Johnson made history while winning his first Masters tournament. The world's top-ranked golfer shot a record 20 under par to win by 5 shots. It was the largest margin of victory at the Masters in 23 years. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. What we've got going right now is equities higher. We can talk a lot about this. We'll do this through all of surveillance today. Futures up 31. Dow futures explode up 295, buttressed right up against 29,705. The VIX shows at 23.52. You wonder as the VIX opens if we'll get a 22 handle on the VIX this morning. Dollar, little bit of weakness, but I'd really focus, Francine, is on Pacific Rim. It's not a series we look at often. The Asia DXY. DXY DXY is the big trading partner index. Asia DXY is the Pacific Rim ex Japan. Without Japan, a 108.09 is meaningless. All you got to know is out to a recent record strength on Pacific Rim currencies. Francine?
Yeah, and Tom, this is probably also on the deal that they signed with amongst Asian economies. European stocks, look, are following Asian shares, are following U.S. futures higher, buoyed by this positive sentiment on trade, but also signs of opposition to a national American lockdown. You're absolutely right, Tom, to mention the dollar falling. And then the only thing I'm looking at as well is oil pushing higher, treasuries edging up. Now, President Donald Trump has pulled back from a tacit concession to Joe Biden. On Twitter yesterday, the president wrote he won because the election was rigged. But later, the president tweeted, quote, he only won in the eyes of the fake news media. Now, he said, I concede nothing. Ron Klain, President-elect Biden's chief of staff, told NBC's Meet the Press that a concession from Trump was immaterial.
Donald Trump's Twitter feed doesn't make Joe Biden president or not president. The American people did that. What we really want to see this week, Chuck, is the General Services Administration issue that ascertainment so we can start to do the kinds of things you and I talked about a few minutes ago. Meet with these vaccine officials, kind of get the intelligence briefings for the president-elect, the vice president-elect.
Well, joining us now is Lindsay Newman, independent senior political analyst and former Chatham House senior research fellow of U.S. and the Americas. Lindsay, thank you so much for joining us. I mean, frankly, it's just bizarre. Like, it's difficult to know who's right, the whole thing just, it's like a bad plot out of a B-rated movie. How does this end, and what happens this week?
So as you said, it's to begin with, all eyes remain on Trump. Absolutely. Will he concede? When will he concede? And also how he will concede. I appreciate that Ron Klain, incoming chief of staff's statement on Meet the Press. And it's important really to separate out the question of who will be president on January 20th, 2021. Barring some unforeseen events, that will be Joe Biden. He is 306 electoral college votes to Trump's 232. But separate that question of who will be president next year with the question of how is the current president behaving during this important period. If it were any other country in the world, we would be concerned about the political system, the health of that political system, and its trajectory.
Lindsay, give me a sense of exactly what you think Joe Biden needs to do now. Is he getting the very important briefings that usually the president-elect has access in a transition period?
So Donald Trump continues, as you said, to use this language around a rigged election. He is not conceding. There was this moment where on Twitter where he said that Biden won because of the election being fraudulent. But now, as you said, he's backtracked. So where Biden stands is still pretty much shut out. He is taking important steps. He has named his transition team across various sectors. He's named Ron Klain to be his chief of staff. He's named this COVID advisory board. So he is putting his ducks in a row. He's calling foreign advisors and having that dialogue open, which he did not have during the campaign. He was very clear about not having a foreign dialogue during the campaign process. So Biden is doing everything he can at this stage to conduct a transition. But the transition is not happening because from the Trump side, it is not being received. The GSA has not authorized. Biden is not getting the daily intelligence briefings. And we're seeing that even Trump's former advisors like former Chief of Staff John Kelly, former National Security Advisor Bolton, are concerned. They're saying this is now rises to a national security issue. There's potential concerns about intelligence, but also around coronavirus. They're not able to get that information as they do their planning and as they get ready for January 20th, 2021.
Lindsay, the clock ticks forward, and I understand that this week is different than last week, and we're into a holiday season. I mean, November, we get Thanksgiving next week in America, and then we go into December with the third, fourth week with Christmas as well. Lindsay, what I find extraordinary here is where is the judiciary? In your study of this, is this an executive/legislative issue, or does the judiciary participate in this original history?
So what's important to point out here is Trump has thus far been using the court system, has been bringing these lawsuits, which by and large thus far have been tossed out. The key point here, and when we talked about last time I was on, was related to Bush v. Gore. We remain not in Bush v. Gore territory. And the point is, with Bush v. Gore, that related to a recount where the margin in Florida was 537 votes. So the court's decision in that case could have been decisive. It could have been a game changer. Everything we've seen thus far in terms of evidence, of which there is very little concrete evidence.
But Lindsay, I don't mean to interrupt, but I think this is important. Does the judiciary play a voice or part in the transition issue? Do they get involved? We don't know, do we?
So the process is very much ticking forward. Right now at the state level, the states are certifying these votes. And then there's the opportunity for Trump to bring objections, in which case the sort of judicial levels at the state levels could be brought in. It could take its way up to the Supreme Court, but nothing that we've seen so far suggests that a judicial decision would be decisive, would be a game changer in this instance. So we have, in December, the electoral slate will be selected on December 8th. On December 14th, the electoral voters will vote. We have this idea of the faithless elector. But really, Biden has 306 electoral college votes and more than 5.6 million in the popular vote. So this is not a close election in that sense that the judiciary is going to be able to intervene and have a decisive decision one way or the other.
Lindsay, how are the Republicans dealing? How's the rest of the party going to deal with President Trump?
It's a great question, because so far what we've seen is there has been some sort of space being given by some Republicans, but by and large, most Republicans are staying quiet. And then there are those that are continuing to actively rally and support President Trump. The election itself was a mixed message, because what we saw was that down ballot, Republicans did very well. But with the question of Trump himself, many people decided to go for Biden and then go down ballot Republican. So the question is, where does the Republican Party go from here? What does this mean for so-called Trumpism? If Trump was not, there wasn't a mandate for Trump, but there was a mandate perhaps, or certainly a positive swing for the Republican Party. It's going to be very difficult for them to figure out what the next steps are with Trump no longer in that all-important office. Although I, for one, do not think he's going away. I fully expect him to continue to throw out these ideas around a media empire and to continue to throw out these ideas around running for re-election in 2024.
Thank you so much for joining us, Lindsay Newman, there, independent senior political analyst and former Chatham House senior research fellow of the Americas program. Now, we'll have plenty more, of course, on the election. We'll also look at bonds across the world with Nicolas May. He's PIMCO portfolio manager and sovereign credit analyst. That's coming up shortly, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Surveillance. Good morning, everyone. On Monday, a complete week here in the United States. Thanksgiving, 2 weeks away. Imagine Thanksgiving at Francine Lacroix's house. That's very exciting. She would kill it, I'm sure, in cooking
Chaos.
the November beast. Right now, Nicola Mai with us with PIMCO, portfolio manager. We'll focus on Europe, but we're going to broaden out the discussion here on yield and what it does to global yield, and that is an Asian recovery. China doing better, and clearly identified, Nicola, by stronger Pacific Rim currencies and ADXY out to a recent record strength. What does it mean for an Asian strength to global yield?
Thank you, Tom. Yeah, I mean, there's no doubt that China has been outperforming. So we saw the IP data this week. We're seeing that China is doing better than others, partly because of an effective lockdown, and partly because actually China produces a lot of sanitary goods, PPE equipment, electronic goods, which have actually been benefiting from the crisis. Now, this outperformance is good for China. I think globally, China is not going to be able to lift the global economy out of the current slump. I think Europe is in lockdowns, which means a double-dip recession. The U.S. is likely to introduce more restrictive measures state by state as we get into the winter. Obviously, the vaccine improves the outlook from the spring, but I think this is going to be a stop-and-go winter, and I think that yields are going to remain very much anchored in this environment.
And Nicola, we're going to begin our new economy forum with Mr. Gutierrez of OECD, and they're looking at a blended global slowdown. We've got lots of indicators showing dampened aggregate demand. PIMCO's nailed that. Is it worse now than you expected?
I would say that the COVID crisis has accentuated the reasons why there has been a shortfall of demand relative to supply. So what you see is an increase in caution, an increase in precautionary savings. What you're seeing is that an increase in unemployment. So I think all of that is probably cementing the view that interest rates are going to be anchored at a very, very low level. So I think we should expect zero yields in policy rate space for a very long time ahead.
Two young lads email in from somewhere in the vicinity of London, and they say, Tom, you're a dummy. He's with the UN. I said Mr. Gutierrez was OECD, and these two young lads just email in, and they say, he's so dumb. Of course, with the United Nations. Francine?
It's a Freudian slip, Guria Gutierrez, it happens. Nicola, where do you see the most value amongst bonds right now? If you look at European bonds, the ECB is doing so much. Is there a danger that they actually, prematurely take away some of what they're doing because we'll see inflation quicker than expected if we get a vaccine by 2021?
I don't see inflation coming back anytime soon. I mean, over the medium term, it is possible that, the strong fiscal and monetary support and normalization of the economy leads to some inflationary pressures. But I think the shortfall of demand relative to supply is too big. So I think the ECB is going to be very accommodative for very long. We expect an additional 600 billion or so of asset purchases announced in December. And in that context, I feel that BTP spreads are pretty attractive, even at 120 over bunds or so. There's not that many assets out there that give you that kind of return for what I see a limited amount of risk. I mean, I think the ECB is engaging in what you could call a loose yield curve control and spread curve control. So I think I see rates as anchored there.
But Nicola, what happens to the economy if we get a vaccine? How quickly can we get back to normal?
So we are updating our numbers as we speak, but I think the vaccine is obviously going to make the recovery better and steeper from the spring, but I think normalization will take time. I mean, first of all, there's questions about how quickly the vaccine is going to be implemented, distributed, what the take-up is going to be across the population, obviously. And I think the normalization will be there, but in our mind, we don't see activity going back to 2019 levels until 2022 or so in Europe. So we're talking about a very long time away. And in that environment, it's hard to see inflationary pressures building in any significant way, which is why I think bond yields are going to remain very low and anchored, and the BTP spreads are probably going to be a decent asset to invest in.
Okay, we'll take Italy as an example then. I mean, what does it do, translated out of your world, Nicola, over to equities? Equities just continue to rise. A story this Monday morning, his futures up, up, up. How does your fixed income space translate over to equity valuations?
So I would say if you look at equity valuations, but even generic credit spreads, they look fairly stretched. Now, when it comes to interest rates like hard duration or BTP rates, they're going to be directly anchored by the central bank actions. When it comes to equities and generic credit spreads, I think there's going to be obviously an impact of the fundamentals and of the economic growth outlook. And at the moment, when we look at these spreads or equity valuations, we don't see a lot of value. Obviously, the low interest rates are supporting higher valuation than if you didn't have them. But we think you have to be pretty selective and cautious when it comes to risks. So we focus on sectors and names that we believe in. Among these, U.S. mortgages, banks across the globe, but also in some sectors that are severely disrupted, like airlines, hospitality, and so on. There will be names that we like to invest in the bond space.
Nicola, thank you so much. Greatly appreciate it. With PIMCO getting us started this morning on yield, the 10-year yield, 0.88%. The New Economy Forum this year is different. It is virtual, and that has made it ever so more accessible. One of the panels is extraordinary. The Chinese Vice President, the UN Secretary General, and with them, the King of Jordan, a beyond timely discussion with King Abdullah on the Middle East, a Middle East that Mr. Trump would like to leave. This is Bloomberg. Good morning.
So how many times a day do people ask you when your vaccine is going to be available?
Yes, well, that's definitely a very regular question, whether it's from employees, customers, media, or my mother.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They're torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. PNC has agreed to an $11.6 billion deal that will make it the largest regional bank in the U.S. The lender is buying BBVA's American banking operations. The Spanish bank's U.S. business is focused on mobile banking, but its value took a hit from the coronavirus pandemic. Italian payments processor Nexi has agreed to buy private equity-owned rival Nets. The all-stock deal values the Danish-based company at $9.2 billion. It will extend Nexi's reach across Europe. The firm has operations that include Italy, the German-speaking countries, and the Nordics. And Walmart is retreating from its two-decade attempt to crack Japan's retail market. It's selling most of Japanese retailer Seiyu to KKR and Rakuten in a deal that values the company at $1.6 billion. The buyers will try to shore up Seiyu's digital operations. And that's your latest Bloomberg Business Flash. Tom, Francine.
Ritika, thanks so much. Greatly appreciated. Futures up 31. That's what you need to know. Equities with a worldwide lift out. Futures up 281. The VIX 23.50. We really don't have a pricing yet on the VIX. Too early in the morning. Well, I wonder if 22 print here, as I said earlier. Yields come in fractionally as well. On oil, great stability. $41 West Texas, rounded up. $44 on Brent crude. I'm lying. 43.52. That's not a very big roundup. Gold up $6, $18.92 the ounce. Francine, what do you see?
Yeah, Tom, I'm seeing a very similar data check to yours. It's really all about Asia because of the trade deal that they signed yesterday. I'm looking a little bit of dollar weakness, but nothing huge again. And I think that the markets are trying to look through some of the sentiment because of infections, really trying to focus on positive news on trade. And also they like the fact that there were signs of opposition to a national American lockdown, the dollar falling a bit. Now, coming up next, we'll talk about a possible recession with the former Bank of England governor, Mervyn King. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. And know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
They have been here for quite a while. They have obtained the SVF license back in 2016. They've also been granted a license for the virtual bank. They will continue to play an important role in Hong Kong.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Governments unveiled over $12 trillion to stop the economic fallout due to COVID-19. And for a full recovery, trillions more will need to be spent. In March, the U.S. Senate passed a $2.2 trillion stimulus bill, with nothing specifically for green interests. China has published an ambitious slate of energy-efficient infrastructure goals, but it has also rolled back regulations on coal plants. And around the globe, green measures account for less than 1% of the total coronavirus-related stimulus spending. In contrast, some 7% is specifically targeted at carbon-intensive companies and sectors like transport, industry, and oil and gas. So, what are the implications for the future? After the 2008 economic crisis, carbon dioxide emissions dropped 1.4% in 2009 before rising 5.1% the following year when the economy started to bounce back. The most efficient solutions for rebuilding the COVID-ravaged economy are those that also reduce carbon emissions. An Oxford economic policy study published in May of 230 central bankers and economists cited policies with major climate benefits, such as clean energy research and infrastructure. Keep carbon emissions top of mind, the world risks leaping from the COVID frying pan into the climate fire.
Good morning, everyone. Bloomberg Surveillance from New York, from London, the New Economy Forum this week. Right. Most important to get to one of our panelists on the panel of the day, which is on central banking. Mervyn King joins us, a former governor of the Bank of England. What you need to know, folks, is Mervyn King and Lawrence Summers, well, sometimes they may not agree on economics, but it is important to note that the former Secretary of Treasury says, shut up and read, Mervyn King. Summers with a rave review of Lord King's The End of Alchemy. Mervyn King, at the end of Alchemy, your magisterial book, you speak of our prisoner's dilemma. With all that's going on, what is our prisoner's dilemma for 2021?
Well, it's connected, I think, with COVID-19, but more importantly, with preventing the next pandemic. I am slightly worried that politicians are encouraging us to think that there is light at the end of the tunnel, we'll come through this and then we'll be back to normal. But we don't need to prepare for the next pandemic. And I think that means international cooperation, particularly in the field of international air travel. We desperately need to get to a point where we can be confident that if one country experiences the outbreak of a virus, then immediately they will seal their own borders to prevent it escaping to the rest of the world. If not, we will all end up clamping down on air travel very quickly.
Central bankers right now are constrained by this, that, and the other thing. But one of the constraints going back 14 years is the inability to retire debt, the inability to retire failed businesses, not only zombie companies, but some would say zombie capitalism. When do we finally clear our markets?
Well, I think the challenge over the next 3 years is going to be precisely that, which is to recognize that there are zombie companies and probably therefore zombie banks. And we need to recognize the true value of those assets, write them down, and recapitalize institutions that have a future. And I think that's going to be a big challenge for the next 3 years. If nothing else, what COVID-19 has done is to force us to face up to that in a way that we've failed to do for the last 14 years, as you said, Tom.
Lord King, good morning. Also from London. When you look at, the hopes on a Biden presidency, are we putting too much hope on going back to multilateralism, on going back to, countries working together to try and find a solution for the next pandemic?
Well, good morning, Francine. I think that's a big question. I think that the new Cold War between the US and China will not be affected very much by the change in US administration. It's a fact of the world that isn't going to alter. And how we cope with it, I think, is the big question. I have no doubt that the relationship between the European Union and the United States will be a much warmer one with a Biden administration, much more cooperation. But the question is, what will that cooperation be used for? No doubt there'll be warm noises about trying to deal with climate change, but what that amounts to remains to be seen. And I think that in terms of handling China and many of the other problems around the world, the big debt problems we face, I think it's an open question as to whether this will actually produce something positive or simply end up with just yet more attractive press briefings and statements by politicians that in the end add up to rather little.
Lord King, we keep on talking about the trade-off between saving lives or saving the economy. Why have Asian countries and China not talked about that? Because they seem to have handled the virus in a much stronger way than us.
Indeed, and I think it's an open question as to whether it makes sense to think in terms of a trade-off. One of the surprising features of the last few weeks has been that those countries that suffered most in the spring from COVID-19 seem also to be the countries that are suffering most now from the second wave. I don't think that was expected. I think the post-mortem will look very carefully at the willingness of countries in Southeast Asia to be very tough on quarantining with a very effective test and trace program. And that was the aspect which the Western countries were less well equipped and prepared for when this pandemic broke out. So the countries that on paper appeared to be the best prepared for a pandemic turned out not to be the best prepared, and largely because they couldn't manage quickly an effective test and trace program, and they didn't close down their borders fast enough to prevent cases from coming in. And so the epidemic reached a level at which the test and trace program was rather ineffective.
Governor King, we're going to come back and talk about Britain. There's a little bit of news flow out of the United Kingdom. But I do want to ask you about the idea that central bankers are hamstrung at the zero bound because the commercial bankers can't exist in a negative rate environment. Is the major constraint on the continent of Europe negative interest rates just simply don't work for commercial banking and society?
Well, negative interest rates can't work with a successful banking sector unless the banks can pass on negative rates to their retail customers. And once that happens, then I think you should expect to see a long line of customers seeking to take their cash out of the bank and keep it under the mattress, or at least in a new home safe. And I don't think that's a politically attractive prospect at all. I think much more seriously, however, the question is, why do we think that monetary policy is the answer to every sign of weakness in the economy? I can't think of any theoretical justification that would say that whatever the source of the weakness, a more expansionary monetary policy must be the answer. And I think, therefore, that we should, somebody coming from outside to look at where the world economy is today would say, look, you've had the most expansionary monetary policy the world has ever seen for 10 years. And yet growth is still very slow. It was slow before COVID-19 came along. So that would suggest that the problem isn't a lack of stimulation from monetary policy. We need to look elsewhere. It's other policy issues and policy tools. And in particular, I think the need to reallocate resources from one part of the economy to another. And that's not something monetary policy in general can do.
Mervyn King with us, of course. I can't say enough, folks, about is the end of alchemy. We'll continue here with Professor King. With our Bloomberg First Word News, here's Ritika Gupta.
Thanks, Tom. President Trump has pulled back from a tacit concession to Joe Biden. On Twitter yesterday, the president wrote he won because the election was rigged. But later, the president tweeted, quote, he only won in the eyes of the fake news media. I concede nothing. And the Trump administration is rushing to install environmental regulations that could complicate Joe Biden's agenda. As soon as today, authorities could advance plans for selling drilling rights in the Arctic National Wildlife Refuge. The administration may also move to lock in existing limits on air pollution and make it tougher to impose new environmental safeguards. The UK is signalling it won't back down as Brexit talks with the European Union enter another crucial week. Officials from both sides say the coming days will be pivotal in trying to reach a trade deal. Two of the most senior officials from the Brexit campaign left Prime Minister Boris Johnson's inner circle last week. The UK's chief negotiator insists he will not be changing his position. And it's a milestone trip for Elon Musk's SpaceX. 4 astronauts are aboard one of the company's capsules on SpaceX's first manned mission to the International Space Station. It's scheduled to arrive there tonight, New York time. SpaceX and Boeing have won contracts from NASA to fly crews to the space station. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Francine.
Ritika, thank you so much. Now joining us, of course, for the rest of the day, plenty of wonderful guests from across the world for Bloomberg's New Economy Forum. Now we have a great panel on the future of Wall Street with the Blackstone Chief Executive, Stephen Schwartzman, the IBM Executive Chair, Ginny Rometty, and McDonald's Chief Executive. I know they'll talk about Wall Street versus Main Street and how to rebuild a stronger, greener economy. That starts 8:30 a.m. in New York, 1:30 p.m. in London. You can watch it live on Bloomberg.com, the terminal, and on Bloomberg New Economy social channels on Twitter and Facebook. This is Bloomberg.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, we were having a great conversation, as always, with Mervyn King, the former Bank of England governor, who's still with us. Lord King, you were saying that basically, even from a theoretical point of view, it shouldn't be monetary policy that keeps on taking the brunt of everything. But we've seen quite a lot of fiscal policy. We've seen quite a lot of furloughs coming through because of the pandemic. Do you think these weren't enough, or do they need to be in tandem with monetary policy? Or politicians just look at 2008 and say, actually, central banks will deal with it?
Well, I think it'd be a terrible mistake for governments just to leave it to central banks. I don't like using the word recession about where we are, because this is not a normal recession in the economy at all. This is a downturn resulting from government shutdowns of the economy or individuals too frightened to go to. For very good health reasons.
I think we're just having a couple of technical difficulties. Oh, I think, sorry, Lord King, we briefly lost you for a couple of minutes. It's, you know, some of these technologies that we're using, but I think we can hear you again.
Good, I hope so. So I was saying that the main policy role at present is for government, not central banks. And the role for government is to support businesses. Because of the shutdowns of the economy, for very good health reasons, the market economy has been put into a state of temporary suspension. And so we can't judge which businesses will have a future and which not. And for that reason, governments need to support businesses at present to keep them afloat until we can relax the restrictions and perhaps with a vaccine start to get back to a more normal situation, when we can then let the market economy decide which businesses will thrive and prosper and which will fail. But this is not the moment to let businesses fail. And so I think the main policy initiative that's needed is government support for businesses.
But Governor, how do you look at debt creation? Do we split the debt afterwards? Should investors not worry about how we're accumulating this?
So I think in the major industrialized countries, we shouldn't worry too much about the additional debt that's being created. It's obviously not a desirable position, but we didn't ask to be in this COVID-19 situation. But there are two reasons why the major countries can get through this without too many concerns about debt. One is that before COVID-19, their budget deficits, excluding interest payments, were not that far from zero. They were in a reasonable shape. And the second is that governments can now borrow long-term at extremely low interest rates, typically in real terms, negative. And you put those two things together, and even if the ratio of national debt to national income were to jump significantly to well over 100%, unless governments decide to introduce new spending programs, then merely returning to where we were would enable the ratio of national debt to national income slowly but steadily to decline. And that's the policy path that we want to be on. So I think all this rather panicky stories about massive tax rises, spending cuts, more austerity in order to repay the debt created during COVID-19 is a mistake. Now, having said that, I think there are problems for many other countries in the world that weren't in the same fortunate position as the major countries. And I think businesses have taken on a lot more debt. So as I said to Tom earlier, I think the story of the next few years is going to be a story of debt restructurings.
Lord King, I've got one more question that I just think is so important. I don't know when you read Keynes' 1936. Maybe it was Cambridge. Maybe Bernanke threw it at you when you shared an office at MIT. But in Keynes of 1936, we talk about nominal rigidities. And that can be wage stickiness. One of the great assumptions of this slowdown is that wages will somehow be sticky. Are we in for it? Are we going to be shocked by a lack of real wage growth or even a decline in nominal wages?
So I'm not a great fan of wage stickiness as an explanation of what's going on.
We knew that
in the world. Yeah. So I think that where there is pressure to maintain employment by asking people to accept lower wages, that very often happens. And I think that, therefore, you know, it doesn't happen quickly, but I think in particular sectors of businesses, the need to adjust can bring about changes in nominal wages. I'm much more concerned about the failure to reallocate resources between businesses, between industries, between companies, and between countries in order to get us back to a more prosperous world economy.
Mervyn King, thank you so much. Greatly
much.
Appreciated. The former Bank of England governor this morning. Francine, I think it's really, really important there, the idea of these underlying theories that we will see in the New Economy Forum. And again, that panel today, Janet Yellen, Lord King, and also Raghuram Rajan, formerly with the Indian Central Bank. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. This is Bloomberg Surveillance. Tom and Francine from London and New York. The focus firmly on how leaders around the world are, of course, leading and dealing with the coronavirus. Belgium's prime minister says the country's intensive care units are pushed to the limit. In an interview with our Maria Tadeo, Alexander De Croo also told us he believes coronavirus restrictions will be in place for a long time. They spoke at the European Business Summit in Brussels.
The numbers on one dimension are going in a good direction, which is the number of confirmed cases. We've seen over the last week numbers going down, which is a good thing. On the other side, we see that in our intensive care units, the pressure is still very high. We will be able to cope with the fact that we have many people in hospitals. We've always had a lot of hospital capacity and a very high quality healthcare system, but it is really being pushed to the limits. We are here showing again that while there is a very strong link between a strong and healthy and resilient economy and a healthcare system that is strong.
And, I remember this at a press conference. You said we all in Belgium, but also almost Europe, we all need to act as one team. And so I do wonder, the restrictions that you put in place, of course, they have a huge impact, not just on the economy, but also on people. Could you give us any insight as to whether these restrictions you do feel are going to be here for a while and people need to get used to this, or whether there's a timeline going forward now that we have that vaccine news that I'm sure you welcome like everyone else?
Well, it is a marathon. It's a long-term effort, and in Belgium, I've always said, look, it's a marathon. We are, for the moment, closer to the start of that marathon than we are to the finish. So I'm convinced that some kind of measure, some kind of restrictions will be applicable for a fairly long time. I've seen the positive news on vaccines. That's great. But they're not there yet. We're still looking for the outcome of the medical trials. So vaccines and fast testing and self-testing will be a part of what I would call a containment strategy. And I expect that containment strategy to be part of our lives for quite a long time, yeah.
And I want to pick up on that final point that you just gave, because it really does reflect everything that we've heard from almost leaders across Europe, the Commission to really get this message across that the vaccine is not a silver bullet, that we all need to be flexible and adapt. So I wonder, how do we do that on a daily basis to keep the economy afloat? I do wonder, do you have a plan in terms of what the next 6 months are going to look like for the Belgian economy?
Well, look, the way we managed the second wave is different than we did it in the first wave. In the first wave, we went for an almost full lockdown. We closed down all non-essential businesses. This time, it's different. And the non-essential retail is closed, but all the other businesses are open. People have adapted themselves in working from home as much as they can. We now have face masks. I mean, a lot of life is still going on. It's just we've been better at identifying at what is risky behavior and trying to minimize the things of which we by now know that it has an impact.
You hear me talk about vectors in the pandemic. Trust me, the Belgium vector is worser than the other major countries of Europe. The Prime Minister of Belgium. Coming up in our next hour on the markets, on futures up 27, Russell Kostrich, BlackRock. This is Bloomberg. Stay with us.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
Our generation's biggest problem.
Climate change is happening.
and the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This morning, there is an acknowledgement. The pandemic, it continues. The prime minister self-isolates. The French and Germans, they want lockdowns and restrictions. Michigan, in partial lockdown, says keep Thanksgiving under 40 people. Markets, they acknowledge China and Pacific Rim growth prospects. Futures up 29. And, well, the president, he continues his gambit, saying, I concede nothing. Mr. Bolton says Trump harms the country. And the chairman of the Joint Chiefs of Staff says, we do not take an oath to a king or queen, a tyrant, or a dictator. Extraordinary comments from General Miley. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in New York. Francine Lacroix in London, pushed aside by now by a video tweet by the technologist, the Prime Minister of the United Kingdom. Francine, you heard it, I didn't. What did Prime Minister Johnson say?
Well, first of all, he had his usual disheveled look. It's from number 10, where he's self-isolating, and he's basically explaining that despite, as he says, bursting with antibodies, he needs to self-isolate because we have to keep people safe. Now, again, this is a prime minister, Tom, that had a pretty tough week last week because some of his key allies left after an in-house fight with Dominic Cummings, actually just packing his bags really rather unusually on Friday. And so this was also a moment to reset. And yesterday we found out news that the Prime Minister had to self-isolate, and I think he's taking this opportunity to be quite jovial, to be really Boris at his best, to make sure that people know that he's still working and still in high spirits. The other thing, Tom, that we need to keep an eye on is, of course, the headlines that are quite stunning from the Bundesbank, the German central bank, saying that the economic hit from the virus curbs is less severe than in the second quarter, but that the German economy could stagnate or even sink in the fourth quarter.
Yeah, very interesting. There's a lot more going on here today. Stephen Englander, the acclaimed FX strategist, looking for the Fed possibly to show action before the December 16th meeting. In New York City with our first word news, here's Radhika Gupta.
Morning, Tom. Francine. President Trump could potentially tie the hands of Joe Biden when it comes to China. Bloomberg has learned the president plans several new hardline moves against Beijing in the remaining weeks of his term. The National Security Council says future presidents will find it politically suicidal to reverse what it calls President Trump's historic actions. President-elect Joe Biden's top coronavirus advisors say a national lockdown isn't on the agenda. One of them, former Surgeon General Vivek Murthy, says the preferred approach to fighting it is, quote, a dial that we turn up and down, depending on severity. U.S. case records have hit records over the past 2 weeks. Boris Johnson's attempt to get his premiership back on track has stumbled before it even began. The British Prime Minister is being forced to self-isolate after meeting a lawmaker who tested positive for the coronavirus. Johnson had hoped to regain control of the national agenda following a chaotic turf war in Downing Street. And in sports, Dustin Johnson made history whilst winning his first Masters tournament. The world's top-ranked golfer shot a record 20 under par to win by 5 shots. It was the largest margin of victory at the Masters in 23 years. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Radhika Gupta. This is Bloomberg. Tom, Francine.
Ritika, thanks so much. On the data front, equities, they lift, and they lift up near record highs. The Dow, 29,690, 29,690, up 280 points. SPX up 30 points. No real pricing on the VIX yet, 23.50. It'll be interesting to see a 22 handle there if this trend continues. Dollar fractionally weaker. Bonds are weaker by a basis point. I would note Pacific Rim currencies continue to elevate. Francine?
Yeah, Tom, European stocks are following some of these Asian shares and U.S. futures higher, buoyed by positive sentiment on trade in Asia, as you say, which is why it's giving a little bit of a lift to some of the currencies. But they're also trading on signs of opposition to a national American lockdown. The dollar is falling. And then if you look at some of the things that we should also be watching out for is, of course, this regional free trade agreement in Asia. It's the world's largest. It's encompassing nearly a third of the globe's population and gross domestic product. Oil pushing higher, treasuries edging up, Tom.
Very good. What to do? And that is, of course, the setup here as we move into the holiday season. November 15th, usually marking that moment where year forward views begin to be written, no doubt at BlackRock as well. Russell Kosterich is Global Allocation Fund Portfolio Manager for BlackRock. We're thrilled he could start our Monday strong. Russ, what is your theme for 2021? What is your area of study to try to figure out what to do in this cacophony of news?
Well, good morning, Tom. You know, for next year, I think there are a couple themes. The economic one is obviously the pace at which the global economy can heal. We see normalization, obviously very dependent upon the vaccine. I think for financial markets, one of the key themes is to reconcile the volatility of the past couple of weeks when it comes to not just does the market go up, but what parts of the market are going up. If you look at the last few weeks, you've seen unprecedented moves in and out of banks, in and out of cyclicals, in and out of tech. And to a large part, not only the direction of the market, but the parts of the market that are going to lead, that's going to be a function of the type of economy we're going to have in 2021.
How do you allocate for that if there's not Tina yet in the cyclicals, if there is no alternative, and maybe that's the area of Amazon and Apple and the rest of them. Yeah. But what do you do to frame forward an allocation on cyclicals where they've already had a nice move?
Yeah, no, I think this is the big question. So our short answer would be focus on quality. And I think this is important because a lot of investors over the last few years have come to conflate value and cyclicals. We are actually increasing our allocation to cyclicals, but we're emphasizing quality. What do I mean by that? Profitability relative to peers, earnings consistency. So even in more cyclical parts of the economy, rails, specialty chemicals, semiconductors, we're looking for that theme of quality. And if we can find it, then we're actually comfortable taking more cyclical exposure because we do think we will see further improvement in the global economy in 2021.
But Russ, are we going to go back to what we had pre-pandemic, or how will our economies change? How do you find the thing that you can invest in given the uncertainty?
So, Francine, I think the short answer is no. We do believe we're going to see normalization, but I think as you correctly point out, normal doesn't look like January of 2020. The world is different. And we've already seen that. There have been so many trends that we all were aware of before this began, whether it was cloud computing, streaming, online, internet commerce, all of those have accelerated. So, for example, whatever percentage people had of wallet share in internet commerce in late 2019, with or without a vaccine, that percentage is higher in 2021. We see more reliance on streaming, a higher wallet share for gaming. These are trends we don't expect to reverse. And on the flip side, the pressure we've seen, for example, on brick and mortar retail, that's likely to be relentless, along with some new pressure, for example, in commercial real estate.
Russ, what do you do with the zombie companies? How difficult is it to see the extent of which these will be with us in 18 months?
I think the short answer is you either avoid them entirely, or if you want to think about a trade, there are companies, there are periods when you may want to rent, not own, because we did see last week just phenomenal moves. I mean, these are moves we've not seen in more than a decade. One quick statistic, after the election, regional banks had their worst one-day performance relative to the market ever. And then a few days later, last Monday, when we had the vaccine news, regional banks had their best one-day performance relative to the market ever. We haven't seen this type of whipsaw in factors and sectors in probably at least 10 years. So if you're going to look for these short-term moves, you better be very careful and very nimble because they're violent and they don't last that long.
What's the allocation look like? I mean, I'm at the zero bound. I don't know what the Sharpe ratio is because I don't know what the benchmark money rate is within that calculation. How does Russ Costros figure out how to balance equities with bonds?
So, Tom, we're currently overweight equities. It's not a huge overweight, but we are modestly overweight risk because we do think the market can grind higher from here. We are overweight high-quality income because, to your point about at the zero bound, our view is we're likely to beat that zero bound for a prolonged period of time. So getting the tailwind from income in the portfolio is critical. Now, the tough part is the hedge. We've spoken about this in the past. It's not that bond stock correlations are flipping, but you're not getting the same convexity, the same bang for the buck in the duration part of your portfolio that you received a couple of years back. What does that mean? A couple things, probably a bit more cash to create some ballast. Also means, again, in the equity portion, thinking about quality, lower volatility is a way to sneak some of that hedge into the equity book.
Well, I mean, okay, fine. I mean, I look at the hedge here, but I am at the zero bound with horrific nominal yields. How do you play that? Do you own full faith and credit here?
You own full faith and credit because it still gives you ballast in the portfolio, but at the margin you own a bit less. So, what are you adding to the portfolio? One asset class that's growing, Chinese government bonds. This is an asset class, doesn't provide the same degree of hedge, but it gives you a much richer real yield than you get in the U.S. or Europe.
Does quality equity give me that same ballast?
Well, partly, yes, I think is the key answer. So, again, we're used to having that 60-40 portfolio. All of your ballast came from that 40% often in government bonds. That's going to be tougher to replicate.
Oh, this is sacrilege. I mean, Costros here, this is where we're at. Speaking as Rome, you're killing me. This is where we're at.
So it doesn't mean it doesn't work, but it's not going to give you the same degree of diversification. What do you have to do? There's no silver bullet. It's not as if there is a currency or a bond or a derivative to point to. You've got to look for multiple things, using FX as a hedge and also thinking about that quality in the equity book. That's the biggest thing. We've seen that the last 3-4 months that dampens that volatility when the wheels come off.
I've got to stop harassing Mr. Costros. He won't return with us. He's going to continue. He's going to continue with us this morning on ballast, among other things, as well. There is a new economy forum. This is my most important panel. Janet Yellen, rumored to be a Secretary of Treasury. Mervyn King, rumored to have a wonderful book, The End of Alchemy. And my book of the year last year, and again a book of the summer, Raghu Rajan, the former Reserve Bank of India governor, and at this Booth School, Chicago. Look at that lineup. This is like, Francine, it's like a 3-hour panel, right? I'm kidding. New Economy Forum. This is Bloomberg. Stay with us.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects. The question is, what is the storehold of wealth in the meantime?
This is Bloomberg Surveillance. Tom and Francine from London and New York. We're back with Russ Kostrich to talk about the markets and some of the opportunities or not out there. He's BlackRock Global Allocation Fund Portfolio Manager. Russ, I know Tom was giving you a hard time, but what do you do with pound? Is this maybe the one unloved that could come, back with a vengeance post-Brexit?
It's a tough call. I mean, Francine, you know as well as I, it's really a hostage to a couple of things, Brexit, but also the fact that the UK economy has had a tougher time than other developed countries. But, in general, what I'd say is we have less risk budget right now in currencies than we did a year ago. We're relatively flat on the dollar. We've got some small overweights in some of the developed G10 currencies. But right now, I don't know if we're expecting a huge move in the dollar. And the thought was that if you had that blue sweep, you're going to see a good deal of dollar weakness on the back of a very large debt finance stimulus plan. That obviously does not look like the base case any longer. So, there are people that have a far more informed view than I do, but my base case is the dollar is more range bound going forward.
What does that mean for renminbi?
Probably, continued strengthening at the sort of gradual pace that we've seen. As I said, we do like Chinese assets, both on the fixed income side and also on the equity side. So, this is a market that's very interesting. We spoke a few moments ago about diversification and getting more diversification in your equity portfolio. One of the things that's interesting about China, not just from the perspective of the currency, but also the equities, because they're increasingly on their own cycle, we're finding that their assets, whether talking about fixed income or equities, are actually proving more diversified in a portfolio.
I look, Russ, at the diversification, and maybe it's too much diversification. How much is too much right now? I mean, and particularly in equities, are you overweighting the ones you love?
We always try to overweight the ones we love, and we try to focus on our high conviction names. But we actually, to your point, Tom, we have a number of positions on. Not all of them are either in pure secular growth or certainly not in deep value. A lot of our positioning is in the middle. So it's not focused on huge sector bets. Yes, we're overweight communications, healthcare, consumer discretionary, but more to the point, we're focusing on that theme of quality. And again, we're finding quality in unexpected places. To give you one example, specialty chemicals. This is an area where we're finding earnings consistency, good profitability. It's tied to the broader economy, to the cyclical, but they're longer-term contracts. So it's a bit of a different cycle than just owning, let's say, home builders that are very tied to the short cycle.
Let me get specific about quality. Is quality of free cash flow? Is quality the stream of revenues, the partial differential of unit or price? What's the actual metrics, the nitty-gritty that you're using to define quality?
So let me give you three metrics that I think right now are probably the most important, one of which is profitability. You look at return on invested capital for one. A second, pricing power. I spoke a moment ago about specialty chemicals. Which are the companies in a low inflation environment that can maintain pricing? The most important is actually consistency. If we look at what's working now, it's not necessarily the most profitable companies. It's profitable companies that can do it quarter after quarter. And that holds whether you're looking at cash flow, earnings, dividends. The biggest characteristic that the market is awarding today is consistency.
Russ, if you're not invested in the market, when's a good time to come in?
You know, Francine, that's an awful tough thing to do. I mean, we're in a low rate environment. You're not getting paid to sit in cash. It doesn't mean you're not going to experience volatility, but I think in this world, to just sit out and look for that entry point, that's really hard because clearly a lot of other people are doing it. There's a lot of cash on the sidelines, whether you're an individual looking for income, institution. People need to put money to work, which is one reason that these pullbacks have been shallower and briefer than perhaps, you know, many might have thought.
But if you look at some of the, you know, I guess the points that could have been a catalyst for a sell-off, the U.S. election, if you look at vaccine news, you know, we've overcome that for now. So is now a good time as any, or are you waiting for something else from now until December?
No, I think you want to be invested. I mean, again, it doesn't mean to put all of your money to work today. Clearly, the market is close to a high now. But I think the reality is the vaccine news was a very big catalyst. We saw that reaction in the market. The election uncertainty has been removed. It's probably, you know, the market is treating this, as it often does with the likelihood of divided government, as a positive outcome. We continue to see improvement in the economic statistics. Obviously, the big risk and where I think you're likely to get some pullbacks in the near term, it's going to be focused on the progression of the virus. The market is assuming we're going to start to improve in 2021. If we have a prolonged period of lockdowns, then obviously investors are going to need to revisit that assumption, at least in the near term.
Russ, thanks so much. Russ Kostridge there, BlackRock Global Allocation Fund Portfolio Manager, joining Tom and I this morning. Now, join us also for today's Bloomberg New Economy Forum. It's going to be a great event, and one of the key panels features Blackstone Chief Executive Stephen Schwarzman, IBM Executive Chairman Ginny Rometty, and McDonald's Chief Executive. They'll talk about rebuilding better and greener post-pandemic. That's at 8:30 a.m. in New York, 1:30 p.m. in London. You can watch it live on Bloomberg.com, on the terminal, or on our social media channels. This is Bloomberg.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. PNC has agreed to an $11.6 billion deal that will make it the largest regional bank in the U.S. The lender is buying BBVA's American banking operations. The Spanish bank's U.S. business is focused on mobile banking, but its value took a hit from the coronavirus pandemic. Italian payments processor Nexi has agreed to buy private equity-owned rival Nets. The all-stock deal values the Danish-based company at $9.2 billion. It will extend Nexi's reach across Europe. The firm has operations that include Italy, the German-speaking countries, and the Nordics. And Walmart is retreating from its two-decade attempt to crack Japan's retail market. It's selling most of Japanese retailer Seiyu to KKR and Rakuten in a deal that values the company at $1.6 billion. The buyers will try to shore up Seiyu's digital operations. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, the market firmly focused on the number of infected and the number of deaths worldwide from COVID-19, but there's a bit of a positive spin after not only do we have positive sentiment because of the massive trade agreement signed by Asian countries, but also signs of opposition to a national American lockdown. I'm looking at dollar. It's falling, and if you look at European shares, they're definitely following these Asian equities higher. What I want to show you, Tom, is not only that what was signed on Sunday between these Asian economies is actually the world's largest regional free trade agreement, and that means that oil is pushing higher, treasuries edging up.
It'll be interesting to say the least. And again, we see this with Pacific Rim and Asia doing better, and all that redounds over to just a better equity market. Let me do percent and level here right now. SPX up 32 points, maybe a high for the day, putting the Standard & Poor's 500 3613. The Dow 29,709 up 300 points. That's a big stick and leading move, 1% move. On VIX, no real pricing yet. It's moving 23.47, but I'd look for that to shape up and come in as well. The summary is simple. Green on the screen, cyclicals lead the way. This is Bloomberg. Tim O'Brien next.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Donald Trump's Twitter feed doesn't make Joe Biden president or not president. The American people did that. What we really want to see this week, Chuck, is the General Services Administration issue that ascertainment so we can start to do the kinds of things you and I talked about a few minutes ago. Meet with these vaccine officials, kind of get the intelligence briefings for the president-elect, the vice president-elect.
Ron Klain there, speaking on Meet the Press, and we thank Meet the Press for that insight from the President-elect's Chief of Staff-elect to be. Right now, and this is really, really important, buried beneath the radar this weekend was a speech by the chairman of the Joint Chiefs of Staff, General Miley, at the U.S. Army Museum. He says, quote, "We are unique among militaries. We do not take an oath to a king or a queen, a tyrant or a dictator. We do not take an oath to an individual." With perspective, Timothy O'Brien of Bloomberg Opinion, our senior columnist, arguably the #1 guy in the world on Mr. Trump's finances, but we'll remove ourselves from that this day and speak of the crisis of this nation. Tim O'Brien, let's just begin with the obvious question. Is it a crisis at General Miley's Pentagon?
It's worth keeping a close eye on the Pentagon, Tom. I think it's easy for all of us right now to fall into the trap of letting President Trump's Twitter feed and movements within the federal bureaucracy amount to either a coup or an unstoppable crisis. But I think the U.S. institutions remain strong. I think General Milley's comments go towards exactly this sentiment that civil servants, the military, and U.S. institutions recognize that there's a transition in place, even if President Trump doesn't. And look, I think there's ways in which the federal bureaucracy can get undermined over the next 65 days. I think there's a lot of ways in which sand can be thrown in the machinery. But Donald Trump will depart on January 20th, and Joe Biden will take over the reins of government.
If he continues with this intransigence into this week, and then we really get into the holiday season, does the judiciary come in, and are they involved in the debate with the president-elect and the president? Away from the voting, away from the balloting, do you anticipate the judiciary will become involved?
Only if cases come in front of the judiciary. And right now, the only avenue I see that happening is all of these challenges to local elections around the United States. And those cases, Tom, they're getting tossed left and right. The bona fides of a lot of those cases are very weak. I would have a hard time seeing any of those having the kind of traction or merit that they'd end up in front of the Supreme Court. So right now, my answer to that would be no.
Tim, good morning from London. How are the Republicans and the Republican Party actually going to deal with President Trump if he continues to not recognize defeat?
Well, I think, Francine, the GOP is still looking at this the way they have for the last 4 years, which is that President Trump has enormous traction in the sort of far right wing of the Republican Party, and he's going to continue to have that traction after he leaves office. He's also a formidable fundraiser. His rallies are evidence of that. That means even after he leaves in January, he's going to be a kingmaker in Republican politics. And I think that is sort of hamstrung Republicans around what the right thing to do here is right now. They should be respecting the process. They should be helping the government move forward, but they're still enthralled to President Trump, and they're reluctant to actually do the right thing. I think it's unfortunate, but it is what it is.
Tim, I know some of the tweets by the president have been a little bit erratic. Could you see President Trump saying actually he's running for re-election? And, could he start campaigning as soon as January?
I think yes to both those questions, Francine. I think what you'll see Trump do when he leaves office is he'll either try to start or buy a media company as a competitor to Fox News. I think he understands that a lot of his traction is with the public is through the media. He thrives on the media. So I think you'll see him do that. And I also obviously think he'll meld that in with political activities. The problem is he may not have as much latitude as he thinks he does. He has financial problems facing him. His company carries quite a bit of debt, a large amount of which he's personally guaranteed. And he also faces 2 very substantial legal investigations in New York. If he winds up with a criminal conviction, he won't be able to run in 2024. I'm not saying he's going to go there, but that's on the table. One of the cases is a criminal investigation. So I think he will continue to campaign. I think he'll be a media presence, but he also has some hurdles to overcome.
Tim O'Brien, you know him extremely well, your litigation with the president years ago, and of course your acclaimed books. What does the family have to say to the president now?
Well, the family's in it with the president. They've tied their fortunes to him, particularly his eldest children. They're also being investigated in the New York State lawsuits and investigations. They've also have their own financial wherewithal tied to the fate of the company, except for Jared Kushner. So I think they're hip to hip with the president. And I think particularly Donald Trump Jr. sees a future ahead for himself in Republican politics.
Tim O'Brien, thank you so much. Greatly appreciate it. With Bloomberg
Francine.
Opinion, just superb leadership of what we're doing in editorial, and also, of course, his work on the president's finances. With our first word news in New York City, here's Ritika Gupta.
Thanks, Tom. President Trump has pulled back from a tacit concession to Joe Biden. On Twitter yesterday, the president wrote, he won because the election was rigged. But later, the president tweeted, quote, he only won in the eyes of the fake news media. I concede nothing. The Trump administration is rushing to install environmental regulations that could complicate Joe Biden's agenda. As soon as today, authorities could advance plans for selling drilling rights in the Arctic National Wildlife Refuge. The administration may also move to lock in existing limits on air pollution and make it tougher to impose new environmental safeguards. The UK is signalling it won't back down as Brexit talks with the European Union enter another crucial week. Officials from both sides say the coming days will be pivotal in trying to reach a trade deal. 2 of the most senior officials from the Brexit campaign left Prime Minister Boris Johnson's inner circle last week. The UK's chief negotiator insists he will not be changing his position. And it's a milestone trip for Elon Musk's SpaceX. 4 astronauts are aboard one of the company's capsules on SpaceX's first manned mission to the International Space Station. It's scheduled to arrive there tonight, New York time. SpaceX and Boeing have won contracts from NASA to fly crews to the space station. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. Now we'll continue to track COVID-19. Coming up, Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean. We'll talk about the measures put in place. We'll talk about the vaccine. This is Bloomberg.
So how many times a day do people ask you when your vaccine is going to be available?
Yes, well, that's definitely a very regular question, whether it's from employees, customers, media, or my mother.
This is Bloomberg Surveillance. Tom and Francine from London and New York. This is what the market is focusing on. First, it looks like the Biden advisors don't believe in a national lockdown. That's giving a little bit of a lift to the markets, and there's also some optimism on that trade agreement over in Asia. I'm looking at dollar, it's down a touch, everything else is up, and you can see the VIX a touch elevated, but not that much. Tom.
On the data front, it's real simple. The equities lifted, Francine mentions. Futures up 29, Dow futures up 282. Francine?
Yeah, Tom, one of the biggest M&A deals, and of course it's about Nexi and Nets. We'll have plenty more on that shortly. It was announced this morning, and joining us now is Paolo Bertoluzzi. He's the Nexi chief executive. Mr. Bertoluzzi, thank you for joining us, and congratulations on a really pretty sizable deal in European, in this payment space in Europe. Talk to us a little bit about your main concerns going forward. Is Nexi growing too quickly?
Well, first of all, good morning, and thank you for inviting us and inviting me. Listen, this is a fast-growing business, fast-growing industry that moves very fast. So we don't have the ambition to grow quickly through M&A, but it's actually what is needed to make sure that we build a stronger company over time. And when it comes to M&A, at some point, you need to make things happen when you can make things happen. And this was the case with Nets. We are very happy to combine with another strong company in our sector and creating the largest player for payments in our continent.
Mr. Bertoluzzi, Luzzo, is this your last big deal, and do you worry about antitrust concerns?
Listen, the concept of last doesn't exist in life, I think, in general, especially in business, but definitely we're going to be busy with this deal combined with the one that we recently announced on SIA. I think the scale of the new company, the breadth of the leadership team will allow us to continue to do, if necessary, if appropriate, smaller things on the side. But again, this is the nature of the industry. As far as antitrust and so on, at the end of the day, this is a European market is evolving very fast. It's more and more one single market. And our company, even if it becomes larger as a combination of these two deals, remains relatively small given the size of the payment market and what this market is becoming.
So once you finish this integration, are there any other geographies where you'd like to get bigger? Is it the US or Asia?
No, listen, I think it's always important to focus on what is closer to you and what makes sense for your customers at the end of the day. And I think Europe will continue to remain our focus for some time. The new group is basically going to be covering from Italy up to the Nordics, going through Germany, Switzerland, Austria, Poland, Southern Eastern Europe, and so on. So if you look at the geographies, clearly the area of focus in the future, not now, will be more, if you like, west of this, but still in Europe, from, if you think about it, France, Spain, and the like. But again, our focus will be in making sure that we deliver value for our shareholders on this deal, and probably the more M&A that we may be doing in the future is going to be to strengthen further in the geographies where we are in already.
How much more room do you think there is for the payments business to consolidate in Europe? And are we going to see banks actually have to sell off some of these businesses?
Well, there is a trend that has been very, very clear over the last several years that is basically driven by the industrial substance of the payment business. The business is becoming more and more technology-centric, more and more digital, and therefore it requires scale, dedicated capabilities, focus. And this is actually the reason why over time for the banks it's becoming more difficult to focus and invest as much as it is needed to compete in this space. And that's the reason why specialists, large dedicated specialists, if you like, category killer, such as Nexi, come to life and develop. But obviously, depending on the geographies, we continue to work in partnership with the banks. The banks understand that they can focus on their core business and they can work with partners such as us to do the more specialistic work in the space of digital payments. And this trend will continue. So our view is that you will see more and more banks now moving from managing everything inside to partnering with players such as Nexi and potentially one day also selling the assets.
Mr. Bertoluzzo, why do you see Adyen having a higher valuation than NexiNets and SIA, despite actually, having lower transaction volumes and EBITDA?
Well, the answer is quite simple. I think when you look at payments is not one industry, but it's a combination of sectors, segments, and so on. And a company like Adyen is focused 100% on the e-commerce and the very large global e-commerce segment. And is one of the segments that is growing the fastest. And Adyen is very good at capturing that opportunity. And therefore, they have growth rates that are actually higher than ours, that are in many cases already in the high single digit for revenues and the double digit for EBITDA.
Give me a sense of some of the stiff competition that you had to face in trying to get nets because you were competing with some of US peers, including Global Payments.
Well, listen, we never saw it as a competition in the sense that, especially when you have next to you players that are larger, like the US ones, you need to decide what is your positioning. And our positioning has been very, very clear since the very beginning. We said, listen, now if we said to the shareholders and the management team of Nets, if you guys want to take cash and run, it's not going to be us. Someone else will always be ready to pay a bigger check. If instead you're interested in combining the two companies and growing a European champion in our industry together, and therefore continue your industrial project, we are the ones, because that's what we want to do, and we are happy to do a deal as we did it. This is a merger. It's an all-share deal without adding further debt to the company. And it's a completely different logic from alternatives that were probably on the table.
I mean, the way we shop has completely changed because of the pandemic. What does that mean for the payment system post-COVID?
Well, listen, the payment system is putting aside e-commerce and a few other segments is suffering with the rest of the economy through the pandemic, even if our assets, Net's assets, are quite resilient to this. I think, as for many other digital services, the pandemic is pushing people to understand and experience how much better it is to pay digital versus paying cash. And therefore, we are seeing an acceleration in the shift of behaviors of people from cash to digital. It was already happening. This is structural. It's happening everywhere in the world and in our geographies as well. But clearly, in this phase, we see an acceleration, both on the consumer side and the merchant side as well.
Paolo Bertoluzzo, thank you so much for joining us. He is, of course, the Nexi chief executive with this mega deal being announced this morning. Now, later today, Dr. Celine Gunder, the Biden COVID task force member and NYU School of Medicine assistant professor, joins us. She'll, of course, be talking about the pandemic, COVID-19, track and trace, and the vaccine. That's at 12:30 p.m. in New York, 5:30 p.m. in London, and this is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Talks are underway inside Nissan that could fundamentally reshape the world's biggest car alliance. Bloomberg's learned the Japanese car maker is exploring ways to sell some of or all of its 34% stake in Mitsubishi. A sale may be the first step in a broader review of the three-way alliance that also includes Renault. The world's biggest oil company, Saudi Aramco, is returning to the bond market for the first time since April of last year. It's turning to debt to help fund a $75 billion dividend commitment. Slumping crude prices caused Aramco's profit to fall 45% in the third quarter. And that is your latest Bloomberg Business Flash, Francine.
Rudika, thank you so much. Now, cosmetics giant L'Oréal sees a makeup revival after the pandemic. The chief executive, Jean-Paul Agon, told Bloomberg that even though e-commerce has gained traction during the crisis, the market will not completely move away from brick-and-mortar stores.
I think that, as you've seen, we were already back to growth on the third quarter. The market is still negative, so we are doing better than the market, but the market should recover. You know, there is a very strong appetite everywhere in the world for beauty products. And in fact, as I explained several times, the crisis that we had this year is not really a demand crisis as we used to have in the past, in other crises, but it's more a supply crisis because consumers couldn't buy the products. So we are back, for example, in Europe, back to lockdown, but now e-commerce is getting traction. And I think that because there will be a when the virus is gone, I think that we will be back to a very good consumption. The appetite for beauty is absolutely still there, more than ever.
Your chief digital officer recently talked about e-commerce. As you say, you see a lot of demand in there. And they were talking about the fact that it's your biggest market now. All of this clearly fueled by the pandemic. Will it ever be 100% and we see an ease up or a phase out of brick and mortar retail stores?
No, I don't think so. I think that it's a new option for consumers, and consumers are switching. A part of consumers are switching every year more from brick and mortar to e-commerce. Of course, it was accelerated this year. It was already going very fast before. You know, I remind you that last year, for example, our e-commerce sales were growing by 50%, which is already very fast. So this year, of course, it grew even faster because when the stores were closed, of course, there was an acceleration. And it represents now 25% of our sales. So it's going to keep growing, but consumers will always want to have the opportunity also to see products in stores. And so I'm a great believer in what Jack Ma described a few years ago already as the O+O, which means offline plus online. as two options and also a combination of options.
What are you currently seeing, given the fact that Europe is dealing with the second wave, France is in lockdown, the UK is in lockdown? How has that affected your business?
It doesn't help, of course. It doesn't help. I'm really sorry for our partners, our salon, for example, professional salon partners, perfumeries, department stores. It's really difficult for them. So we help them as much as we can. You know, during the first lockdown, we froze the payments of all our small customers, no more than 100,000 salons and small perfumeries, and we accelerated payments to our suppliers. So we are doing the same. We try to help our ecosystem. And of course, it doesn't help consumption, but I hope it's not going to last too long. And consumers also, I think, are more now aware of other options. They go on e-commerce, they find solutions, but of course, it doesn't help. It should not last too long.
That was the L'Oréal Chief Executive Jean-Paul Agon speaking to our Anne-Marie Horder on the makeup industry revival. Tom would have a thing or two to say about Glossier and eyebrows and things like that. Now, this is where the data is. U.S. equity futures rising along European stocks. The focus, of course, signs of an opposition to a national American lockdown, but also positive sentiment on trade. The dollar falling this week. Today, Bloomberg New Economy Forum. It kicks off with a great panel on the economy. This is Bloomberg.
We would love, at the right time and the right way to have a digital bank license. We would almost certainly do that in partnership with a strong local partner, and we would use the technology and the experience that we've gained from Mox in Hong Kong.
seen a massive momentum shift in the last week that we don't think investors should be ignoring.
Fiscal stimulus is necessary in some form. The sooner the better.
The vaccine is really the game changer here to bring us back to normalcy.
In the months ahead, we will see perhaps less volatility than we've seen so far this year.
The market in the next 2 months seriously will start to reprice everything.
Growth will pick up a lot in the second half of next year as people get back to normal.
We've been in a bull market. We remain in a bull market. If anything, patterns are just magnified.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. More record highs in this equity market worldwide. In the United States, we advance on the S&P 500. Lisa Abramowitz, we've got to begin with some breaking news.
Yeah, Moderna's vaccine information, it came out. They've done a study of 30,000 individuals in their trial, and 94.5% efficacy rate is the headline. The idea that this actually shows a higher efficacy rate than what we saw from Pfizer last week. And the other aspect of this that is really getting a lot of people excited is that this vaccine is shown to be much more stable for longer at refrigerated temperatures. If you remember last week, people were talking about Pfizer and how it had to be kept at ultra cold temperatures until a couple days before it was distributed. This one has a 30-day shelf life at basic refrigeration. Now, John, I think that there's going to be key. This is only 30,000 individuals. It showed that only 5 showed symptoms once they got 2 shots of the vaccine versus 90 individuals who got sick when they got the placebo. John, very promising, and we're seeing a reaction in markets.
So, Lisa, they are the headlines. Let's plug them into the financial markets. There's the pop on Moderna. I want to get to futures, equity futures in the United States, on the S&P 500, on the NASDAQ, and on the Russell as well. We have a lift in this equity market. We fade the NASDAQ. We're familiar with this. We roll up on Russell futures, up by a little more than 2%, up 2.35%. A record high at the close on Friday on the Russell and the S&P as well, and we advance once again. Tom, I want to check it on the bond market. Yields higher, curve steeper. That was the theme when we got the Pfizer news last week. That's what we see right here again. Switch up the board. Bonds lower, yields higher, up 2-3 basis points on 10s. On 30s, we advance another 3 basis points to 168. So, Tom Keene, in the space of 1 week, improving news on the vaccine front from Pfizer and now Moderna as well, at a time when infections in the United States, we've posted an extra 1 million in just 6 days.
Well, I've got 2 wonderful guests on this. We'll go to markets here in a moment, John, and Sam Fazili will give us wisdom here on the pharmacology of messenger RNA. But, John, my wisdom is the Dow almost printing 30,000 on futures. We did that on November 9th with Pfizer, and we do it again. We're not there, 29,998 this morning. And, John, real message here, correlated across markets.
This is the story that has just dominated the conversation on this program over the last week. The near-term outlook is getting darker. That's the story in the United States.
No question.
On the horizon.
Yeah.
Just a little bit of optimism, once again from Pfizer and now from Moderna as well. We've got to get to the expert this morning. Sam Fazeli of Bloomberg Intelligence joins us now. Sam, let's just start here. You've had a couple of minutes to pour through the numbers. Can you compare what we've learned from Moderna this morning and contrast that with what we learned from Pfizer last week?
Yes, good morning, John. Can I just first say that this is... I was a little bit, well, I'm kind of speechless to a degree. At this level of efficacy, I was really getting ready for a 70-80%, because there are differences between these vaccines. 94.5%. I'm not going to call this better than Pfizer, because this is, we're dealing with such few cases. But thank God it's higher than that number rather than below it. And we get more from these guys. We're getting more with regards to the statistics. You see that p-value they put in there, which is pretty powerful, which is not a surprise. We're also hearing that the 11 severe cases so far were all on placebo when you read further down. That's great. And if that carries on being the case, we'll be very happy. And lastly, they do tell us that 15 people in the trial, in the 95 cases, were older adults. But it doesn't tell us which groups they were in, the vaccinated or the placebo. So that's one little thing that we'd love to know.
Sam, the 23-mile difference from Moderna in Cambridge out to Andover in Pfizer's refrigerators is a difference between negative 94 degrees and, as Lisa mentioned, the refrigeration headlines. Are all of a sudden messenger RNA, is it all of a sudden more distributable worldwide simply because of the freezing to refrigeration path?
Yes, Tom. I mean, that's pretty much as simple as it gets. The question for that press release that first came out from Moderna is actually incremental. We knew already that the storage and distribution was at -20. We knew that it was okay to keep it in the fridge at the 2 to 8 degrees for a certain period of time. They've just extended that, and we're going to get more as time goes by about how long these things can be kept. And it just makes the use of the vaccine easier at the end of the line. And, of course, it's already an easier vaccine to distribute than Pfizer.
I mean, this is important, Lisa. Right now we're confusing everyone because I refuse to quote Celsius and Dr. Fuseli refuses to quote Fahrenheit. It's clear, isn't it, Lisa?
Yeah, well, it makes it a lot easier to get the Moderna vaccine out and distributed if you don't have to have some cold ice on that side here. I am wondering whether we can take a 30,000-person study where we're talking about sample sizes of 5 people or 11 people, Sam, and extrapolate that out into something that can really immunize an entire world population. Is this sufficient in your eyes?
Yeah, well, it's a start, and I think this is what I've been saying with regards to the Pfizer already. These are not the levels of effectiveness that we expected at this point. Everyone was psychologically, mentally preparing themselves for 50, 60, 70%, which would have been good. But this is levels that nobody expected. So, again, as I say, we've taken the first step. We've thrown the first set of dice, and we got 2 6s. It's a great, great start.
Sam, just a final question from me, just to wrap things up. Is there a difference in providing this information in a press release compared to a peer-reviewed journal? Can you compare and contrast that? Just that approach and how this information is being distributed into the public?
Yes, the absolute level. I mean, you have to give it out because it takes time to prepare these documents to get them published. You need to know how well the two groups were balanced. If there were lots of people with comorbidities in the placebo group, which therefore didn't respond to the vaccine as well. I doubt that's the case because these are already large numbers, but you do need to see that.
Sam, great to catch up, as always. Sam Fuseli there of Bloomberg Intelligence on that breaking news. If you're just tuning in for our audience worldwide on Bloomberg TV and radio, Moderna giving us an update on some of the data from their vaccine trials. The coronavirus vaccine found to be 94.5% effective in their analysis. This is the price action off the back of that headline. Moderna to the moon, up about 10% in pre-market trading. Equity futures is where the story is that we've been grappling with over the last week. That rotation, we have a little bit more fuel for it. The Nasdaq rolls over, the Russell, the small caps, rolls up. The S&P 500, a record high at the close on Friday, was set to add some weight to that as we count you down to the opening bell. Joining us now, I'm pleased to say, is Ben Laidler, Taylor Hudson Research CEO. Ben, the story really over the last week hasn't changed. It's the short-term risk, the long-term opportunity. Does the news this morning help us become just a little bit more tolerant of some of the negative stories we've heard across America over the weekend?
Absolutely. I mean, it gives you more visibility, I think, on where we're going. I think it accelerates this sort of rotation into cyclicals and maybe value that the market has sort of been trying to make, but has lacked the sort of courage to make that leap. And I think you're now absolutely getting that. We've had this sort of double catalyst of we're now through the election and we can sort of face forward into what I think is going to be a very big 2021 sort of growth rebound. And the vaccine or the incremental vaccine news, I think we've got a lot more still to come here. It helps us sort of bridge that gap, if you like, over the sort of winter infection spike to, a gradual sort of renormalization of activity and the way to play it out these sort of cyclical stocks, which is where I think we're massively underestimating the sort of operating leverage.
Ben, you have been way out front on this. What we have is a distributed base with maybe some catharsis, of course, in March or April. What's your percentage up visibility out 12 months, out 24 months, out 36 months? How big is the Laidler leap?
Listen, I think it's huge. I mean, just to give you, so if you like the sort of tip of this, right? If I look at those sort of reopening stocks, the ones that have been sort of most impacted by this, even with all the rally over the last couple of weeks, I mean, they've still underperformed this sort of market darling sort of work from home stocks by over 80 percentage points. They're nearly 4 times price to book cheaper. They're not making any money. There's been where all the biggest surprises in third quarter earnings have come from on the sort of positive side. And, revenues are still down between 30 to over 100%. So, that's your sort of order of magnitude. I think this rotation has sort of barely, it's frankly barely getting started. And the other thing I would say is, the other sort of fuel on this fire is investor positioning. And we've been saying for a while how cautious it's been. But just in the last week, you've seen it begin to turn and actually turn quite dramatically. And that, I think, is, the fuel that's going to come into the market here.
So, Ben, what on a day like today are you actually buying or doing? I mean, there is this feeling that long term it's going to be a good scenario. Short term, still a lot of volatility. Are you active on a day like today?
Listen, if your average investor is not carrying anything like as much risk, I think, as they should be right now. We're overweight small cap, we're overweight industrials, we're overweight real estate, consumer durables, and we're not overweight all cyclicals or even all value. I think this is much more a cyclical story, really, than a sort of value story. I'd make a small distinction there. But yes, I'd be focusing on where are you getting the most operating leverage to the sort of fear of the virus beginning to moderate over the next few months. And again, I think it's, in these small caps, industrials and real estate particularly.
And it takes you outside the United States, I imagine, as well, Ben. If you really want to get that high leverage play on the reopening of a vaccine, it's got to take you to Europe, which has been beaten up so badly. And it has that mechanical, that composition towards the names, the themes that you're talking about. Ben, can you walk me through your Europe call right now?
Europe and I would also say the sort of cyclical bit of emerging markets. So domestic cyclicals in Europe, for us, that's sort of financials. It's pretty much the cheapest, most hated, and one of the larger sort of sectors in Europe where, we're overweight there. But also within EM, right? I mean, everybody, including us, has been sort of hiding out in China and North Asia, first in, first out. But, the rest of EM is really your much more cyclical bit of EM, very similar to this sort of, US reopening story, very depressed earnings and a lot of operating leverage. I guess the one caveat just on Europe is just watch the dollar and the flip side of that, the strength of the euro. A lot of these European corporates, sort of very, very global, very international. So, to the extent we get, too much of a euro move, that's definitely a headwind. But yes, broadly Europe, much cheaper, much more depressed earnings, and just seeing a lot more operating leverage here.
Ben, great to catch up, as always. Ben Laidler there of Tower Hudson Research. Thank you, sir. Thank you very much. We start another Monday morning with some good news for you worldwide. This time it comes from Moderna. The coronavirus vaccine they're developing is found to be 94.5% effective in analysis. Tom Keene, some encouraging signs around the storage of that vaccine as well. And this market, Tom, off to the races before the news, off to the races after it too.
Yeah, I'm going to set it just below the enthusiasm, and I mean just below the enthusiasm that we saw with the Pfizer lift. And John, that may change. I'm looking at Dow. I know John looks at Standard & Poor's 500. I look at Dow. We're not on speaking terms on that. Get over it, folks. Dow up 1.9%. SPX 1 point. What's the VIX going to do, John? We're going to get a 22, dare I say, a 21 VIX?
I think it's fair to say we're from different generations. We can agree, we imagine, that the VIX is going to go a little bit lower on this news, Tom. NASDAQ, that's the story, though, we should sit on just for a moment. We fade there, Tom.
Yes.
We're pretty much unchanged on the session. It's that tug of war still, Lisa Brambitz. How many times did we have that chat last week? The tug of war between the near-term risk, the long-term opportunity, the tug of war between big tech and small-cap value.
Yeah, and a lot of people are going to be asking the question, will the big tech names, will NASDAQ continue to underperform, or will it actually lose value? And really, John, what I'm looking at right now is the yield story. Yields are actually, yes, they are shooting higher, but not by as much as you may expect. You don't necessarily see people start to worry about what happens when yields go up dramatically, which matters for big tech because that's been a rate play. Basically, if yields are so low, then big tech is worth it at these high valuations. Big questions.
97 basis points was the top end of the range last week. That's the number to watch this morning. Coming up on this program, Dr. Robert Murphy, Northwestern University Professor of Infectious Diseases. That's coming up next right here on Bloomberg. Heard on Bloomberg Radio, seen on Bloomberg TV. For our audience worldwide, this is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. There's word that another vaccine has been found to be highly effective at preventing the coronavirus. This time, it's Moderna that's out with details of a late-stage trial. The drug maker says its vaccine has 94.5% efficacy. Results also suggest the vaccine may block severe cases. The report comes a week after a similar vaccine developed by Pfizer and BioNTech was found to be more than 90% effective. President-elect Joe Biden's top coronavirus advisors say a national lockdown isn't on the agenda. One of them, former Surgeon General Vivek Murthy, he says the preferred approach to fighting it is, quote, a dial that we turn up and down depending on severity. U.S. case records have hit records over the past 2 weeks. Boris Johnson's attempt to get his premiership back on track has stumbled before it even began. The British Prime Minister is being forced to self-isolate after meeting a lawmaker who tested positive for the coronavirus. Johnson had hoped to regain control of the national agenda following a chaotic turf war in Downing Street. And President Trump could potentially tie the hands of Joe Biden when it comes to China. Bloomberg has learned the president plans several new hardline moves against Beijing in the remaining weeks of his term. The National Security Council says future presidents will find it politically suicidal to reverse what it calls President Trump's historic actions. And in sports, Dustin Johnson made history while winning his first Masters tournament. The world's top-ranked golfer shot a record 20 under par to win by 5 shots. It was the largest margin of victory at the Masters in 23 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
If we get the overwhelming majority of people taking the vaccine, and you have on the one hand an effective vaccine, on the other hand a high degree of uptake of the vaccine, we could start getting things back to relative normal as we get into the second and third quarter of the year, where people can start thinking about doing things that were too dangerous just months ago.
That's the optimism from Dr. Anthony Fauci there. From London and New York this morning, good morning. Plenty of optimism in this market right now. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action a couple of hours out from the opening bell. We shape up as follows. On the S&P 500, we advance. You get a bigger bid on the small caps in America. The Russell getting another lift. In the FX market, a euro just slightly positive. No big moves here. Euro dollar 118.44. Lisa talking about that muted response in treasuries. Yes, we are lower. Yes, yields are higher. But it's a muted response, up just 3 basis points on a 10-year to 0.9275%. This off the back of the headline from Moderna that their coronavirus vaccine was found to be 94.5% effective in analysis. This time last week we were talking about Pfizer. That number was 90%. Tom, we're trading on the good news. We are not trading on the fact that the US recorded more than 1 million COVID-19 cases in the last 6 days. We're not trading on the fact that Governor Whitmer of Michigan came out with new restrictions. We're not trading on the fact that Governor Inslee of Washington came out with new restrictions. It's not about the short-term story right now for this market. It's about the back end of 2021. That was the story last week. That's the story this morning, too.
Pandemic news is grim. Not only that, but also in South Korea, and I should point out continental Europe as well. Right now, we're going to do what Lisa, John, and I feel is really important. Yes, we do the markets, we do economics, we do the politics, the international relations, but you need to understand the science of what we're talking about. Robert Murphy is acclaimed at Northwestern University in infectious diseases, and one time, long ago and far away, went through Leninger's biochemistry. Dr. Murphy, good morning. I want you to explain in a King's English how messenger RNA goes into the cell, comes out to the cytoplasm, and kills this virus. Are we assured that can happen?
Well, apparently so. You've got 2 messenger RNA vaccines that have been put out there in tens of thousands of people. This is not a small number of people. I think the Pfizer one was like over 40,000 people and the Moderna 30,000. A lot of people have taken this vaccine. And we would have been happy if 50 or 60% of them were protected from getting it. And they're 90 and 94.5%. This is really way beyond expectations.
It is original in mRNA research as well. Explain to our audience what will be different in this distribution versus a polio vaccine, a flu vaccine, or more bacterial shots as well.
Well, it's a vaccine, just like the other ones that you mentioned. Messenger RNA is a very small protein, and it's fragile. And so it has to be kept cold. And the difference between the Pfizer and the Moderna is how cold does it have to keep? The Pfizer one has to be kept at minus 70 Celsius or minus 90 Fahrenheit, very cold. It's doable. Believe me, it can be done. But that is going to be a challenge in the whole cold chain supply. The Moderna one has to be kept cold, but then when it gets out into the market, it can be up to basically just above freezing. So it's going to be a little bit easier to move that around. But either one of them, it can happen. And we're probably going to need both.
Dr. Murphy, I'm going to go home today and talk with my 8-year-old and 11-year-old son and tell them there is a vaccine, another efficacy study coming out, and they're going to say, when's the pandemic going to be over? What's the answer based on the distribution models that you've seen?
A year from now.
Really?
Yeah.
A full year. So walk us through what happens over the next year.
So what happens is, these companies have to submit their EUA, emergency use authorization. The data will be gone over by an external advisory board, and they're going to make sure that it's safe, and they're going to continue to follow those patients that are in the study. Then the vaccines will be available probably the end of December, most likely. Now, there'll be maybe 20 million doses from each one of the companies, and they'll get out there, and then it's who's going to get those first 20 million doses. Right now there's a lot of reluctance in the world to take it. They think this is going too fast. There's a lot of people that are against vaccines. But I think once the data is out there, and if it's as good as it sounds, and it's verified independently, people are going to be lining up for this thing. So they'll start pushing the vaccine out, and it's going to come out to different populations, people on the front lines, people with high risk for severe complications, diabetics, older people, people with underlying cancer, for instance. The higher risk people will get it first. And then I would think that by the second quarter of next year, there'll be enough companies out with the vaccines that it'll start really penetrating into the general population, and then basically just go line up and get it.
For our audience worldwide, if you're just tuning in on Bloomberg TV and radio, we're with Dr. Robert Murphy of Northwestern University off the back of some news from Moderna that the coronavirus vaccine was found to be 94.5% effective in analysis. Doctor, just give me a moment. I want to turn to the price action just for a moment and have a look at what's happening in the United States. Equity futures are picking up here with a bid on the small caps. The Russell up by 2.64%. We advanced 46 points. Tom, for our audience right now, we're grappling with the same question we grappled with last week. How much bad news can this market ignore in the short term on the hope that the long term looks better? And my question would be, can you really untangle and draw a hard distinction between those two stories? Short term, not great, long term, better. And doesn't the short term, to some degree, shape what the future looks like in this economy?
There's always a balance of that, John. Notice the red on the screen for the NASDAQ 100, where this is a rotation. And I would point out, John, as you go back to Dr. Murphy in Chicago, I would point out, John, very importantly, that the rebound in value, cyclicals, mid-caps, and the rest of them isn't even back to the previous regression. Yeah, we came up off Pfizer. Yeah, we came up off Moderna, but we're not even back to trend. They were so discounted.
Doctor, I'd just like to finish with a final question on the price of a potential vaccine. These are private companies. Some of them have worked with the government. Any idea on how much this might cost for governments to provide the general public with a vaccine like this?
Well, the U.S. government has already purchased hundreds of millions of doses. It's already paid for. It's going to go out there free. So what it actually costs, I don't know. It's anyone's guess.
Doctor, great to catch you up this morning. We appreciate your time, sir. Thank you. Dr. Robert Murphy there of Northwestern University. Tom, big question coming into the development of this vaccine is how much they would charge for this vaccine, especially for the companies that worked alongside the government and took funding from the government as well. There will be huge pressure for whoever comes up with a vaccine. And good news is that we have 2 companies in the last week that are showing some real success. The more companies we have, Tom, the much better it could be.
Well, you got to believe the taxpayer is going to pick it up in a lot of different countries. As Peter Hotez of Baylor says, what about the poor countries? I haven't seen a real treatise yet, John, on how Pfizer and Moderna, as expensive mRNA-style medicines, translate over to India and other poor countries. But that'll be a debate for another moment. This is a celebration, John, of that percentage number the pros are talking about, like Dr. Facili and Dr. Murphy. It's a statement on the delivery efficacy for going from very cold to refrigerated temperatures. And it's also a statement on confidence. There are 2 of them, John. What are we going to do when there's 3 of them?
Well, let's hope there's 3. Let's hope there's 4. Let's hope there's 5. And let's hope the numbers get better and better. And so far they are. Last week, the number everyone talked about was 90%. Lisa Abramowitz this morning, the number everybody's talking about is 94.5%.
Yeah, and we can all start to imagine perhaps a world where we're not necessarily wearing masks and socially distancing, and we're getting on airplanes without having our noses swabbed ahead of time, like United is beginning overnight here into Heathrow. I have to wonder, though, your question about near-term versus long-term. There is a question, can we ameliorate some of the pain in the near term with the hope, with the promise, with the investments by companies in a longer term without masks?
This is the market that shapes up as follows this Monday morning. Good morning to you all worldwide. We advance on the S&P 500. We roll over on the Nasdaq. And the small caps, after a huge rally last week, we had some weight to it with the Russell up by 2.5%. Tom Keene in the bond market, Lisa talked about it. The move is muted. We're up just a couple of basis points. Last week, the high end of the range, 97. This morning, 92 basis points.
The real yield comes in, too, from the gloom of negative 1.00% to a negative 0.84%, another metric, John, within fixed income.
Coming up on this program a little bit later on Bloomberg TV and I imagine on Bloomberg Radio as well. We'll be catching up at 10 a.m. New York time, 3 p.m. in London with the Moderna CEO. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Here's the price action this Monday morning. Better news from Pfizer last week, better news from Moderna this week. What does it mean? It's that spread between the S&P and the NASDAQ that opens up again. But the more pronounced move is between the NASDAQ and the small caps. Last week, the NASDAQ negative, the small caps up more than 6% on the week. Similar story this morning. NASDAQ futures negative, Russell futures positive by a little more than 2%. That's the stock story. Here's the bond story. This is the key to this move. The bond market holds the key to this move. To get that sustainable rotation, you need yields to break out just a little bit more than this. Up 2 basis points on 10s. Last Wednesday, we topped out at 97 basis points. The spread opening up, nowhere near where we were last Wednesday. Almost 80 basis points, the difference between 2s and 10s. And that's what we've got to watch today. How much of a move do you need to see in this bond market to support a continued durable move in that equity market? Final board, final screen. Quick look at the FX market. That cyclical impulse returns. Do you get a move in the euro? Not really. Euro dollar 118.36. You get a move in the Aussie, the commodity currencies, all that good stuff. Tom Keene, we talked about this last week. I imagine we'll talk about it through the next couple of days. What is going on with the euro, the single currency? And why aren't you getting the big move in the euro when you get that big move in the equity market on the continent?
118.35. And actually, euro against yen has been stronger, looking at the dynamics, the churn of yen as well. Right now, Christopher Harvey joins us with Wells Fargo here on equity strategy. And his research note goes to the heart of the matter, which is the wall of cash that's out there. Chris, you talk about the sloshing of cash out there. What will be the incentive for the sloshing to get into the equity market? They're comfortable, aren't they, being safe?
Well, there is a lot of sloshing going on right now. And what's going to get that in the market? We're already beginning to see people put money to work. But on the corporation side, what I think is going to happen is slowly but surely, you're going to see more M&A activity. You're going to see more CapEx activity as the news that we have in and around vaccines starts to improve. People have been in a bunker mentality, and finally they're getting some good news. And finally they're saying, okay, we can start to discount what's happening in the future. We can start to think about good things. We can start thinking about CapEx and other growth plans and even M&A.
So I just want to repeat sloshing over and over again. And frankly, I want to hear Tom Keene repeat sloshing over and over again. But let's move on. I do want to talk about the nature of this rotation. A lot of people putting increasing faith in this rotation into cyclicals, the rotation into financials, especially with a steepening yield curve, and a rotation out of big tech and the NASDAQ. What is the nature of that? Is it underperformance? Is it losses on big tech? How long lasting is it? What are you seeing?
So, Lisa, we've been talking about this for some time. If you look at first half comps for a lot of the financials, more economically driven stocks, very easy. For your tech companies, not so much. But more importantly, what I think has happened recently, especially with the financials, you have two real catalysts here. You have the yield curve steepening, which is what it typically does after inversion. And two, you're getting really positive news, the news that we had expected on the vaccine front. And now we can start looking through things. And let's not forget, many consumers are in a very good spot. Getting back to sloshing and to cash, there's a ton of cash on the consumer's balance sheet. And there's a lot of pent-up demand. This is a very different mentality, and this is a very different situation post-recession than we've seen in the past. People have money, and they want to spend, and they can spend, and I think they're going to.
That's the line from Morgan Stanley this morning. Quote, keep the faith, trust the recovery. You talk about looking through things, Chris. Can you help me understand what would test that faith in this market? There is a widely held assumption that stocks will just go up. The conversation we have on programs like this every single day is which part of the equity market will go higher. Do you have any idea what kind of conditions we would need to see an equity market finish next year in negative territory?
John, that's a great question. So we get a lot of questions, a lot of thoughts and comments around that rotation. Does big tech really underperform? Does it become a massive source of funds? And how do we get to negative returns for the market? Again, it's a long time. It's a long 12 months. We still don't know whether the GOP is going to control the Senate. If the GOP doesn't control the Senate, we may be looking at higher taxes. And if we are, that's your answer.
So that's the politics. Might have to wait until January to work all that out, Chris. One thing we do know right now is the trajectory in March. Are we comfortable looking through that too?
Right. So you said we, and it really depends on who, right? He's still going to continue to do virtual. But if we is a stock market, yes, I think we have better news on vaccines and so on and so forth. And one of the things I do worry about, and getting back to the negative, is you may see a pretty healthy, especially on the white collar side, a tick up in unemployment. And so there's a lot to worry about. This is by far, we're not out of the woods by any stretch of the imagination. And there's a lot of things to keep your eye on.
Chris Harvey, what's your response to the absolute or relative return of big tech? I mean, what does it do versus the cyclical recovery? Is it going to participate, or is it dead on arrival through the year?
Yeah, Tom, I think what it does, it's a source of funds. And some of the things that we're seeing over the last couple of days, the last couple of weeks, I think is what you're going to see longer term. When you have those big rotations, I think tech will be flat to possibly down. This feels a lot, in some regards, it feels a lot like the late 90s, where you have these massive returns from growth and from tech. But the difference is the underlying fundamentals and underlying valuations are nowhere near where they were back in 99. So these are not what we would call shorts, but on a relative return basis, to those two catalysts, yield curve steepening and vaccines in the marketplace. These are really high COVID beta plays, and we think now's the time to do it in the capital markets.
Chris, 3 months ago, everyone was talking about fiscal support. 2 months ago, fiscal support, it was really important and necessary. All of a sudden now, it doesn't seem to be on the table. We don't necessarily expect anything through the end of the year with the lame duck session, and then there's the questions about the composition of Congress to come next year. Does the success of the vaccine trials that we're seeing now reduce the emphasis on fiscal support, and how does that translate into your stock call?
Right. So, Lisa, again, it gets back to politics. We still have to wait for the results out of Georgia. We'll have those results in early January. If we have a GOP Senate or a GOP-controlled Senate, they've always wanted to pass something skinny, and maybe this gives them even more. Maybe that makes them put their feet in the mud a little bit further, and they don't want to pass anything. If we do get a Democratic Senate, I think we do get stimulus. Our opinion, we never thought stimulus was going to get done before the election, and we don't know. We're not entirely sure that we really need stimulus at this point in time. Parts of the market, I think we do, but we don't. I don't think we need a ton.
Chris, great to catch up. Chris Harvey of Wells Fargo Securities. Thank you, sir. This market advances. Chris mentioned the banks. Tom, you brought up the banks. JP Morgan and pre-market up 3.5%. We had a little bit more to that rally as well. The small caps, the financials. Energy last week just had a massive week, Tom. You and I and Lisa, we asked that question, what is durable? What's just a short squeeze? I think we've got to continue asking that as we look at another catch-up trade through this morning.
I mean, I'm looking at XOY. When was the last time I looked at XOY as an energy proxy? And it's off the trend. But, John, I really want to make clear that the distance here of the vectors of big tech versus these on-the-bottom cyclicals into energy, as you mentioned, is substantial. JP Morgan not through the highs seen on November 9th with Pfizer.
Do you know anyone that thinks stocks go down next year, Tom? Do you know anyone that thinks the next 3 months matters?
John, that is a brilliant. That's the smartest thing you've said since that comment on Arsenal over that beverage this weekend. John, I really think that's an important idea, that there's really no one out there talking VIX 28, VIX 30.
Well, Lisa, the numbers over the weekend in America, the COVID figures are terrible. When I said we earlier, what are we willing to tolerate? I'm talking about Chris Harvey and his friends who call the equity market. I'm certainly not talking about the average person on the street right now. who potentially faces more restrictions in the United States and beyond. Really difficult few months. And I'm not trying to put a downer on any of this. I'm just trying to work out, are we really sitting here and saying that we can take a brutal 3 months and substitute in a better back half of 21 with a vaccine and just ignore all the bad news for the next 3 months into year end?
Yes, that is what at least a lot of equity strategists and investors who come on this show have been saying, right? Ignore it for the long-term view. I do think, though, that you raise a really important point, and this goes to scarring, right? And Chris Harvey was talking about how he expects white-collar unemployment rates to go up, to tick up higher as some of these companies pare back their staff, reduce costs to hunker down during this period. How much of an effect does that have longer term? People talk about not necessarily a big need for more fiscal support. It's because you've got the consumer that's flush with cash, paid down debts. How long can they sustain that without an additional round of fiscal support? These are the questions that become that much more pressing as the virus continues. Frankly, we can't go out to eat in the same kind of way. We can't get on airplanes. You're still in London. Are you going to take that transatlantic flight on United where they swab your nose?
Sometime soon. I was never a United kind of guy. Plenty of other airlines. That comes on United Airlines, Tom. It's like this small little waffle thing with caramel in.
It's good.
Stroop waffle? Is it a Stroop waffle? Is that what it is?
Yeah.
That United offer that. They serve that, and that seems to get them more transatlantic passengers, apparently.
If you're in business class, they serve a martini.
On crude, Brent up by 3.5%, WTI up by almost 4 percentage points. Coming up on this program, Kathy Hochul, New York Lieutenant Governor. What a timely conversation. Coming up very shortly on Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. There's word today of another promising vaccine in the fight against the coronavirus. Moderna says its shot has been found to be highly effective in preventing the disease. The vaccine had 94.5% efficacy in an analysis of late-stage trials. Interim results suggest the vaccine may also block severe cases. A week ago, a similar shot developed by Pfizer and BioNTech was found to be more than 90% effective. The chairman of the Securities and Exchange Commission is stepping down. Jay Clayton will leave at the end of the year. Clayton is a former corporate deal lawyer who has led the SEC since 2017. His term is set to expire in June. The UK is signalling it won't back down as Brexit talks with the European Union enter another crucial week. Officials from both sides say the coming days will be pivotal in trying to reach a trade deal. Two of the most senior officials from the Brexit campaign left Prime Minister Boris Johnson's inner circle last week. The UK's chief negotiator insists he will not be changing his position. And it's a milestone trip for Elon Musk's SpaceX. 4 astronauts are aboard one of the company's capsules on SpaceX's first manned mission to the International Space Station. It's scheduled to arrive there tonight, New York time. SpaceX and Boeing have won contracts from NASA to fly crews to the space station. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Meetings between our top scientific project.
It will be a giant logistical project, and it had already started. That was Ron Klain there, President-elect Joe Biden's chief of staff on Meet the Press. Alongside Tom Keene and Lisa Abramovitz, I'm Jonathan Ferro. Good morning to you all. This Monday morning, we shape up as follows. In the equity market, it's another lift for the cyclical parts of this equity market. The S&P 500 advancing 1%, small caps advancing much more so. Treasuries lower, yields higher, up 3 basis points on a 10-year to 0.92%. And there's the bid back into crude, $41.74. We're up by a little more than 4 percentage points off the back of a headline from Moderna. The coronavirus vaccine found to be 94.5% effective in analysis. Tom Keene, some extra fuel for that cyclical rotation.
Yeah, there's no question about the cyclical rotation. I note the red on the screen with the NASDAQ 100 ever so slightly red. We've given up a little bit of the ebb that we saw an hour ago, the boom, I should say, from an hour ago. We've been looking at the vaccines, which go out into 2021. Now we need to look at the reality of the present. You do that when you're a politician. You do that when the Buffalo Bills lose a heartbreaker to Arizona, as we saw yesterday. She is the lady from Buffalo, the lieutenant governor of the Empire State. Kathy Hochul joins us right now. Kathy, I got to go to the money question for all of our New York City audience on radio and on television.
When we were having lower infection rates, and the parents and the teachers and the city administration decided that if the number of infection rates hits 3%, that'd be a trigger to close down schools. But what the governor is saying now is that we're in a different era. We're now finding out, because of testing in schools, that the schools may be a safer place than having the children back out in their communities. So we are prepared to, work with them to say, can we make an adjustment here? Can we talk about having the schools stay open because that may be better?
Okay, let's do the math. It's 0.17% on the schools. Many other states are at 9%, which is where New York State's talking about, and de Blasio was married to 3%. How do you convince him and the teachers union in New York City to get to where Nebraska is, to get to where Oklahoma is, for that matter, to get to where Chicago is on this percent statistic?
Well, that doesn't matter. It's what the parents and the teachers and the administrators feel comfortable with. We can say that you're going to be going back to school, but if the teachers say we don't feel safe, they're not showing up. If parents don't feel safe, the kids aren't showing up, then you basically don't have an educational process that works at all. So you have to get buy-in from everyone. And that's simply what the governor has proposed over the weekend, to not have an automatic shutdown at 3%, but to use what's going on in the schools, testing results that we didn't have when the decision was made to trigger 3%. Now we have more data points. Why not look at the data that's in front of you? And if a school itself has a low rate of infection, less than 1% or whatever the metrics are going to be, why not keep them open? Because not only is it safer perhaps for the children, but also you think about the child care crisis that we've spoken about on your show for a long time, about how we're going to be able to let parents, particularly women, because it always falls on the shoulders of women, to figure out how to get back to their jobs when their schools are shut down again. That hurts our economy. It hurts our comeback. And so there's many dynamics involved here. Safety always being first, but realizing now that a 3% threshold is something that should be relooked at with the consultation with the parents and the teachers.
Kathy, the reality that you're looking at right now is so vastly different than the reality that equity strategists look out when they look out over until the end of 2021. How much economic scarring will there be in New York State, New York City, as layoffs have to begin, as we do not necessarily get any aid from Washington, D.C. during a lame duck session?
We won't have that aid immediately, is what it seems clear to me, and I'm willing to be pleasantly surprised that we can actually get Mitch McConnell to do the right thing and to say that, yes, states have suffered. Oh, I realize now it's not just the blue states. The red states are in trouble. Therefore, we will help them now, because he will go by whatever he thinks is in the political interest of his own party. Okay, fine. We're at a point now where the interests are all aligned. All American states need help with the testing, with the PPE, the help getting more doctors and nurses into some of our remote states that didn't expect to be dealing with this. So, but even if that doesn't occur in this lame duck session, I do believe that Joe Biden understands the urgency with this. Governor Cuomo has a strong relationship with him. We all do. And he knows that you cannot have a recovery, and we've said this before, a recovery for the nation without states like New York being able to come back strong, and to reduce the chance of more massive layoffs and to keep businesses prospering. That is our objective. We have to keep that going. So under a Biden administration, we feel very confident that the money will start flowing for state and local governments to help us get out of our holes budgetarily, but also to continue funding initiatives like vaccination distribution.
Lieutenant Governor, that will be early next year. We have some tough months ahead of us, as you know, and the numbers out of America have been quite worrying across many states in the United States. Lieutenant Governor, the president has been criticised for not being engaged enough on this issue, with cases increasing at a rapid rate. What is it you need from the federal government specifically that you've requested and aren't getting right now?
Money. Also a distribution plan for the vaccination that could be helpful. Let's work on that now, not wait till the vaccine is available, then all of a sudden say, oh, let's start figuring it out. That has to be figured out now. In the state of New York, we started working on our plan back in the summertime. But money is the number one thing, because that will allow us to continue funding the state and local, the communities, the first responders, the teachers, the healthcare workers, the child care workers. I think we need money first, because they didn't help us when it came to testing. We could have used the Defense Production Act invoked months and months ago. Basically now the president checked out. He never wanted to leave. This could have been his Winston Churchill moment. He could have been a hero. He could have won the election if he had done this right. And he blew it, basically, and now the consequences are he needs to move over, let the transition team of Joe Biden take over, let them have the opportunity to find out, where the money is, what programs need to be continued, what regulations need to be changed. Let them hit the ground running and start saving our country, because it did not have to fall this far. New York State still has the third lowest infection rate in the nation. After Vermont and Maine, we're at about 2.6%. The rest of the nation could be at 2.6%, and we could be functioning. But the president didn't care. He didn't do anything along the lines of what we were asking for early on. So the damage is done, and now it's time to do cleanup.
Lieutenant Governor, appreciate your time. The conversation will have to continue. Kathy Hochul there of New York. The latest over the weekend, Tom, came from the president. The tension between New York and the president, very, very clear when he said, Andrew Cuomo, the governor, will have to let us know when he's ready for the vaccine because otherwise, quote, we can't be delivering it to a state that won't be giving it to its people immediately. That tension speaks for itself sometimes.
Well, the tension's there, and early in that interview with the lieutenant governor, the tension between Albany and New York City as well. John?
From London and New York this morning, good morning. More fuel for some vaccine hope. This time, not from Pfizer, from Moderna. More to come right here on Bloomberg Surveillance.
So when you went to Baltimore, you went initially to be an anchor woman, and then it didn't quite work out.
Yeah, I got fired.
Well,
well, demoted.
I was got demoted, but they didn't. They had a contract, so they didn't say goodbye.
Yeah.
And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. You know, lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000,
Right.
So they kept me on and said, we'll put you on this talk show just to run out your contract.
Whether it's from employees, customers, media, or my mother.
The last few weeks has made it clear that one to go higher. It got a little spooked.
we've seen a massive momentum shift in the last week that we don't think investors should be ignoring.
Fiscal stimulus is necessary in some form. The sooner, the better.
The vaccine is really the game changer here to bring us back to normalcy.
In the months ahead, we will see perhaps less volatility than we've seen so far this year.
The market in the next 2 months seriously will start to reprice everything.
Growth will pick up a lot in the second half of next year as people get back to normal.
We've been in a bull market. We remain in a bull market. If anything, patterns are just magnified.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance. Thrilled you're with us on Bloomberg Radio and Bloomberg Television. It was not the surprise of Moderna of the ratios. It was a surprise of how able they are to get the vaccine out. And, John, that lifts the market up. We almost made Dow Futures 30,000, SPX 3619. And it's a correlated lift, John, isn't it?
Maybe the lesson of this morning and the last 9 months is don't bet against human ingenuity. Morgan Stanley over the weekend said keep the faith, trust the recovery, keep the faith in the science. Last week it was Pfizer, this morning it's Moderna. The efficacy rate, 94.5%. That put a bid into this equity market. We had a bid all through last week. It was where the rally is, though, that gets people's attention. It's not the big cap tech. That story rolls away. The story that rolls up is small cap America, Tom, and the international value story as well. And that's the great debate of this very moment. The short-term problems, the issues across America, and the long-term hope that we get that vaccine.
Lisa, what do you see in fixed income? I mean, we talked about yield higher by ever so slightly, and we're not out to the yield, 0.97%, full faith and credit of November 9, I believe it was. But what do you see in IG and high yield as we see yield up, price down?
Well, you see yield up with full faith and credit government bond yields. You see yield down when you look at credit default swaps. You look at the implied measures a little bit based on derivatives this morning. Basically, credit risk is on. People are flooding into high yield debt. You saw yields reach record lows over the past few weeks, despite the fact that we are in a pandemic. The idea here is frankly edifying the Russell 2000 trade as well. The idea that smaller companies that need a bridge, that need a lifeline, will have that much easier of a time getting one, given this faith in the vaccine, Tom.
You know, John, we've been talking here, and we'll talk through the morning on Bloomberg Surveillance and Mr. Farrow's other properties as well about this juxtaposition of the good news and the market up nicely, John, and then any number of headlines, whether it was Lieutenant Governor Hochul of New York or there's the governor of New Jersey, John. You know, I was going to have you over to Thanksgiving, John. You can't come as we're going 25 down to 10.
Hang on a minute. Who are the 10?
The
Why
10?
don't I make the 10?
Me.
Who makes the 10?
Mrs. Keene. Vet Bill has 3 people coming. Afterthought has 2 people coming. And there's a couple wild cards in there, names I don't know.
Vet Bill's mates get the Thanksgiving seat ahead of me.
Well, Vet Bill got the turkey, Tom.
Exactly. Vet Bill got the turkey. What do you call it? The Ramble out in Central Park. It was a bloody sight, to say the least. Drew Armstrong joins now.
We're not even going to pretend to like each other now for the rest of this program. Bring Drew in, please.
I'll do that. Drew Armstrong, Bloomberg News senior editor for healthcare, probably invited over to Thanksgiving. By that time, we'll be down to 5 seats at the table, not 10. Drew, it is amazing the juxtaposition right now. What is your timeline for vaccine to the rescue?
You know, the timeline on this is good news this morning aside, which is really good news, is this is still going to be a little while. They've talked about, I believe, having a couple tens of millions of doses available in 2020 and much more than that in 2021. But the reality is that early on, assuming that these are allowed out for use by the FDA under an emergency authorization, they're going to go primarily to frontline healthcare workers, ultra-vulnerable people, and other folks in frontline positions. For the general public, you know, I'm a relatively healthy, soon-to-be 40-year-old, you know, probably waiting until sometime next year for access to these. But that said, I mean, cannot emphasize what important step and optimistic step this does appear to be.
So let's talk about the timeline for emergency authorization and how we will start to see life change as emergency responders and other individuals start to get inoculated.
Yeah, you know, so emergency authorizations, just a rewind a little bit here. The FDA, a normal full approval that the FDA would do it typically would look at things like having 6 months of safety data, and the review would likely take a little bit longer, probably at least a couple of months. Under emergency situations, which I don't think anybody would argue that this pandemic is, they can lower their threshold slightly in terms of the data that they want to see in terms of something being safe and effective, which is how we've seen a lot of therapies test and soon vaccines come out onto the market. In this case, what they have been looking for is a degree of efficacy, which these two vaccines, the Pfizer one, the Pfizer-BioNTech one, and the Moderna one have easily passed, and then they want to see 2 months of safety data. We expect that the companies are going to apply for those emergency authorizations sometime in the next couple of weeks, and then they will also keep sending FDA safety and efficacy data as they get it. So we could see a vaccine being used maybe sometime in December. I think for most of us, it's not going to change things that much. If you're a doctor or a frontline healthcare worker or someone in a nursing home or otherwise super vulnerable, it may change things a lot.
Well, Drew, let's talk about adherence to social distancing at the moment and therapeutics and the development of them. Where are we with therapeutics? Because that's what we need to lean on heavily now for the next 30 days or so.
Yeah, that's going to be right, and probably longer than 30 days. I think it's worth stating that a vaccine does no one any good if it is in a lab or a freezer somewhere. Just because there is good vaccine data out there, it doesn't help anyone except for the folks in the trial who got it. You know, it does not change the situation on the ground. It does not make the disease any less dangerous. And, you know, if people think that they can all of a sudden, you know, go doing all the things that they used to do and that the world has changed, it is not. So that's why therapeutics are particularly important. We've seen two things happening. One, we've gotten a number of therapeutics, some of these antibody drugs from Regeneron, from Lilly. We obviously have the Gilead drug, remdesivir, which is an antiviral. And then, you know, the other thing that's worth noting is that medical care for this disease has gotten better. When this thing hit New York back in March and April, people had not treated this disease before. They did not know what they were dealing with, and we were learning on the fly how to treat patients with this disease. A lot of providers from all around the country flew in to help out New York, to their great credit. Those people gained a lot of experience with how to treat this disease, and the medical establishment also dispersed all the things that were learned around the world over the last several months. So, you know, your odds of surviving this disease as an individual are much better. I will also counter that by saying that this disease is also far more widely established, spreading far more rapidly in places of the country that have not seen it and that may not have the kind of healthcare resources of the places that got hit earlier. Mm-hmm. And so it remains very dangerous and still has the ability to swamp healthcare systems. And we're seeing New York-like situations in some places like Texas and in the upper Midwest with, you know, I mean, freezer trucks being used as morgues outside of hospitals. That is some very scary stuff.
Drew Armstrong, thank you so much for the briefing. The troubled Midwest, and we'll see how the East Coast does here with deaths and hospitalizations rising up a little bit. Right now, as we talk to Elisa Abramowitz about the dynamics of two bond markets, full faith and credit, and everything else, Noel Coram joins us right now with Invesco, particularly on the credit space as well. Noel, I love what you say about hiccups, in that out there you wonder if we get jostled within fixed income, what happens to the price of these two worlds? What happens to credit if we get a hiccup?
Right. So especially in IG and high yield, we're looking at all-in record lows for yield. So there's not a lot of space right now for those hiccups that you're talking about. So we do think that it makes sense to diversify credit risk going into year end. We're not saying, you know, get anxious about selling here, but we are saying that it does make sense to diversify risk given the potential for some of those hiccups.
Noel, we can talk about how you would diversify in just a moment. Let's just talk about what a hiccup would actually be. Can you tell me what a hiccup would be that would actually lead to material spread widening in U.S. credit markets?
Right. So we are kind of looking at this in two major risks. We have the risks of the COVID cases rising, hospitalizations rising. We don't see it peaking out. Yes, the vaccine news is good today, but, you know, at the end of the day, we're still facing a pandemic, and it's not over. And then also we have the fiscal stimulus that, you know, we were 2 weeks ago talking about $4 trillion. and now it's going to be much smaller. And so if we don't actually get that money when the American people need it, that could also potentially weigh on growth and ultimately weigh on the credit market.
What you're saying, Noel, is different to what many people are saying. You are saying there are limits to how much we will tolerate in the next few months. That's very intuitive. That's not what we've heard over the last week or so from market participants. We've been told that we will just focus on the back half of 21 and the hope of a vaccine. Talk to me about those tolerance levels. You will talk to people in the market all the time, I assume, still. What are they saying to you? If 1 million COVID infections and breach in hospital capacity, or at least the threat of breach in hospital capacity in many areas across America right now isn't enough to lead to material spread widening, what on earth is?
So we think that, really, if we don't see the fiscal stimulus package come through in a meaningful way, in a timely manner, then that would be enough to create some volatility. Also volatility around the back and forth of, negative COVID headlines versus positive ones. While the vaccine headline today is a positive one, tomorrow when we get the, negative COVID news, it could not be. So when we think, while we're not, totally unloading our risk, we do think it does make sense here to be a little bit cautious because this war, is not over, and we still have a fiscal stimulus package that states need, consumers need, small businesses need, and ultimately that has to get delivered.
Noel, there's an important distinction here between volatility in headlines, volatility in beta sentiment, and the alpha aspect, the idea of a concern about companies going bankrupt, being unable to finance themselves going forward. Which is the risk that you are concerned about with your caution?
So for us, we're thinking, more of a big picture. While there is a concern that companies are going bankrupt, there are likely to be some defaults. There already has been this year. We're not looking at, the numbers that we're in March, where it was around 28% expected defaults for 2020. But again, that's largely dependent on the fiscal stimulus package and that getting delivered.
Noel, great to catch up. Appreciate your insight on this market. A rare interview where someone is concerned about what's happening in the near term and what it means for this market. Noel Coram, thank you. Invesco Portfolio Manager. I joke a little bit. It is about that tug of war between the short-term risk and the long-term hope. The hope this morning, fueled by the headline out of Moderna that we do have a 94.5% efficacy on their vaccine in development. Here's the price action for you. The Russell advances, the small caps, the winning trade over the last week. The NASDAQ is the losing trade over the last week. Tom, we talk about that losing trade. Let's talk about some single names. Zoom down by about 5% in early trading. United Airlines, which you mentioned a little bit earlier, up by a little more than 10% in early trading. That just gives you an idea of the shutdown versus reopening story that is bleeding through this market.
It's a guesstimate, John, but it all comes down to the aggregate demand, and it's rolled over. Lisa, I believe, mentioned five-year forwards below. Let's summarize that quickly, John. In the United Kingdom, there is a deflationary tendency. Europe is maybe flat as well, and then in the U.S., it's indeterminate. But right now, disinflation is in order.
Can we unlock some of that reflationary cyclical tilt with the hope of a vaccine as we work our way through some really difficult months in the United States of America? That is the trade that is being put on increasingly over the last week. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Coming up next, Stephen Stanley of Amherst Pierpont, the chief economist from London and New York this morning. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. There's word that another vaccine has been found to be highly effective at preventing the coronavirus. This time, it's Moderna that's out with details of a late-stage trial. The drug maker says its vaccine has 94.5% efficacy. Results also suggest the vaccine may block severe cases. The report comes a week after a similar vaccine developed by Pfizer and BioNTech was found to be more than 90% effective. The chairman of the Securities and Exchange Commission is stepping down. Jay Clayton will leave at the end of the year. Clayton is a former corporate deal lawyer who has led the SEC since 2017. His term is set to expire in June. President-elect Joe Biden's top coronavirus advisors say a national lockdown isn't on the agenda. One of them, former Surgeon General Vivek Murthy, says the preferred approach to fighting it is, quote, a dial that we turn up and turn down, depending on severity. U.S. case records have hit records over the past 2 weeks. President Trump could potentially tie the hands of Joe Biden when it comes to China. Bloomberg has learned the president plans several new hardline moves against Beijing in the remaining weeks of his term. The National Security Council says future presidents will find it politically suicidal to reverse what it calls President Trump's historic actions. And in sports, Dustin Johnson made history while winning his first Masters tournament. The world's top-ranked golfer shot a record 20 under par to win by 5 shots. It was the largest margin of victory at the Masters in 23 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
According to some estimates, a national lockdown costs $50 billion a day and hundreds of thousands of jobs every single day. Ideally, we won't go to a lockdown. I will not go. This administration will not be going to a lockdown. Hopefully, the whatever happens in the future, who knows which administration it will be. I guess time will tell. But I can tell you this administration will not go to a lockdown.
Hopefully, whoever that administration might be. That was about as close as we got over the weekend to recognizing the future Biden administration. There was a tweet, then there was a retreat, there was that statement on Friday, then there was the walk back shortly there afterwards as well. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This morning, what a morning we've got for you. It's a repeat of last week. NASDAQ negative, Russell small caps to the moon. Here's the price action. S&P 500 futures up 37. We add 1% to the record highs at the close from last Friday. We add a bit more weight to them. In the bond market, the sell-off fades. Yields are up 2 basis points to 0.9160%. Last Wednesday, high end of the range, 97 basis points. Right now, with 5 or 6 basis points south of that, Tom, we're not getting that big move in Treasury yields. Lisa pointed out early on, after the headline cross from Moderna, that 94.5% efficacy rate for their vaccine gives equities a boost. Treasuries, no big moves this morning.
Well, it's, after Pfizer, and the answer is we saw a huge move of Pfizer. Again, folks, I'm going to make clear that what this is about is deeply discounted sectors, deeply discounted categories, and they've bounced off that discount, but nowhere near their means of February 14th and before. Look at energy, look at banks and the others as well. We'll continue to monitor that. I'd suggest look at what matters in the mid-morning, and that is the open with John Farrow at 9 a.m. Right now, Emily Wilkins, Bloomberg Government. We just heard the president talk there about, well, the transition or the non-transition, as you'd like to put it. Emily, real simply, what will you listen for today in your Washington?
Well, one of the big things to be listening for is that Biden and Harris are expected to address the nation on their economic plan, seeing what details are in there, what Biden continues to push. It'll be a little interesting to hear what he decides to speak about because he doesn't yet know whether or not Democrats will have control of the Senate. And that's going to impact exactly how much Biden can actually get done of his economic plan.
Okay, well, they got to get something done, and there's going to be a plan in that. But come on, General Milley's comments over the weekend were thunderous. I've never seen anything like that from a commanding officer of our military. You had the president just talking and on and on and on. What's your resolution through the week so this week doesn't become, say, the second week of January?
I mean, the other things we'll be looking for is, definitely seeing what happens with the Trump campaign. We did kind of see him seem to initially admit that the Biden administration will be coming next over the weekend. And we saw him walking back, saying the election was rigged, that he conceded nothing.
Oh, yeah, but Emily, Emily, I don't mean to interrupt, but simply who is advising the president, or is he all alone by himself?
There are a number of people who are still talking to the president within the president's inner circle. I think it's a lot of the same figures that you've heard, Jared Kushner, Rudy Giuliani, those types of individuals. And I think a lot is going to come down to seeing not just what the president says, but also what the lawsuits say. We saw the lawsuit change in Pennsylvania over the weekend to cut out a major allegation that Trump campaign that people were not able to watch the count. And so I think that's kind of a sign on how the campaign is thinking about things and how they see their legal challenges.
Emily, we've been playing this silly game of trying to interpret the president's tweets and comments, not just for the past weekend, but for the past 4 years. And we're doing it again over the weekend, looking for a concession that isn't there. Can you just tell me when these states will start to certify their results?
So the official date is December 14th. That is when states are going to say, this is it, these are our electors, and sort of lock everything in. Another date to keep on is December 8th. That's when anyone who wants to contest the results for a particular state has to sort of get everything in by. So those are kind of the two key dates to watch. And I mean, obviously, we'll be seeing what happens in the next few weeks if the Trump campaign does sort of admit that the Biden administration is coming up next. And we're also going to keep a look on the GSA, that is that government entity that has to officially sort of push the button, give the green light, say, yes, this transition is happening, and that will sort of make things a little bit easier for the Biden team to get settled and get adjusted.
Emily, the market has moved on. The market has voted, and the vote is that Biden will be the next president, according to the lack of turmoil, frankly, in markets, despite the fact that some could say there still is somewhat of a contested election or it hasn't been called. Now the focus very much on the vaccines that are going to be coming out as early as later this year, potentially, and then next year. And then there's a question of fiscal support. Is that basically dead in the water based on your conversations with current Congress members in Washington?
I don't think anyone on Capitol Hill would necessarily classify fiscal support for COVID as being dead in the water. I mean, just on Friday, we heard Democratic Speaker Nancy Pelosi say that it was a top agenda item, that it's all hands on deck. We've seen similar things from Republican Senate Majority Leader Mitch McConnell. The question is, can they actually come to an agreement? And I think we might sort of see that this week because the House is back in session, the Senate is back in session, everyone's done with the election and they're getting started, ready to legislate again.
Oh, then what are they going to legislate? I mean, I'm absolutely fascinated by that statement, Emily. They're going to legislate what? The answer is we don't know until Georgia, right?
Well, not really. I mean, we do have a government. The government does need to be funded past the December deadline.
Yeah.
Like, we're headed towards a government shutdown right now, so they're going to have something on that. And I mean, I think that there is a momentum on either side to potentially get something done with coronavirus stimulus. I think there's a question onto whether or not that will be done, but I think it's fair to say that that's something that lawmakers are at least going to be trying to work on in the next few months.
Emily, do you sense there is a concern in Washington about governors now introducing more restrictive policies? In the conversations that you're having with people on Capitol Hill, do you sense that concern?
I think to a certain extent, throughout this pandemic, the federal government has sort of looked to the states and state governors to be the ones to sort of mandate for their own citizens what they're going to do. I don't think this is a big change in terms of what we've seen. I think this is a bit of a repeat from what we saw back in the spring when governors started talking about a lockdown. I don't think this necessarily changes anyone's prerogative on Capitol Hill of whether or not stimulus does need to get done. But I think it's definitely something that people are watching to see how governors respond and to what degree they view the threat.
Emily, great to catch up, as always. Emily Wilkins there of Bloomberg Government. Tom, that's the story, isn't it? If the governors start to introduce more restrictive policies, if they start to inch towards lockdowns that look even remotely like what we had back in March, April through May, then surely that just forces the issue down in Washington, D.C., whereby they've got no choice whatsoever but to push through a bill. Yeah,
the only thing that forces the issue to me is a jobs number turnaround, unemployment rate turnaround, and also, John, the sheer hardship of income substitution going away. What's interesting to me, John, it's radically different than what we're experiencing in the United Kingdom. To me, that's the polarity right now between across the Atlantic, I should say.
Well, the stay-at-home restrictions this time, Tom, are advisories. They're not orders, and that's the shift. How on earth do you tell someone they've got to stay at home and not work if you don't replace their income? I don't see how you can do that. And I don't see why anyone's going to follow that if you can't.
That's where you'll get finally something to act here. You know, again, and Greg Vallier's got the math this morning, as do many others as well. We're going from trillions of dollars of aid down to one-ish, even under one-ish, if you believe the Republicans. And most of the experts we talk to, John, say that really doesn't move the needle.
The news this morning moves the needle. Moderna, 94.5% efficacy. The stock up by 12.4% in pre-market trading. Laura, Lisa, rather. I'm not sure why I've called you Laura.
That's the story
from
now on,
the
she's
equity
Laura.
market.
I love that.
That's not a story from the weekend. Just be sure about that.
Thank you.
Lisa, in the equity market, we advanced on Moderna by about 12.4%. The story of this rotation, can you get that durable move if the bond market doesn't participate? And as you said an hour and 25 minutes ago, right now this morning, the bond market's not playing ball in a big way.
And what I'm wondering is how much is this a bet that there will be reduced fiscal support as a result of the optimism around vaccines? And how much is this, to your point, simply an unwind of other positions and the bond market's already been through that?
Laura, Lisa, Laura, what am I doing?
You're killing it, John.
What happened?
John,
What
you're
happened
just digging
with
yourself
Laura over
a
the
hole.
weekend?
John, I got so much response on this. I mean, Lisa's doing Chinese takeout for Thanksgiving, but John,
Yes,
you
I
and
am.
John, it's a new thing. Thanksgiving Zoom. We can do it.
I would love to do that with you, Tom.
You know,
I'd love to do that.
I just zoom
I think
right
this would be
in.
the 4th or 5th Thanksgiving we've done together, but this one will be over Zoom. That's
Zoom.
fun. A couple of years back, it was Laura, you and me doing Thanksgiving together.
Yes,
I hear Laura's
nice.
Laura.
That
great.
was nice.
Yeah, she arrived sober.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects. The question is, what is the storehold of wealth in the meantime?
From London and New York, this is Bloomberg Surveillance. Good news on the vaccine front. Last week, Pfizer, this morning from Moderna. What does it mean? More fuel for the small caps bid. The Russell up by 2.21%. The Nasdaq down by a third of 1%. That spread reopens again. That rotation is back on. In the bond market, you want to see that supported move into financials for value, for the cyclicals to pick up. Do you need the bond market to play ball? Right now, it's not really. Curve steeper, yields are higher, but just by a little bit, up 2 basis points to 0.91%. Last Wednesday, we topped out at 97. Another thing that's not playing ball, switch up the board and get to foreign exchange. This has been the story of the last week for me. If you have that improving cyclical appetite, if you have that move into international equities, that bid into Europe, what's going on with the euro? Negative 0.1%. Euro dollar 118.25. Tom, I keep coming back to it. I keep beating this drum because this is the trade that just does not fit neatly with the story we've been told over the last several weeks and months.
Pacific Rim currency pairs, John, out to new highs here about 2 hours ago, and they've ebbed away as well as we see Dow futures move up 500-something down to up 485, 1.7% move. Right now, and this is really important on a Monday, let's recalibrate the American economy. He is award-winning. Stephen Stanley with Amherst Pierpont does wonderful work with the conventional function y equals c plus I plus g plus whatever the export noise is. Steve Stanley, what matters right now within that equation?
Well, I think consumption has really been the star of the show, and that's what we're looking at. I mean, consumer has held up much better than I think most people expected through the pandemic, and now with renewed restrictions and kind of cuts in mobility a little bit, I think there's obviously some concern about whether the consumer can continue to get back toward normal over the next couple of months.
Give us the calendar of the need for income substitution. Benefits, I guess, 1231 disappear for many, but how urgent for you is income replacement right now?
Yeah, I think we're in a different place than we were in the spring. I mean, in the spring we put forward the $600 a month unemployment benefits as well as a round of rebate checks for everyone. And I think at this point, the whatever income replacement we do probably needs to be more targeted. So I think the idea of continuing the unemployment benefits, certainly, continuing them beyond mid-year or the end of the year, but also maybe putting forward another bonus. It doesn't necessarily have to be $600, but perhaps $300 or $400 or whatever. Makes a lot of sense because there's still plenty of people who basically can't work because of the pandemic. I'm not sure that we need across the board help the way that we got in the spring. So that, to me, that's the key distinction.
And Stephen, this is a really important nuance because right now we're looking at American consumer finances that are the best shape in decades. People took these checks, they paid down their debt, they don't have anywhere to go to spend money, and so you're seeing really, really good balance sheets, but that's an aggregate. What is the long-term economic consequence of the lower tier of workers who are seeing their jobs get cut at a faster pace and who don't have the same kind of cushion even after the round of stimulus?
Yeah, well, I mean, obviously those are the sorts of people that have to live paycheck to paycheck. So the loss of a paycheck means a lot more for someone in that financial situation than it would for, someone that has a nest egg. And I think, again, that's why there is, in my view, there is urgency to make sure that we're providing ample support to that group of people, the people who are unable to work and need the money right away. I think, maybe the urgency for the rest of the population isn't as great. I mean, we certainly made up over half of the jobs that were lost during the lockdown. So there are a lot of folks who were out of work in the spring who are back, but there's still plenty who are not. And I think, those are the folks that we want to try to take care of, and especially now that we have a sense that perhaps it's only a few more months. Maybe the vaccines are broadly distributed by the spring, and things can get back to something much closer to normal at that point. So if I'm a lawmaker at this point, it makes it easier, I would think, to say, okay, well, we can support people for 3 or 4 more months, but it's not an indefinite thing anymore.
Stephen, let's talk about the economic data. Tom mentioned the Asian currencies doing tremendously well recently. The data out of China, fantastic, decent again this morning. I don't think it's ever too early to talk about payrolls for this month when it comes out in early December. Stephen, what are you comfortable forecasting at this point, given the direction of travel with economic restrictions coming up across America?
Yeah, I mean, I would say most likely that we're going to see another deceleration, and this one could be more significant than what we've seen over the last couple of months. The pace of growth was fairly steady over the last 2 or 3 months, I would say, certainly in the private numbers. You're probably going to see a slowdown, obviously, with the virus having picked up. But I would say, we've seen a flurry of new restrictions put in place over the last week or so. And so my guess is, last week was the payroll survey week. So my guess is that whatever slowdown you're going to see in the pace of job growth over the next several months is more likely to be clear in December than in November. I think we'll get some slowdown perhaps for November, but then maybe a more significant one on the back of some of these virus restrictions in December.
Let's add to this then, Stephen, and think about the fact that this economy has had the stress test, a severe one, back in spring. Can you model what it might look like when you get the same stress test again? You have it once, you get it a second time, and how corporations and individuals might respond, maybe differently?
Yeah, I mean, I think that one thing is that people have kind of gotten used to the new reality. So if you think about, for example, manufacturers, I mean, they closed their plants for almost 2 months, and then when they came back, they had to retool their operations to provide for a more socially distant workplace. And having done that, I think it makes it far easier now because they've already kind of adjusted. So really, I think the bulk of the adjustment that needs to be made now is just kind of dialing up and back the degree to which people are getting out and about, the mobility and the level of contact that people are having. And so that does affect restaurants and high-contact industries like that. But I think the bulk of the economy, the rest of the economy, hopefully has already made the necessary adjustments and won't be disrupted too badly in the current situation.
Steve, is the stock market linked to your world?
I think I would look at it as a gauge of sentiment. And I think, clearly at this point, it seems to me that the stock market is looking through, or investors are looking through the current bad news and into, the prospect of an effective vaccine at some point next year, and then getting back to something closer to normal over the course of 2021. I mean, that doesn't do anything for us today in terms of the number of cases and hospitalizations and deaths, but it certainly suggests that people are hopeful that things will get back to something closer to normal as we move into 2021.
Stephen, there is some hope in this market this morning, that's for sure. Stephen Stanley there of Amherst Pierpont. Thank you, sir. Let's talk about that hope and the fuel that goes into that hope this morning. Moderna, 94.5% efficacy in their trials of their vaccine, follows Pfizer last week at 90%. And this is what happens in this market, Tom Keene, up 13% for Moderna this morning. Small caps get a bid, big tech does not.
Well, yeah, I mean, it's a shift that's going on. And you look at the Morgan Stanley note out yesterday where they lift up their targets. I mean, people, John, are really beginning to recalibrate. I want to go back again to the way we're seeing people lift up 7%, up 6%, whatever the single-digit move is. I really question if that's framed into people's minds right now. They're buying, but they're just buying to be on board. They're not buying to go to a reachable target yet.
Morgan Stanley, 3,900 year-end 2021. And Lisa Abramovitz in the mix with that call is a call on a bond market for a higher 10-year yield. This morning, as you said, right at the top of the programme when that headline came through, Lisa Abramovitz, we are not getting that move in that bond market that some people might have thought you might get.
And it's actually rolling over. It's actually even more muted now. You've got barely any move at all at this point on the 10-year yield, which is very interesting, especially with the Morgan Stanley call, I believe, of a 1.45% 10-year yield by the end of next year. The bet here, perhaps longer-term growth doesn't escalate that much. Perhaps we return to a new normal that is still slower growth with a whole lot of debt and an overhang still from the pandemic, John.
In just a moment on this programme, we're going to turn to a panel at the New Economy Forum. And on that panel, Tom, will be Blackstone's Steve Schwarzman. In the news over the weekend in the Financial Times, because there was a call of business leaders, and Mr. Schwarzman was one of those participants on that call. The Financial Times reported over the weekend that he defended the president's right to challenge the results and question the results out of Pennsylvania and the process through which the count went through, Tom, over those several days after the vote. it was an interesting defence of the president at a time when Lisa asked the question, who has the president's ear? That is an individual that has the president's ear and has done for much of his term.
Well, you know, I want to make clear here, John, and all the principles within this important article by Andrew Edgecliffe Johnson, we speak to, you and I, on surveillance, on the open, on the real yield and all. Mr. Schwartzman, but also lower in the article was the uproar at this meeting put together by Jeff Sonnenfeld of Tim Snyder, who is not inflammatory, but is an academic who speaks his mind. And Professor Snyder, John, was talking coup-ish, and Mr. Schwartzman really pushed back against that and simply said, we have a democratic process. And then Blackstone put out a statement very, very clearly, this is Steve's opinion, etc. But I think the way it was spun over the weekend was a little unfair to Mr. Schwartzman.
Well, there's 2 points that Mr. Schwartzman, according to the Financial Times, and I'm not privy to the conversation they had, I'm literally just going on the FT's reportings. There's 2 points here, Tom, that are made in the story. Point 1 is that the president has a right to challenge the results and go through the legal process. And, of course, he has that right to do that. That's point 1. The second point was when he questioned participants on that call, according again to the Financial Times, and asked them, did they not find it surprising that early votes in Pennsylvania had favoured Mr. Trump, quote, only for later counts to tip the state in Mr. Biden's favour. Now, as we know, the process of the count, Tom, it started with the votes that were made on the day, and then the mail-in ballots were counted, which skewed heavily to Vice President, now President-elect Joe Biden. And it's the second point that seems to be more controversial. The president absolutely has a right to go through the legal process, Tom, and challenge these results if he so wishes. It's the second point about the count, which implies some kind of fraud, that is questionable.
Yeah, okay, that's fair, but I want to make clear this is, again, one line in an article versus reading the whole article. Brian Roberts of the Roberts family of Philadelphia and Comcast defended and explained within Mr. Sonnenfeld's call how they do things in Pennsylvania. And yes, Steve said something with his support of Mr. Trump and also congressional Republicans down the ticket. Yeah, he said something that was a little controversial, but I thought the article was much more balanced than what the uproar was out on social media against Mr. Schwartzman and indeed indirectly against Blackstone.
I couldn't agree, Tom, but that just comes down to how people behave on social media and whether
Exactly.
people
Well,
actually
that's the point. It's
read
just
the
social
article
media.
or not.
It's like, John, when you go after me on social media, I mean, people don't know the whole story, which we're actually on speaking terms.
Really?
Just about. For this programme for 2 hours with Lisa mediating quite often and trying to separate the two of us when things get a bit dicey.
30 seconds.
Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. I'm pleased to say we can now cross over to the Bloomberg New Economy Forum. Like many things this year, just a little bit different. The third annual event is going virtual for conversations on global importance of finance, trade, climate and health. Beginning today, and right now we take you to that panel on how low-income essential workers have suffered disproportionately in the COVID-19 lockdowns. On that panel, as we suggested, Blackstone's Stephen Schwartzman and IBM's Ginny Rometty. Let's take a listen.
The low-skilled, but actually affects quite a broad middle majority, the middle class, in most advanced societies, certainly. A long period of relative stagnation of incomes, diminishing jobs in the middle, which we're all familiar with, the polarization of the job market. And for large countries, particularly outside of the metropolitan areas, just a gradual loss of hope that slip sliding away, as Paul Simon put it in the 70s. And then you have the problem much lower down, because of most of the job creation in a whole range of advanced economies. I mean, some have avoided this, like Singapore and Sweden and a few other countries, but most of the job creation has been in relatively insecure service sector jobs, low skill, lower productivity, and more insecure jobs. And that's a major new problem that we didn't have 20 or 30 years ago. And coupled with that is a loss of a sense that you can actually move up in the old way. In other words, if you start off from the bottom, you actually have a chance of a middle-class life. And there was a pathway. And I think that hope and that set of aspirations is now also diminished. So we've got those two things at the same time, and they're slow burn problems. One that presents itself to the middle class, and the second, which is that those while lower down, no longer have that hope and that sense that they can actually make it, and there's a very clear pathway to make it to a middle-class life. So when we address the problems of COVID, we can do it in a way that also addresses these longer, slower burn problems. And I think that two major interventions, when you think of government, and frankly, when you think of the private sector as well, revolve firstly around that intersection of learning and work, getting a spiral back in the system, a spiral of learning, skills accumulation, job progression, career stability. And there's a whole set of issues that I'm happy to talk about later that have to come with a new way we've got to think about learning and work, that go back to educational institutions, that go to industry norms and certification, competency-based certification of skills, a whole set of issues to do with public funding. How do you actually fund lifelong learning? How do you make it convenient, time and place for blue-collar workers? How do you accumulate human capital, not just for the professionals and the ones who already have it, but human capital for the ordinary worker? How do we think in LinkedIn terms about ordinary workers, blue-collar workers? And second, we've got to think a lot harder about public goods, investment in public goods. In other words, not just the traditional solutions to inequality, which involve one form or another of redistribution. You're going to need redistribution, but that isn't going to change the game fundamentally. We need a new era of investment in public goods, everything from basic science R&D to training infrastructures, even frankly, to thinking about just investments in infrastructure, because that's going to create jobs, that's going to create opportunities. So refocusing budgets, refocusing fiscal policy on investment in public goods to broaden opportunities, to broaden job growth, and to create that sense of optimism that unites people. I think that's the second major priority.
Well, you have just basically done my job and set up the entire rest of the panel. So thank you for that, Tharman. It was interesting speaking with each of you and your teams leading up to this. Education is clearly a focal point for each of you. So I want to start there. Jenny, tell us about new-collar workers. This is something you've spent a lot of time on. How do we think about them differently, and how do we educate them differently?
Well, I would like to just commend the minister as well as he set this up, because this is something we got involved in about a decade ago, and it was for the reason that you could begin to see the digital economy would not be inclusive. There would be far too many have-nots versus haves, and this would revolve around having the right skill to work in a new job and have it quick enough. And so, as you see with COVID, and then with all the issues around racism and systemic racism that have evolved, this has just escalated this issue that was, as the minister said, on a slow burn. So what we set out and coined a term new collar, so it would have a positive connotation. We said we had to offer a new pathway for people into our company, not just a traditional four-year degree. And so new collar was meant to be, you could start, it wasn't white collar, it wasn't blue collar, and those connotations with it. It would be about a new collar job so that you could start without a four-year degree. And there are many new jobs that live at this intersection with technology, cloud computing, cyber skills, that you could get started. And what you'd have to believe as an employer is in three different paradigms. And I think in some ways, Jason, this would be my definition of a new social contract. One would be, I would have to hire based on skills first versus degrees only, meaning I'd hire you because you had some skills that you had built in some way. The second paradigm is I'd have to offer a new pathway. The minister used that word as well. So in other words, perhaps you've come from a 6-year high school, which is what hopefully we'll talk about. We got very involved around the world in this. And then the third paradigm would be, as an employer, I offer you employability. While I may not guarantee you employment, I can offer you employability, meaning the ability to constantly build the skills that you can have a very good job. Because the issue here is going to become quality jobs, not just any type of job. So that led us down a path of what is a public-private partnership with high schools and community colleges around the world to build and say, how fast could we go to underserved communities and pull people into the middle class for the first time? And we now have a pipeline of almost 200,000 students coming through.
It's so interesting to think about that and to think about it from the perspective of a company like IBM, and then to shift immediately, as I'm about to do, to a company like McDonald's, tens of thousands, hundreds of thousands of workers around the world. And Chris, you and I were talking before we came on. We all know McDonald's. We know a Travis Scott collaboration. We know your new pastry line. I was talking to you about that from a personal perspective. But we often don't think about what a massive employer you are, and also the types of employees, which I think is really important. And I wonder what you have thought about over this past year and what this inflection point means for you, especially in terms of looking at the types of people who ultimately work at your franchises.
Yeah, thank you, Jason. It is an area we think a lot about. Just to put it in context, McDonald's is the second largest private employer in the world. Our system, we employ about 2 million people. And I think Tharman touched on it. We are in the heart of the service sector. The service industry is critical overall globally. I think about half of jobs are in the service sector. 80% of jobs in the U.S. are in the service sector. So it's an area for us that is mission critical. I think, the premise of our company was built on how do we figure out pathways for people within the system to become potentially either restaurant managers, franchisees, company employees. And so we have a number of people who have progressed through their career that way. But most people that come in through McDonald's, and I would say that they typically start under age 25, and then they go on to do something else. And we have about 500,000 former crew that are now teachers. We have about 125,000 now that are nurses. We have about 2.5 million that started their own business. And we've found that it's not one solution that we need to offer. We need to offer a range of different things, everything from English under the arches, life training, life skills. We have a significant number of crew that are unbanked. So how do we provide people with just, some of the basic sort of financial understanding and capabilities? So I think those have been things we've been working on for a while. With the pandemic, to your question, we've had to spend a lot more time, frankly, thinking about the public safety element of it, and how do we keep our crew safe through all of this. And I think that's sort of an evolving area of consciousness that I think all employers are thinking about. It's not just about providing good opportunities, good wages, but there's now, I think, a much higher level of appreciation and understanding on the safety component. And we have, I think, like everybody, learned through this because we were initially not set up to think about, running our businesses from almost a public safety standpoint. And so things like PPE and transmission rates and R0 and all those things, we're now having to deal with those, which is why we've done a partnership with the Mayo Clinic because, we view that as going to be something we're going to have to be dealing with and thinking about for the foreseeable future.
And so, Steve, I want to turn to you because you see the landscape from a number of different perspectives, obviously, as the chairman of a global investment firm, as someone who is counseling world leaders all the time. From an economic and from a market perspective, one of the ways that we're seeing inequality for workers and others really manifest is in what people are increasingly calling the K-shaped recovery. We have seen the market do very well amid a very troubled world. What do we need to do to solve for that?
Well, I think, Jason, there are a number of things on the table that Tharman basically set. And there are two or three things I'd like to address. First, in terms of education, which is the key. I was in China about 2 years ago talking with the senior person there who said they were going to be delivering computer science education to 100% of their population. As we go more and more digital in the United States, we probably, in our large public high school, public systems, probably have around 5% of the people learning computer science. Not everybody in China is going to be a computer scientist, but they're going to be exposed. We have to upgrade our education system to be competitive on a global basis. On a broader basis, on some of the issues that Ginny was mentioning, I've said to you before that we need a Marshall Plan for the middle class. We need to make sure there's enough income for people, and the $15 minimum wage adjusted for different parts of the country, implemented over different time periods, perhaps, is sort of something that gives more of a living wage and also pushes up compensation, not just for those people, but for the people above them that are probably hit 30% of the workforce. And education, for me, is the key. Education is the passport for a better life. And to do that, we need to have great teachers. We also need to look at different ways of educating, as Ginny mentioned. But in terms of teaching, we've all had great teachers, and they make a difference in our lives. And I think what we ought to do is have teachers be the only group of workers in the United States, if you will, who don't have to pay tax. And the reason I suggest that is it will mark them apart from all other types of employment as a valued class. It'll also increase their after-tax compensation significantly, so we can attract more of the best and the brightest to help us move in that direction. And we also need to help our population around the world. We need the business community deeply engaged in the school systems to provide apprenticeships and other types of ways where, as Ginny mentioned, not everybody has to have advanced degrees, but if they're linked into the business community, they'll have a place to go to work. They won't be lost. They'll be taught increasing levels of skills. And if you start putting these things together, you're going to really start to be able to make a dent in some of the pessimism that I think was described that regular people sometimes feel in the changing workforce that we're all living in.
Right. So, Jenny, let's talk about that, because I'm fascinated by this program that you have, PTech, I believe that it's called, that as I read it, essentially says from a high school, from a secondary school perspective, we're kind of doing it wrong. I mean, this is a really, I would say, and correct me if I'm wrong, somewhat radical approach that, if widely implemented, could really change the way we think about education, not just from a college level, but going even earlier than that. Tell us a little bit about why this could work, or why it does work.
Well, it does work, actually. And in fact, the very first school we started was in Brooklyn, and it was when Mike was mayor, actually, Mike Bloomberg. And it was just a bit of an experiment there. But now
a set of executives in a very, very changed world, from the service sector of McDonald's to the technical cloud challenges of international business machines, and over to Mr. Schwartzman's efforts in finance, we'll say, the challenges of the pandemic, that at our New Economy Forum, and we thank you for staying through that. We've got much more coming up through the morning, and part of it is the lift in the markets off the vaccine news from Moderna. Ebbed back a little bit. Dow was up 520 points. Now we're up only 430 points. Still a 1.5% move. We've got much more coming up. Jonathan Farrow drives forward the conversation on TV. Paul Sweeney drives forward the conversation on radio. I don't know who I'm joining. Am I joining Farrow or Sweeney? I don't know.
Both.
Lisa, let me know at some point.
That's
it's
what
a gloomy
Zoom's for.
day in London. This is Bloomberg. Good morning.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the opening bell starts right now with 30 minutes until that open. Equity futures advancing. The rotation is back, and that's where we begin with the big issue. Vaccine optimism paving the way for record highs.
The vaccine news, the market is close to a high now.
Infections are rising globally.
The virus continues to surge.
Markets try to look through that.
We've had this sort of double catalyst.
Markets are still going higher.
Market participants are anticipating the likelihood of a vaccine.
The vaccine will come.
The vaccine is really the game changer here.
That's the perspective you should have.
Let's bring in Bloomberg's Kelly Lyons and Sarah Ponczek for more, shall we? Kelly, let's start with you. We've got to start with the vaccine news. Pfizer last week, Moderna this morning.
Yep, good news this morning from Moderna, John, but we also have to couple the good news with the bad news. The U.S. surpassing 11 million COVID-19 cases yesterday after increasing by 1 million in just a single week. That is a growth rate of about 11%, and the death toll is now approaching 250,000. As a result, you're seeing states across the country moving toward more restrictive measures. Just this morning, New Jersey lowering gathering limits for both indoors and outdoors. And over in Michigan, the governor imposing a temporary partial 3-week lockdown starting Wednesday that will see high schools temporarily closed as well as indoor dining and other things shut down. But there is good news, as you alluded to this morning, John, and that comes from Moderna, their vaccine candidate proving highly effective in preliminary analysis of a late-stage trial involving 30,000 people. It prevented infections in nearly all of those 30,000 people, an efficacy rate of 94.5%. And the other notable thing from Moderna this morning, John, is a longer shelf life of about 30 days for that vaccine. Again, those are just preliminary results. We expect the final data toward the end of this month. But both Moderna and Pfizer, which, as you said, did also post positive results last week, are expected to seek emergency use authorization from the FDA if further study proves the vaccines are safe. Now, as far as who could ultimately get those vaccines, John, well, the U.S. does have agreements with both companies to receive tens of millions of those doses, as well as the U.K., Japan, and the EU. But it is a relatively small group of countries, that will have access to these shots, John.
Kelly, great work as always. Thank you. That's the positive news. It feeds into a market that once again has a little lease of life on the cyclical rotation we talked about all last week. Equity futures advanced on the S&P. On the Nasdaq, we fade away. On the Russell, to the moon. Sarah Ponczek has more. Hey, Sarah.
Hey, John, we need a new moniker, not just Merger Monday, but now Vaccine News Monday. Last week, Pfizer, this morning, Moderna. And as you said, it's inspiring rotation part 2. First, if we look at Moderna shares, though, as of last Friday, already up more than 350%. Well, this morning, we have a new record for Moderna. If we look at shares currently up close to 14% in pre-market trading. But if we look at equity futures, what are we looking at? Rotation part 2. That's the one. Like you said, Russell 2000 to the moon. No, we're not seeing the same move as last Monday. Last Monday, we saw Russell 2000 futures 7% limit up, but still a very strong boost. Meanwhile, we see the Nasdaq 100 turn negative. The Nasdaq 100 is in the red. But as you're looking at here, safe havens, though, are in the red, too. Investors moving out of safe havens. Very notable, though, if you look at 10-year Treasury yields, only at 90 basis points or so. Not anywhere near to the 97 basis points that we did reach last Monday throughout the week last week. So we're not seeing as much of a bid head out of the bond market. Crude, though, at the highest in September at 41.93. But if we switch up the board and now take a look at equity futures, that rotation that I was talking about, the Russell in the green, the Nasdaq in the red, as you see it there, reminiscent of what we saw just last week. We also see a very large bid to the Dow, too, up more than 1.5%. So the question is, last week, the question was, is the rotation here to stay? Well, as we see the new Moderna news, at least it's inspiring another run at the rotation yet again, John.
Sarah, thank you. Awesome, as always. So we've got 26 minutes into the opening bell. We've got the Russell outperforming. Feels familiar. We saw this last week. Moving the bond market just does not stack up. As Sarah pointed out, 97 basis points, top end of the range last Wednesday. We don't get near it. We don't unwind the move in Treasuries. Treasury yields up, they roll over, then they barely budge off the back of positive news from Moderna. So that's the bond market story. Do you need the bond market move to confirm the rotation in equities, specifically that long on banks. We can talk about that around the opening bow. Futures higher, small caps outperform. Morgan Stanley recommending overweight positions in both equities and credit. They write the following: we expect a broad-based recovery to take hold from March and April onwards. Driving the synchronous recovery will be a more expansive reopening of economies and the extraordinary monetary and fiscal policy support that will be kept in place. Here's the line from them over the weekend: keep the faith, trust the recovery. Joining us now is PIMCO's Erin Brown. Erin, do you keep the faith and trust the recovery?
Yeah, I think that's right. I mean, if you think back, we've now recovered a fairly significant amount in terms of the economic data. Personal income's up since the pre-pandemic levels. We've seen an extraordinary amount of monetary and fiscal policy be pumped into the system, and we have an end goal in sight with news of the vaccine. And so I think going into 2021, the outlook is actually pretty optimistic. We still think that monetary policy is going to remain very easy, and on the back of that, with an enormous amount of fiscal stimulus, tailwind behind us and news of the vaccine, we actually think that the outlook for 2020 is pretty bright.
Keep the faith, trust the recovery. That was Morgan Stanley. Last week it was Goldman Sachs, roaring 20s. I think JP Morgan in there with Market Nirvana as well. In 6 days, Erin, we had 1 million COVID-19 cases in the United States. 6 days, 1 million cases. Over the weekend, the governor of Michigan, the governor of Washington introduced more restrictions as well. I understand that you can have a situation where the market price is in a better future as we live through the brutal reality of winter. But is there anything that could happen in the next 2-3 months that you think would test the patience of a market loading up on risk again?
Yeah, I think that the biggest risk right now certainly is the pickup in COVID cases. And we certainly saw in early fall the impact that the rise in cases in Europe had to European equity markets, which sold off in excess of 10%. And so certainly we could see a replay of that in the U.S. as well. That said, when we had that sell-off in Europe, we didn't have news of the vaccine, with 2 companies now looking to seek emergency use authorizations in the near future. And in addition to that, we now have a level of uncertainty behind us, having moved past the election. So certainly I do think that the next couple of months are going to be bumpy until we get to that point where vaccine use is, widely available. But I think that, that the downside is somewhat limited, given the fact that we do have, fiscal authorities stand willing and able to spend more to do another fiscal stimulus bill if necessary. Not just here in the U.S., but even more globally. I think that the willingness to do more fiscal certainly stands ready and able. And so I think that that does provide a level of insulation for the amount of downside we could see in the market.
So, Erin, consensus view seems to be stay long equity risk and stay long credit risk as well. Where there's a debate is where you go for those long positions. The pockets of risk you take in the United States, which sectors, what style, and internationally, do you start to pivot towards Europe? So talk to me about the rotation, where you see things, but be specific if you can, where you're looking to go.
Sure. So I do think that you are going to start to see a rotation into more reflationary sectors. But I think you want to be gradual in the way that you start to approach this. You don't want to go all in, starting to buy, deep cyclical energy companies and sort of impaired financial companies. I think you want to still look for quality investments that are still cyclically oriented. So we like the semiconductors, we like industrials, we like materials, more the manufacturing oriented cyclical plays, rather than sort of the deep cyclical consumer oriented plays, which are still going to be hindered until we start to see wide scale vaccines. In credit, we like mortgage credit, MBS, as well as structured credit, more than corporate credit, which has rallied fairly significantly, since the over the last 6 months, and we think still remains vulnerable to hiccups in the global economy over the next couple of months. So really getting longer cyclicals, but really focusing those cyclicals more on the manufacturing-oriented cyclicals rather than the consumer-oriented cyclicals, which will really be the third step of the economic recovery. And I think you'll really start to see a outperformance of more of the leisure, the entertainment, the cruise lines, and the lodging names once we see firm news of a vaccine, and that's probably going to be early in the first quarter of 2021.
Erin, even with the better news on the vaccine, do you need rates to participate? Do you need treasuries to play ball here? This morning, they're not really.
So I think that Treasuries not playing ball is actually a bullish sign for equities. If you see too steep of a sell-off in rates, I think that could scare markets. The fact that rates are remaining well contained, I really think is a function of the fact that the Fed is still quite accommodative and is likely to remain accommodated over the cyclical horizon. And so I think that as long as you see rates remaining contained, equities continue to do well. If you start to see a really rapid sell-off in rates, that could potentially scare equity market investors.
Erin, great to catch up. The wonderful Erin Brown of PIMCO. Thank you. Started that conversation with a conversation about the Morgan Stanley call. Year-end 2021, 3,900. On the bond market, on a 10-year, they're looking for 145 on a 10-year yield. We're way off that level. On the equity market, we're getting there. 12 months out. 12 months and change, and we're close to their year-end call for 2021. But for the bond market, I think that's the question. Erin answered it. In her point of view, from her perspective, if we had a big move in 10-year yields, it would disrupt the move into risk. But there are some of you I know that think you need to see that complementary move in rates. Higher yields, steeper curves to support the rotation into the financials. Incidentally, Morgan Stanley also looking for a 4% move in a weaker dollar through next year as well. And looking at euro-dollar, 118.31, we're not getting that. We're getting a weaker euro, just slightly. We're not getting that big move in the euro, that breakdown in the dollar. Where you are seeing a weaker dollar is against the yen. We can touch on that a little bit later. So in this market, better vaccine news and equity market to the moon. On the movers, here's Abigail.
John, well, good morning to you. And it's pretty amazing because the pre-market session for stocks today shaping up very similar to last Monday and, of course, to the moon, as you mentioned, on the vaccine hopes. This Monday, it has to do with Moderna's vaccine, proven to be almost 95% effective, better than Pfizer's 90% efficacy. Both have similar RNA technologies. And when you compare this to the flu shot of 40 to 60% efficacy, it's very, very strong indeed. Inovio Pharmaceuticals also bursting higher, up about 13% after announcing the phase 2 of its trial. So lots of hope around the virus and that it can be treated. On this, not surprisingly, one sector that is really taking off, the airlines and Carnival cruise line, the cruise lines as well, hope that travel will be back underway. So we see lots of gains there. On the other hand, very small declines for tech, but less so than last Monday, John.
Abigail, great work, as always. Abigail, we'll catch up with you around the opening bell. Lots of hope. Let's be clear, it's not just hope, it's real. Real advances in the vaccine. Where the hope comes in is the hope that the disruption over the next few months doesn't disrupt the trajectory, the better trajectory we could be on in the back half of 2021. I think that's where the hope comes in. The hope that the next 3 months almost don't matter. We'll discuss that through the next hour. Coming up on this programme, advisors to President-elect Biden ruling out a national lockdown and another vaccine breakthrough fueling the rotation trade. That conversation coming up next with Invesco's Brian Levitt. From London and New York this morning, good morning. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We would love, at the right time and the right way to have a digital bank license. We would almost certainly do that in partnership with a strong local partner, and we would use the technology and the experience that we've gained from Mox in Hong Kong.
We are not in support of a nationwide lockdown. You can have targeted measures, building on mask wearing to include widespread testing, can include dialing up and down capacity restrictions.
If we just lock down the entire country without targeting our efforts, then we are going to exacerbate the pandemic fatigue people are feeling. So we've got to approach this with the precision of a scalpel rather than the blunt force of an axe.
President-elect Joe Biden's pandemic advisors proposing targeted measures moving forward with transition plans. This, as President Trump continued rejecting the results, potentially derailing the progress. The president beginning a tweet by saying Biden won, prompting aides and allies to believe that President Trump was coming to grips with his re-election defeat. But the president quickly following up with another tweet proclaiming, quote, "I won the election." Bloomberg government's Greg Giroux joins us now from Washington with the latest. Greg, many people spending the weekend trying to interpret the president, baby steps perhaps towards a concession. We're nowhere near it. Can you walk me through the more important stuff at this point, just in regards to the immediate emergency of a pandemic ripping through the Midwest in the United States and what needs to be done at the federal level that right now isn't being done?
Yeah, it really is an emergency situation. We're seeing record high cases, hospitalizations, and then an uptick in death is going to come. That's always a lagging indicator when you see high volume of positive cases and hospitalizations. The immediate needs include unemployment relief, for people who've been out of work for some time. It includes relief for state and local governments that are feeling the strain of this pandemic. It includes another tranche of aid for the PPP program that aids businesses. But the two parties right now, the two political parties, the Democrats and the Republicans, remain far apart on a blueprint for the next tranche of aid. The Republicans have supported a more targeted relief of about $500 billion, whereas the Democrats' negotiating position is at about $2.4 trillion. Now, before the election, Treasury Secretary Mnuchin and House Speaker Pelosi seemed to come pretty close to an agreement there, and the Trump administration even signaled support for more like $1.9 trillion in relief. And the president over the weekend actually on Twitter said that he wanted a big and focused relief package, but there's still a big bridge to gap there between the two parties. It remains to be seen whether they can come to an agreement in the so-called lame duck session of Congress.
Greg, fantastic to catch up. We'll have to continue this conversation through the week with you at a time where more restrictive measures are coming through from governors. Will that force the hand of policymakers down on Capitol Hill? Invesco's Brian Levitt expecting a smaller fiscal stimulus bill to support the economy. He writes the following: a more modest fiscal bill may serve to extend the market and business cycles, as it would be unlikely to bring forward the inflationary pressures that presage Fed tightening and the end of cycles. Brian joins us now. Brian, great to catch up, sir, as always. This faith in this market rally, how much hope do you have that we can just ignore the next 3 months and focus on the back end of 21?
Well, I don't think we can ignore the next 3 months. I mean, markets are going to trade whether things are getting better or worse relative to expectations. So to the extent things get worse here relative to expectations, you could see volatility or another drawdown in markets. But for longer-term investors, they should be keeping their eye on the ball. The market knew, we all knew that there was going to be challenges in the fall and winter. We had all heard about these next wave of cases that were coming. We do know that we have an ability to compress cases if we exhibit the right behaviors, and we've got some optimistic news on the medical and scientific front. So there could be some volatility in the near term if things are worse relative to expectation. But 2021, 2022 are likely to be good years amid an economic recovery.
Brian, I don't remember the last time where many strategists forecast stocks going down. So my question for you would be, what are the necessary conditions for stocks to decline? Can we get our hands around that? What would you need to see to become less constructive?
Well, stocks tend to decline. I mean, look, stocks, if you're going to enter a new market cycle, meaning that this is the end of a bull cycle we have, then usually that's driven by a policy mistake, inflation, Fed tightening. That's not what we're talking about here. I think what investors are worried about is a near-term correction amid the economic uncertainty. And that would be driven by just simply an inability to compress cases. It would be driven perhaps by, on the fiscal side, not being able to come up with anything positive to bridge us through this. I ultimately think that you could see some volatility in here, but that's always a risk. The markets are going to be focusing on the next couple of years. And when I talk about how market cycles end with big excess, with inflation, with Fed tightening, none of that is on the horizon. And so I believe that we're in the early stages of what's likely to play out to be a long-term market and business cycle.
Well, let's talk about the next couple of years and draw a distinction between this morning and the next couple of years. On the screen, JP Morgan, Bank of America, Wells, Goldman, rallying all nicely into the opening bout. If you switch up the board, we'll go to the airlines. You'll see the same story. The airlines all rallying nicely into the opening bout. There's a trade that people might like last week. They might like it this week. Are you confident they'll like it over the next couple of years?
I am. And, we've had a lot of the parts of the market that require higher rates or cyclical economic activity beaten up in recent months. And, if you think about coming out of 2009 through 2019, we never really saw an acceleration in economic activity or a sustained move higher in interest rates. We sort of plodded along, and that didn't unlock any of the significant value in the market. It was really a growth investors market. We have an opportunity here, given the depths of the downturn, how low interest rates are and how beaten up some of these companies are, to sustain a recovery trade for a couple of years. Now, that doesn't mean I'm giving up on my structural growth companies. I believe that a recovery over the next couple of years will give way again to a modest expansion, but the recovery trade should play out over the next couple of years.
Just my final question for you, Brian. The short term versus the long term. Short term, lots of risk. Long term, lots of promise. This morning, more vaccine news, fantastic. We're all on board with that. Do you think the short term can shape what happens in the back end of 2021? Do you think what happens now over the next 3 months can shape, to some extent, what the back end of 21 looks like?
Well, yeah, I mean, on the policy side, yes. I mean, you will, if you get a fiscal bill that provides a bridge to the recovery, then the recovery could be stronger than it otherwise would have been. But I would caution investors against believing, if there's market volatility in the near term, that we're still going to be thinking about it by the end of next year. This year is a reminder that trying to time these things is really a fool's errand. A lot of investors bailing in March at an inopportune time, a lot of investors bailing ahead of the election amid all the concerns about a contested election, the uncertainty with that, and now obviously investors worried about a pickup in cases. I would say to investors, keep your eye on the ball. It's a recovery trade. Policy's easy. Stocks are cheap to bonds. That should favor risk assets.
The evidence right now is in a price action. I think a lot of people conditioned by what happened in spring and missed out on the rally. Brian, great to catch up with you, sir. Does experience teach you the right lessons? We'll find out over the next 12 months. Coming up on this programme, the analyst action you need to know. That'll be next in our morning calls. And later, Canaccord's Tony Dwyer joining us at the opening bell, weighing in on the small caps, and another huge day for the reopening trade and the rotation. That conversation still ahead from London and New York this morning. Good morning to you all. Some good news once again this Monday morning, 2 weeks in a row. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Another morning with S&P 500 futures up nicely. A beautiful morning over in New York City, up 32 points on the S&P 500. NASDAQ underperforms, small caps outperform. That'll be the topic of debate in about 5 minutes' time on this program. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with JP Morgan upgrading Tapestry to overweight, $35 price target. The analyst expecting the recovery to accelerate given the latest vaccine developments. That stock up by more than 4.5%. The second call from BMO upgrading Bloomin' Brands to an outperform, $22 price target. The analyst citing a favourable risk reward and increasing confidence about moving into a post-pandemic environment. That stock again up 4.5%. And your third and final call, it comes from Raymond James, raising its Foot Locker price target to $50, an outperform rating. The analyst expecting consumers to shift to a more active lifestyle given the pandemic. There's a call ahead of the open, up again by 4%. Coming up, the small caps rallying ahead of the open. Canaccord's Tony Dwyer joins us on another big day for the reopening trade and the big rotation. That is next from London and New York. This is Bloomberg.
We don't have a sort of fixed order of use of tools, and I think that's appropriate. It would always be dependent upon the state of the world and the state of the economy that we found ourselves in.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Here's a nice little treat for you equity market bulls out there. Record highs on a Russell Friday, on the S&P 500 as well. we're set to add some weight to that. Up 0.8% on the S&P. We advanced on a Russell by 1.7. We declined on the Nasdaq by almost 0.2%. The headline that fuels the divergence from Moderna, a 94.5% effective vaccine in its latest analysis. There's the opening bell. Switch up the board. Here's what you don't get. You're looking for a big move in treasuries, higher yields. I'll give you a basis point to 0.9061%. That move just does not develop in the same way it did last week. We topped out at the top end of the range at 97 basis points. We declined, and we do not get back there. In the FX market, you're looking for some euro strength off the back of that rotation into European equities. Haven't got it for you. 118.31. We are unchanged on that currency pair. Where you do get a move is in the commodity market. We push through that headline and you get a pop in crude by 4% to almost $42 a barrel. That's the cross-asset setup this Monday with your movers at the market desk. Here's Abigail.
John, it feels like deja vu all over again, at least relative to stocks. And it comes, of course, on that Moderna vaccine, 94.5% effective against the virus. So it really seems as though we're getting closer to some sort of a systemic solution. And on this, we have not only Moderna soaring, but we have the reopening trade, including the cruise lines, the airlines, even Disney, hotels, all climbing on the hope that the economy is going to get back to normal sooner rather than later, even if that means the second half of last year. Where we do not have strength, and you can see all of that green on the screen relative to the reopening rotation, where we do not have strength, though, that divergence you were talking about around the NASDAQ, Amazon is down about 0.9%. Then take a look at Zoom and Peloton. This is the stay-at-home trade. It is clearly down. The big question here, John, will be how much of the new behavior that we've learned over the last, call it 8 or 9 months, how much of it will play forward as the economy does reopen? Right now, those investors not so hopeful declines, but you have to remember those stocks are up in a huge way on the year.
Abigail, thank you. 2 minutes into the session, bottom of the pile, as Abigail points out. If you see the Nasdaq where it's trading, it's all about relative outperformance and relative underperformance. Pretty much every single sector on the S&P 500 is advancing. Information technology just is not going anywhere. Top of the pile, it's the financials and energy. Energy up by 2.93% after last week's gain of 16.5%. That's the energy sector on the S&P 500. We just keep climbing that little bit higher. A lot more higher again this morning. News of a second highly effective vaccine triggering a big rally in this reopening trade. Ben Lader of Tower Hudson Research expecting the small caps to continue outperforming.
Your average investor is not carrying anything like as much risk, I think, as they should be right now. We're overweight small cap, we're overweight industrials, we're overweight real estate, consumer durables. I'd be focusing on where are you getting the most operating leverage to the sort of fear of the virus beginning to moderate over the next few months. And again, I think it's in these small caps, industrials, and real estate particularly.
Size and style, size and style. Let's talk about size. We can do that with Bloomberg's Sarah Ponczek. Breadth improves, Sarah. We drift towards the small cap. Saw it last week, seeing it again this morning.
We are seeing it again this morning. That expectation for small cap outperformance is still holding in, and pretty amazing that we continue to see small caps head higher. Yes, granted, we have new news today from Moderna. We have that rotation part 2 taking hold. But after 2 very strong weeks for the Russell 2000, over the last 2 weeks, we saw back-to-back performance of gains of more than 6%. We have not seen consecutive 6% or more gains since 2009 for the Russell 2000. So we continue to see this strength. But yes, you said a broadening in the rally. It's not even just small caps. You mentioned energy for one, but also at a record closing high last Friday was the S&P 500, was also the S&P 500 in industrials and healthcare sectors, the equal weight S&P 500. Well, on an intraday basis, we also see many indexes getting very close to taking out their intraday closing highs too. We could see it today possibly in the Dow, the S&P 100, transports too, mid caps, the NASDAQ as well. Keeping an eye on all of these new record highs as breadth really lifts all ships in the market, but mostly those cyclicals, value and small caps. Moving back to small caps, though, what has the makeup of this rally been? We often look at sectors in the S&P. Well, let's take a look at sectors in the Russell 2000, too, because over the last 2 months, the Russell 2000 is already up 20%. In the last month, up 13% alone. Over the last 2 months, though, that 20% gain, much of it has come from energy stocks, too, in the Russell 2000. Next up is healthcare. You have a lot of biotech companies, of course. And then right behind, though, is still tech. So small cap tech still performing very strong as we see the NASDAQ 100 mega caps start to lag, John.
Sarah, thank you. Sarah Ponczek there of Bloomberg. Also, I'm reliably informed, also the host of a podcast that you should listen to called What Goes Up with Mike Regan and Sarah Ponczek. That's the fee I have to pay if Sarah turns up twice in an hour, and she has done. So thank you. Canaccord's Tony Dwyer looking to take advantage of any near-term pullbacks. He writes the following. The economy and market are in the beginning of a long-duration recovery that should favour the broad market with an emphasis on emerging markets, economically sensitive sectors, small-cap stocks and commodities. Tony joins us right now. Tony, what a morning to catch up with you, sir. Thank you. You're a market historian who goes on the data, and that's why I love to catch up with you. One of the many reasons, Tony. Russell growth versus Russell value. You've done some research on it. Can you walk me through where we've got to and what you're leaning on historically to inform you about where things could go next?
Yeah. So, John, as we've talked about, thank you very much. Great to be with you as always. So as we've talked about over recent months, the most painful thing was to be long exactly what we've been identifying as what should go up when you have excess liquidity coupled with a synchronized global recovery. So that's your macro backdrop. And typically you get a weaker dollar in those sectors and those areas that you just identified as us favoring. The time to really be aggressive there was when it was painful in the summer and going into the fall. What we've identified in the Russell 1000 growth underperforming the Russell 1000 value to the current degree, or actually last Wednesday when we wrote the note, is over the course of the last year, it's happened 3 times. Prior to that, it hadn't even happened since 2008. So it's pretty rare where you get this kind of relationship. And what we found is of the prior 3 times this year, you get a reversal. In other words, the market corrects a little bit and the Russell 1000 growth kind of recovers a little bit relative to the Russell 1000 value. So listening to the entry into the show, John, I mean, we've been doing this a long time. Wall Street is full of people like me that come on when something's running and saying, wow, it's running, it's great. That might be the time to just expect a little bit of a pause in the upside, but it's a long duration theme, not a short term.
Well, let's talk about the long duration side of this. And Tony, we all get how this game works. You see a move that lasts about a week and people extrapolate it out several months and maybe even a year. We've had a series of head fakes on this rotation game. Why is this any different, Tony?
Well, because you actually have a clear identifiable vaccine, not by one company, but 2. And I think that creates the expectation of, listen, John, you have never seen in the history of the U.S. the kind of excess liquidity, which all that is if you take, for English for the people watching, all you do is you take the readily available money. So M2 money supply, stock and bond mutual funds and ETFs, money that you can have like today or tomorrow. And you compare that against what is being used for economic activity, similar to how the summer and fall of 2009 hit a historic level of excess liquidity, and that ushered in a longer duration economic recovery. It was the beginning of the recovery. By the way, it happened after a 50% upside move off the low. The same thing is happening today, this year, where we've seen this excess liquidity ramp to a historic degree. And I think people forget in the long duration theme, what creates a problem economically and from a market, some kind of deceleration, is when you have a need for money and limited or no access to it. The opposite is true today, John.
I want to talk about psychology as well, Tony. Looking at the gains this morning, they're broad-based. They're big on the small caps. We saw that on the Russell last week, into this week too. Energy, financials, materials, industrials. Nice little lift here this Monday morning. Tony, the experience of March and April, for many people, I wish I hadn't sold stocks. I wish I didn't sit this out. Many people felt that way. Do you think that contributes to somewhat of a melt-up that we could be seeing in this market?
But what's a melt-up? Was the melt-up the 5 mega-cap stocks that took it up? Or is it now up 20% in the small caps? It's, John, we talk about this. What market are we talking about? And I think that's the real challenge for investors, is to not just look at one symbol and say, okay, it's a melt-up or it's a melt-down. It's been a very strange market. But what's interesting is over the last few weeks, is that the equal-weighted S&P 500, which I urge people to look at, is a better gauge of what, quote-unquote, the market's doing. The equal-weighted S&P 500 has done terrific. Small caps have done terrific. The breadth of the market has been terrific, making a new all-time high. Everything's good, but it's good to the point where I think you should expect a little bit of a pullback. If you remember, John, when last time we were on, or a couple times ago, I don't know, I love talking to you so much, we talked about stair-stepping higher in the market. like the fall of 2009. So in the mid 2009, the S&P was up 50% from the low, and you went into these periods where you got these ramps to a new high, pull back to a higher low, ramp to a new high, and so on and so forth. You had 3 of them. And I think we're in the process of having the third since the August peak, just like that environment and new economic and market cycle like the fall of 2009.
Tony, always a pleasure to catch up with you, mate. Fantastic to hear from you. Big rally this morning. Some interesting calls from Tony Dwyer of Canaccord. On the equal weight that Tony mentions, you just strip out the big muscle of big tech, equal weight, everything in there on the S&P 500. We advanced 1.4% this morning. Last week, up around about 5.5%. Compare that to the market cap weighted S&P 500. You plug back in the muscle of big tech and those big weightings, up just 2%. NASDAQ lower off the back of the tech story. That's what Tony's speaking to right now. It's not about being long, it's about where you're long at the moment. I think that speaks to something else. The bias of this market, the conversations that we're having every day, it's not about the direction of the market. Everyone agrees it's going to go higher. You can push back against that view. The debate that people seem to be having on Wall Street at the moment is where this market goes higher, more so, the relative trade, so to speak. More still to come on this programme. 11 minutes into the session, equities advance. Here's Abigail with some movers.
Well, John, the big tailwind on the morning, of course, is the vaccine. But we also have some M&A news that is helping give the markets a lift. Starting off with PNC Financial. This company is buying the unit, the U.S. assets of Spain's BBVA for $11.6 billion. This is perhaps the reason it's popping is that it will make PNC the U.S.'s largest regional bank. We also have HD Supply higher on the news that Home Depot is paying $56 per share for its former unit. And the big movers, take a look at both Taubman and Simon Property. Taubman is popping on a revised deal with Simon to buy it for $43 per share, down by about $10 per share. It's interesting to see 2 acquirers on this board popping. That really speaks to the risk-on mood. And then very quickly, just taking a look at another segment of the reopening trade beyond travel and leisure and those names. We have the banks, as you know, and energy sharply higher. The banks, it's interesting because yields are basically flat, but the yield curve is up ever so slightly, steepening just a tad. And then energy, as oil is simply surging, the top sector on the day. Both Chevron and Valero are 2 of the big movers for energy today, John.
Abigail, thank you. Right now, the only excuse you need for that rotation, the only reason, the vaccine news from early this morning. Coming up, markets gearing up for a big week of economic data. Retail sales, the focal point, coming before the opening bell on Tuesday. That conversation up next with Washington Crossing's Chad Morganlander from London and New York this morning. A very good morning to you all. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there's a Google problem in this country.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Many consumers are in a very good spot. There's a ton of cash on the consumer's balance sheet, and there's a lot of pent-up demand. This is a very different mentality, and this is a very different situation post-recession than we've seen in the past. People have money, and they want to spend, and they can spend, and I think they're going to.
Chris Harvey of Wells Fargo expecting the consumer to remain healthy ahead of a big week of economic data featuring tomorrow's retail sales for October. Steve Englander of Standard Chartered, however, remaining wary of climbing virus cases, saying the surge could prompt the Fed to act sooner, writing the following. We see a good chance the FOMC moves even before the scheduled meeting if the virus surge leads to visible deterioration in economic and market conditions. For more, let's bring in Bloomberg's international economics and policy correspondent, Mike McKee. There's an outlier call, Mike, from Mr. Englander at Stand Chart.
It is, and I'm not sure why he thinks that's going to happen, because if you look at what's been going on, we have seen some deterioration, but we're not seeing the market fall apart. You look at what's happened with spreads, and they've tightened. So we'll have to keep an eye on that. But the way the market is trading, it's hard to see them going crazy, even if we get some disappointing numbers this week, and there's a chance we could do that. You mentioned the retail sales numbers. They're forecast to come in a little bit lower than anticipated, and we'll also be watching tomorrow industrial production. How's manufacturing doing? Wednesday housing starts should be good because interest rates are still very low. And then Thursday, I know, John, you set your clock for Thursday, and jobless claims, also existing home sales. Now, those retail sales, this is going to be an interesting question because you were just talking about how the consumer has a lot of money, but are they really going to spend it? Or are they going to start holding back because they're afraid of what happens with the pandemic? This is the retail sales control group, the part that goes into GDP, and the anticipation is it will be much smaller than of an increase than it has been in recent months. We're going to be watching this week as well the alternative economic indicators, the numbers that we've been watching in terms of retail store traffic, in particular, the purple line, but also you can see open table, the white line down a little bit, and air employments are kind of flat at this point. This is where we're really going to look and see what's been going on. And of course, the most important number of all that we follow every week, the COVID case rate, which is expanding exponentially, down a little bit over the weekend when we get less of a report on what's been going on. But people are going to be caring about this as perhaps the most important economic indicator. Whether that balances out against the virus vaccine news we get is going to be how probably we see this week.
Mike, thank you. We've gone from 77,000 cases a day in America at the start of the month to something approaching 200,000 daily in America. Just unbelievable. Michael McKee there on the data for the week ahead. We'll catch up with Mike through this week. Retail sales and claims coming as this week grows a little bit older. Washington Crossing's Chad Morganlander recommending investors tilt their portfolios towards a post-pandemic world. He writes the following. Expect retail sales and consumer spending to be strong next year. Employment trends and household credit growth will be well above expectations. We are overweight risk with a focus on high-quality value companies. Chad joins us right now. Chad, help me answer this question. What is the difference between a pre-pandemic world and a post-pandemic world?
So we are at a point here where investors are anticipating where economic trends will be 12 to 18 months out, not only here in the United States, but also across the globe. And that's where investors are going to start focusing their attention on where they want to pick their spots as an investment. So we think that global growth over the course of 2021 will gradually improve and then be quite robust in the later half. So you want to be overweight industrials. You want to be overweight consumer companies like the likes of Disney, Waste Management, as well as other companies like Costco.
I guess the point I'm trying to make is there is a difference between a catch-up trade and catching yourself on the wrong side of a big secular shift. Retail, great example of that. Amazon was great before the pandemic, great during the pandemic, great after the pandemic. Some of these retailers, brick and mortar, terrible before the pandemic, really bad during the pandemic, and you might get a catch-up trade as we start to price in a vaccine. But that's all it is, isn't it, Chad? It's a catch-up trade. And it's drawing that distinction between a catch-up trade and something more durable that I'm trying to do. I can see the banks up. I can see the airlines up. I see it on the screen this morning. Trying to understand what lasts.
Okay, so we think that it's going to be much more durable than just a catch-up trade. As you have the Federal Reserve at 0% on the short end of the curve, you could see a sustainable growth trajectory well in excess and above what the Federal Reserve has put out over their long-term trend into 2023 and possibly 2024. And that would bode well for those type of companies like industrials, like financials, as the spread of the curve starts to steepen for longer than 2 months or 3 months. So, Jonathan, I understand that in the short run right now, things look quite uncertain. Retail sales numbers over the next couple of months will not look as vibrant as we would hope. But overall, we think that there's light at the end of the tunnel and that economic vitality across the globe is going to be higher than expectations. And that's hence the reason why we're overweight the higher quality value names with lower debt on their balance sheet.
Chad, how uncomfortable would you be if the bond market didn't participate, as it's not doing this morning? Would that make you uncomfortable?
No, we're anticipating. Look here, John. I think people are becoming a little bit too myopic on the day-to-day trends within the long end of the curve, and as well as spreads. We think that over the next 18 months, you can see a normalization of the yield curve. Hence the reason why you want to be more shorter in regard to where you want to be on the curve within one's portfolio, and you could see a gradual increase over 2021 on the 10-year to 1.2% to 1.5% as you start to see more sturdy economic numbers that have a longer-term sustainability to them.
Chad, we've known each other a long time. You can just call me myopic directly. It's okay. Chad, great to catch up. Thank you, sir. Chad Morganlander on its equity market. The short-term issues are absolutely massive right now. I get it. You want to think about the reality of the back half of 2021. Got to consider the reality of what's in front of us right now, and it's not a pretty one. Coming up on this programme, the market-moving events you need to be watching on some better news, not just for this market, for the world. That's the story for 2021. For the here and now, some tough months still to come. From London and New York, this is Bloomberg. Record highs on a Russell, record highs on the S&P, record highs on the equal weight S&P. We don't get to record highs on the Nasdaq. We advance, though, across the board. That's the story of the market off the back of the vaccine reality. What you need to be watching this week looks like the following. Later today, President-elect Joe Biden will be speaking and discussing his post-pandemic recovery plans. And Fed Vice Chairman Richard Clarida speaking at 2 p.m. this afternoon. Fed Presidents Bostic, Daly, Kashgari and Rosengren speaking on Tuesday. Plus, we get U.S. retail sales. Williams and Kaplan speaking on Wednesday. And on Thursday, we get another round of initial jobless claims as well. 26 minutes into the session, an equity market that improves this morning because of one thing, Moderna. And we catch up with the CEO in about 4 minutes' time on Bloomberg TV. Do not miss that conversation with Alex Steele and Guy Johnson from London and New York this morning. Good morning. Catch me on Twitter at Ferro TV. This was the countdown to the open. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They're torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
Three p.m. in London, 10 a.m. in New York. We're 30 minutes into the trading day in the United States. From London, I'm Guy Johnson. My co-host in New York, Alex Steele. Welcome to Bloomberg Markets. Alex, Moderna moving the markets.
I feel like it's last Monday, but less so. That's how it feels in certain areas of the market. So take a look at where we're stacking up. I specifically wanted to highlight what's happening with the NASDAQ as well as the small cap. So the RTY, the Russell 2000, you're looking at another increase over 1%. That is a record high after closing at a record high on Friday. Now the NASDAQ now flipping into positive territory. It was negative on the day, as the whole idea of you bet on the reflation trade, the reopening trade at the expense of large cap tech was the story just a few hours ago. Now we're a bit higher. Oil all playing into this vaccine rotation trade. What's not doing that, though, is the dollar as well as the Treasury market. 89 basis points is where we are in the 10-year. Very different story from last Monday when we hit an intraday high of 97 basis points. So that sell-off not really taking on any steam, and the dollar is relatively mixed as well. Some of the risk on currencies not necessarily reacting as they should, like the euro. We'll break that down over the next couple hours as well as the market digests the news from Moderna and what it means going forward as cases pick up. So now we welcome our TV viewers and radio listeners to Stefan Bancel, Moderna CEO. Stefan, it's been a big morning. Congratulations. We're obviously all very excited at any new prospect of a vaccine. The biggest question, though, that it seems like people have is why does your vaccine require less cold storage than Pfizer, key to distribution?
Yes, good morning, and thank you for having me. I think it goes back to the fact that we have been working on mRNA vaccines for more than 5 years. This is the 10th vaccine that we have been running a clinical trial on. The other vaccine that you mentioned, it's the first time that they are doing an infectious disease vaccine. And so over the years, we've invested heavily in science, in process development that allows us now to have a much better storage condition than what we used to have 5 years ago.
Stefan, this is really important because it's going to have a huge impact on distribution. How much of an effect will that stability at a higher temperature have in everybody's ability to be able to get hold of this vaccine?
I think it's a huge impact. We're going to have a vaccine stored at -20 between our factory and the big distribution centers. And those are able to handle that type of product because they're already product approved by the EMEA in Europe, MHRA in the UK, or FDA in the US at -20 Celsius. But what is very important with today's news is we can now, for up to 30 days, have a vaccine stored in a regular fridge at 2 to 8 Celsius, like you do insulin. And as you know, every pharmacy, doctor's office, hospital has that capability. So we think it's a very important game changer. The other piece too, to keep in mind is our vaccine does not require dilution. The other vaccine that you mentioned requires dilution at the site. So you take the vaccine out and you need to dilute it. It's an extra step. What we have to do to get the world back to normal is a massive vaccination campaign that had never really happened before. And so every time we're going to be wasting doing these type of things for our product is going to be an issue. And so we think that between the fridge condition storage and the fact that we do not require any dilution on site, that's going to be a big advantage for nurses and doctors to be able to provide those vaccines quickly to the population who wants it.
Such a good distinction. Have you had conversations with the current administration or the incoming Biden administration about kind of distribution and how to mobilize?
Yes, so the Operation Warp Speed has been working in the US very closely with the CDC for a long time. And we are in daily discussions with them. What we're going to do, as soon as we got an approval or an EUA by the US FDA, is to ship the product via McKesson, who the US government has selected because they are very active in the seasonal flu process, to get the vaccines out to hospital and pharmacies. As I'm sure you read, CVS, Walgreens, Rite Aid, all the big pharmacy chains in the US have signed up to get the vaccine from McKesson to provide administration in the pharmacies. This is also going to be available, in hospitals, in some rural area, in community hospitals or GP's office. So there's a lot of work going on, and this is actually the government taking care of that step, whereas, the military is being involved to help with logistics.
Stefan, one of the key questions as we all watch the case count climbing around the world is what impact will these shots have on transmission? So what effect, if I have this in my arm, will this have on my ability, if I come into contact or get the virus, to transmit it to others?
Yes, and this we don't know yet. What we know from today's data is that if you get our vaccine, you're going to have a 94% chance to have no COVID disease. That's obviously a big deal. But what is even more important, in my opinion, is of a 95 cases of disease that were analyzed yesterday by the independent NIH-led safety board was severe cases, which was the secondary endpoint of that phase 3 study. So 11 of the 95 cases were severe. But what is really remarkable is that of those 11 cases, 11 were with people who got placebo. There were no case reported of people who get the Moderna vaccine. So when you put those two data together, what does it tell you? With the data we have today, it seems that our vaccine, if you get it, you have a very high chance of being with no disease. And if you get disease, most probably you will get mild disease. And if you think about the impact on hospitalization, ICU, and the impact on the economy, where governments around the world are trying to slow down contacts because they want to manage the limited hospital and ICU capacity. So if that problem was to go away by having a vaccine that prevents severe disease like ours seem to do, that's a game changer. To your question about transmission, we will know soon. As part of our study, we're also looking at measuring antibodies that come from the virus, but could not come from the vaccine. And so when we'll have that data, we'll of course share it. It is possible that the vaccine will prevent infection. We have shown that in non-human primates, i.e. in monkeys. But we need, of course, to prove it in human now. We just need a bit more time. But the most important thing is to prevent disease. If people vaccinated will not have disease, we will be in a very different world.
What's the breakdown for the general population versus older people, say those over 65? You had 15 in the trial, right? So what was placebo, which were vaccinated? What was the effect?
Yeah, we don't know all the details yet because remember, the company is blinded. The data is owned and run by the independent safety board. But what we know is that we had only 5 active cases on the drug. And so we anticipate a good response in the elderly. We will know more in a couple of weeks when we have the study finalized and filed to the FDA and MHRA in the UK. But if you look at the phase 1 data, which were published in the New England, we're actually the vaccine of all the vaccines in the clinic that was able to sustain from a 25-year-old to a 75-year-old the same level of antibody for all of the participants in the study. So we are cautiously optimistic that in the elderly and other people with high comorbidity factor, we should have an effective vaccine.
Stéphane, Christine Lagarde, the president of the ECB, was asked the other day what her greatest fear was. One of them was war, the other one was mink. How big a fear do you have about mutation? And is messenger ribonucleic acid the best way of dealing with any kind of mutation that we see?
So let me start with your last question. Yes, mRNA is the best technology to deal with mutation. Why? Because we've shown in January that it took us 42 days to go from the sequence published by the Chinese government of the SARS-CoV-2 to shipping to the NIH human-grade quality product. I think we can take this down to around 30 days with the things we've learned and the investment we have made. So if tomorrow there was a new mutation, like the one you mentioned, that could have an impact on the efficacy of a vaccine, we could within a month go back and have a new vaccine. We will not need to do studies anymore because it's the same chemistry for the molecule of mRNA. It's the same manufacturing process. So if you change out of a message that is very long, thousands of letters of genetic code of life, if you change a couple of them for a mutation, you do not have to redo clinical studies anymore. So mRNA is clearly the best adapted for mutation. On the one you mentioned, we are tracking it. We're going to run the experiment very quickly to see does the blood that we have from the humans we were in our phase 1 and our phase 2, does it neutralize the new virus? If it does, we know the vaccine works well. If it doesn't, we can quickly change the sequence and have a new vaccine.
Can you give me some perspective on the side effects?
Yes, the side effects, we've reported the severe side effects in a press release for transparency reason. They are very similar to what you see with other vaccines. We didn't even report the fever because there were less than 2% of cases at fever. And what you see is what you see with commercial vaccine. A bit of pain at the site of injection, a bit of redness for a day or two, both go away with no medication. And at the systemic level, you see some people having some fatigue, especially in the elderly group. You see people having a bit of headache. Again, those things go away usually within a day or so with no medication. Of course, people can take a Tylenol or equivalent and actually not even feel those pains.
Stéphane, you mentioned a moment ago about being able to reformulate. How quickly do you think you'll get into kind of 2.0, 3.0? How quickly do you think that cycle will happen? And what improvements do you think you'll be looking for? You mentioned temperature early on as being one of the critical factors. As you look for reformulations, what work are you doing and how improved will be the product and how quickly?
Yeah, so that's a great question. I think we're, of course, always working on temperature and stability. The 30 days we announced today at fridge temperature is a first step forward because we have that data. We continue to monitor the product that is on stability in our labs. And if we're able to expand it, we'll do so. The other piece, I think, is single dose usage. The current product, like all the other products, is multi-dose. So in every vial, you're going to get 10 doses for 10 people. And the reason the entire industry did that is there is not enough filling capacity in the world that was sitting idle to wait for a pandemic. And so by putting 10 doses in one vial, we can, of course, get much quicker product in the marketplace to vaccinate people. But if you think about the potential use for the mid to long term in terms of boosting, it will be much easier to have a single dose vaccination like you have when you get a seasonal flu shot.
Stéphane, final question from me. As you said at the beginning of this conversation, you've been working on this for a long time. You were looking to use messenger RNA for other therapies. Can you talk to me about the acceleration you've been through within your business as a result of COVID-19? And I'm looking for silver linings here. Will this help in treatments elsewhere? Will it help with cancer and other areas?
Yes, so the place where it's going to help the most is in infectious disease vaccine. We have 6 vaccines for other infectious disease that are all first in class, meaning no commercial vaccine available. A good example is CMV, cytomegalovirus. It's a virus that drives the #1 cause of birth defects in Europe or in the US. 10,000 kids in the US per year. No vaccine on the market. The whole industry has tried for 20 years to get a CMV vaccine to work. They all failed. Well, we had a positive phase 2 study in September, starting the phase 3 next year. That's a 2 to 5 billion annual peak sale product that we have not licensed, so meaning it's a product 100% for Moderna. And we have many more like this. We just announced we're going to get into the flu business. So what the COVID vaccine has done for Moderna is, one, de-risking of a platform for vaccines, which translates into a lot of value. And 2, is an acceleration for us becoming a commercial company. We were supposed to be commercial in the 23 to 24 timeframe. Well, now it's possible we are being commercial before the end of the year.
That's quite an acceleration. Stéphane, thank you very much indeed. We really appreciate your time today. Thank you very much indeed for sharing it with us. Stéphane Bassel, the Moderna CEO. Stéphane joining us on Bloomberg Television and Radio. Tune in later today for our interview with Moderna's co-founder. Looking forward to that conversation as well. That's at 5 p.m. in New York. Let's talk more about Moderna's interim results. Joining us now is Dr. Gregory Poland, Mayo Clinic Vaccine Research Group Director. Gregory, you were listening to that interview. What did you take away from it?
Well, you know, this is exciting news. This is exciting news for the field of vaccinology. This is exciting news in dealing with this pandemic. But, and that's important, but as a scientist, you always want to temper your enthusiasm with what you don't know yet. Remember, this is a press release. We haven't actually seen the data. This is efficacy in the 14 days after the second dose. What will the durability of that immunity be? What will protection be against asymptomatic disease and transmission? What will efficacy against death be? And remember that, generally speaking, in the context of these trials, they're being carried out in places where we're wearing masks and we're socially distancing. So what are these same metrics with masks off? Those are important for us to examine as we go along. The other thing is that I absolutely agree that the stability at refrigerator temperature is important. What the company will need to show is that actually keeping it at that temperature gives us the same measures of efficacy. And then finally, we want to know details. Who were the 5 that got infected? Were they the elderly? Were they people who had certain comorbidities? These are all very important as we try to develop strategies and policies for how the vaccine will be used.
Gregory, related to your first point, when are we going to know that information? In that, is your implication that the vaccine maybe worked or had a good efficacy rate because we were all socially distancing and wearing masks, and once you take off the masks and stand next to somebody, that it may decrease the efficacy?
Yeah, I mean, we always know that the efficacy of a vaccine in a carefully controlled clinical trial is lower when you actually now go to general field use. People won't keep it at the right temperatures. People who were excluded from the clinical trials would now be included in the general use of it. So, and as I say, the distancing and mask wearing could also have a distorting effect on our understanding of the efficacy. A vaccine plus a mask is more efficacious, very likely, than vaccine alone or mask alone.
Let's talk a bit about reformulation. How quickly does this treatment get better?
This is a really important question that you asked, and I'm gonna add something to the context of this discussion, and that is, yes, they can move very quickly. That's one of the exciting things about mRNA-based vaccines. The second part is, and we might need that facileness. And what I mean is, these are S-only vaccines. This is based on the mRNA that produces the S protein from a particular strain. You asked about the mink. What happens when we give a vaccine against one type of S protein from one type of SARS-CoV-2 virus, and that mutates? Okay, it's already mutated. It doesn't appear to be something that will change the efficacy of the vaccine, but it could. And so we have to be aware of the fact that there may have to be another crash development program for another vaccine in 6 months, a year, who knows, if ever.
So where does this then leave AstraZeneca's vaccine in terms of timing, in terms of what we need to look for, in terms of whether it may be better, et cetera?
Yeah, good question. And that really awaits seeing the data. Remember, all we have for the mRNA vaccines are 2 press releases. Those are fine as far as they go, but as scientists, we really want to see the data and begin to dissect. Wait, what are the assumptions here? Who did it not work in? Where did it not work with transmission, et cetera? Now, what I will say is that the adenovector vaccines, in my opinion, tend to be more reactogenic. And that's because you have to give higher doses of it. The news that there's the potential for this mRNA vaccine to be stored for 30 days at refrigeration temperature means that this vaccine, funded by the American taxpayer for the benefit of the world, could actually be used around the world. When you get to requiring minus 75 freezers, you've now limited it to major medical centers in the West and not the rest of the world. So this is, if this stability turns out to not harm efficacy, this will be really important in the use of this product.
Gregory, so great to talk to you and for helping us break that down. Gregory Poland, Mayo Clinic Vaccine Research Group Director, thank you very much. All right, let's now take a look at how investors are weighing these vaccine developments. David Bahnsen of the Bahnsen Group, CIO, joining us now. Hey, David, when we had last Monday, it was all about buying small cap, selling tech, for example, and you had a big jump in yields. The reaction today muted, in fact, kind of disappearing. You're not seeing any real move in yields. You're seeing the NASDAQ actually now underperforming, but still up on the day. What are we learning about the price action today?
Well, I think last Monday, though, was more than just the small cap action. There was a big rotation into energy and the financials, and I do think you're seeing that continuing today. I think that it is obviously catalytic from the vaccine news last week and this week, but I also think it's inevitable, and it has been inevitable, but boy, has it taken some patience to get here.
David, do I just ignore what is happening on the ground right now? Do I just ignore the climbing case count, look through it, invest for next year?
Yeah, you do. And the reason why is we've already been through this lesson. The case count is irrelevant to markets. We found out what we needed to know months ago, which is that there is a particularly vulnerable class of people for COVID-19 in our country, and we have the ability to better protect them. We have more than doubled the discharge rate getting out of hospitals because of therapeutic improvements, and the mortality rate, not only for cases, overall infections, but even for severe hospitalizations, has collapsed. So markets are able to look through that and see that though the headline number around higher testing produces higher positive cases, the fact of the matter is we're able to safely reopen and in fact have to do so.
But David, doesn't what we do now affect how we come out of this? For example, we don't have the stimulus here in the U.S. We're going to have programs as well as D.C. kind of rolling off at the end of the year, even though we can look at that as quote-unquote short-term because we have a vaccine. It's going to dictate the level with which we're looking at growth and earnings potential in 2021 and 2022 versus, say, Europe. Isn't that where it matters?
Well, let me offer a different perspective on that. When you say we don't have the stimulus here, we don't have a fourth stimulus, but we haven't spent all the money from the third stimulus yet. Now, we need a more targeted package. I agree that there would need to be additional, and in fact, the market is well aware that there's going to be. The questions are just if it's going to be in the lame duck session or into Q1 and what the size and scope of it will be. But the fact of the matter is the stimulative effects of CARES Act are nowhere near gone, let alone the trillions of dollars of monetary stimulus. There are still PPP benefits throughout the society, will continue to be so. That's the lowest hanging fruit for additional stimulus, is giving more PPP support to those businesses that were doubly impacted by the lockdowns.
David, can I just come back to this kind of tension that is in the market right now between the here and now and the huge numbers of people that are suffering from COVID and the post-COVID world generated by the Moderna vaccines and all the other vaccines we're going to be getting? Is the rotation a straight line? Are we going to see quite a lot of turbulence between now and then? And how do you pick your entry point? How do you position yourself during this period?
No, that's a really great question, and I do not believe it will be a straight line. I think that the sort of rotation, what is usually just sort of referred to as a growth into value rotation, but there's a lot more nuance around it now, sector-specific and even subsector, but it won't happen in a straight line. My argument is it began in September. And yet there's certainly been big NASDAQ rallies and FANG and big tech rallies along the way. But this is a rotation that is not just going to be driven by vaccine and kind of post-COVID economic realities. It's a rotation that was long overdue anyways. Growth got another kick up because of stay-at-home factors around COVID. So it's sort of a perfect storm for that growth-value relationship. That unwinding and mean reversion is a market inevitability throughout history. I think we're in that moment, but I do not think it's going to be a straight line. I think there'll be turbulence. And to your question about picking the entry point, my very earnest advice is that people not try to pick a perfect entry point because they won't be able to. No one will. That's my job, is to tell people that they will not pick a perfect entry point. So they have to kind of nibble in, average into those right spots in a properly diversified portfolio. So it's not 100% rotation all the time. And I also wonder, though, how long-term is the rotation going to be? For example, Citi looks at next year yields capped at 1.25% for the 10-year. If it's capped, I wonder, does that cap the rotation? Well, I don't see this as only connected to the level of yields. I do think the steepness of the curve matters. I don't happen to agree with Citi that we're even going to get to 1.25 on the 10-year, but that has more to do with Fed manipulation than it does economic strength. I think the economy will be plenty strong enough to support a 1.25 10-year, but the Fed is not going to let the 10-year and 30-year with deficits this high get there. I think they'll end up using yield curve control to put down the longer end of the curve. But ultimately, I think that the issue about rotation being long-term, short-term is that it's sort of a permanent reality, and yet we just got so out of whack in terms of the relationship of certain sectors to one another that there has to be a mean reversion. It will be very market disruptive, I think mostly positive. As you know, we're dividend growth investors, but then other sectors will have their day, but there will be new stimuli and there will be new catalysts that affect that future rotation.
Dave, we're going to leave it there. Thanks for the input today. Greatly appreciated. David Barnson of the Barnson Group. We really appreciate your time. OK, what do we got coming up? We're going to look at how these vaccines will be stored and then moved. We're going to discuss all of that with Stuart Henderson, Accenture Global Life Sciences lead. That conversation is coming up. This is one of the pivotal questions. We generate the vaccine, but storage and transport and stability absolutely pivotal in its ability to get around the world and actually have the effect that everybody's hoping that it will have. In terms of the market reaction, Alex said this time last week, we were off to the races. Today, understandably, I think, we are seeing a more subdued response. But nevertheless, we do have equities higher. Even the Nasdaq's up a little bit now. Crude, though, absolutely surging. This is Bloomberg.
So when you went to Baltimore, you went initially to be an anchor woman, and then it didn't quite work out.
Yeah, I got fired.
Well,
well, demoted. I was
got demoted, but they didn't. They had a contract, so they didn't say goodbye. Yeah. And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. You know, lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend Gail, who I met there at the time, she was also working there. She said, "Oh my God, you're 22, making $22,000. Imagine when you're 25." Then you're 30. So I'd be making 60 about now. It'd be good, 62. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000. Right. So they kept me on and said, "We'll put you on this talk show just to run out your contract."
I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects. The question is, what is the storehold of wealth in the meantime?
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From London, I'm Guy Johnson. Alex Steele is over in New York. This is Bloomberg Markets. So let's carry on our conversation about our top story, Moderna's promising results. The vaccine has been hailed as a potential game changer with 94.5 efficacy. Questions remain, though, about storage and distribution. It's going to be one of the critical questions that we need to answer. Joining us now for more is Stuart Henderson, Accenture Global Life Sciences lead. Stuart, you've done a whole load of work on this. We were just talking to Mr. Bancel, the CEO of Moderna, and we were talking about distribution and how important temperature is going to be in terms of being able to deliver the vaccines from labs to people's arms. Can you walk me through just how complicated a process this is?
Yeah, thanks, Guy, and good morning to you. Great to be on. Before I dive into explaining that temperature piece, I think it's important just to say a couple of things. You know, we are truly grateful, I think, as society, to not only the scientists and also the healthcare providers and professionals that have worked day and night on this tirelessly since the beginning of the pandemic, but also to what I think probably is in the region of 300,000 volunteers who've taken part in clinical trials that are providing the results that we saw also from the Moderna studies this morning. So, you know, I think with these two results, we're hoping, I think as you do, to be seeing the beginning of the end of this pandemic. And boy, do we need it. We're at 1.3 million deaths at this point. That's if you kind of just, you know, think about that. That's the equivalent to the population of Dallas. So when we think about cold chain or the storage and shipping of this, it's important to kind of step back and understand what we mean by an mRNA vaccine, because that's what both Pfizer and Moderna have, as distinct from traditional vaccines, and respecting the fact that, of course, the Pfizer and the Moderna vaccines have, whilst they're both mRNA, slightly different storage requirements. So when we talk about mRNA vaccines, we're essentially talking about a vaccine that is using small strands of biologic material, which you inject, which actually create in your cells, it's essentially the assembly instructions for your cells to produce a protein. And that protein is then recognized by the immune system as something you want to attack, and that builds essentially a memory. So if you like, the difference between a traditional vaccine and mRNA is we've moved the manufacturing of the vaccine from a factory inside your body. Now, the issue with mRNA is that essentially it's a messaging system, messenger RNA, that is used inside your body. It's used every day to build new cells, repair things. It's short-lived in your body because essentially it's meant to be a message. It's meant to be a message. It's a short-lived process. So when you transport it, you have to keep it in a way that doesn't allow for the degradation of that mRNA. So by the time it gets to a patient or a person who's going to have it injected, that it is sufficiently effective at that point. So this is the background that you need to understand as to the keeping it cold.
So let's get deeper into that. So what do you need to transport it, train, truck, plane, and then what does it need to sit in if it's in the middle of a huge Walmart parking lot?
Perfect. So that question is answered in essentially three parts. So the first part is that Pfizer has done, I think, you know, an extraordinary job of you know, in the same way they had a ton of scientists working on the science itself, they've had a similar level of effort on the supply chain side. And what they've been building is a network that will revolve around two large refrigerated storage sites, one in Kalamazoo, Michigan, and one in Pours in Belgium. And they also have final assembly centers elsewhere in the markets. And what they're doing is they've developed, just like they developed the science, they've developed a suitcase-sized container that's going to hold between 1,000 and 5,000 doses. And they will have cold chain technology that keeps those boxes, those suitcases, if you like, at the appropriate temperature for up to 15 days. They have figured out how to ship what will be likely 7.6 million doses coming out of those two facilities on a daily basis into airplanes, into trucks around the world. Those platforms, those boxes, if you like, they're reusable, and they have both tracking technology from a GPS perspective, as well as technology to say, was the cold chain broken at any point? Did it go above a certain temperature? So they've done the large part of getting it to the markets. Where the work that's still ongoing has to be done is at the last mile. So if you think about it, once you get that box or that suitcase to a location with 5,000 doses in, the states and the US, as an example, have then got to figure out how they do that last piece. Once it's risen up to room temperature, they have a certain number of hours to dispense it, a certain number of days associated with fridge temperatures. So we're going to see the last mile be the place where lots of work is required. Pfizer's done an extraordinary job in the first part. The states in the US have got the last mile to work on. And that's where large amounts of technology will come into play.
Stuart, the United States is a developed country. Europe is a developed region. What about the rest of the world?
For sure. So we're talking about, getting this around the world. And you heard earlier, of course, that from one of the previous conversations, that the Moderna temperature storage is a different temperature. And of course, that may mean it's more applicable to different places. The reality is we're going to need all of these vaccines. We don't want a winner. We want multiple winners. They're all based on the spike protein so far, whether the AstraZeneca, the J&J, Moderna, Pfizer, they're all based on this spike protein, and we're going to need all of them. If you think about it, Pfizer in 2021 is committed to 1.3 billion doses, Moderna to 0.5 billion doses. That's 1.8 billion doses. In those situations, patients need 2. So that's 900 million people. That's by far and away way short of what we need globally. So we're going to need all of our companies that are working on this to be successful. And so what we'll see is for those vaccines, they'll go to different places. For the Pfizer vaccine will be very applicable to certain parts of the world. The Moderna vaccine will be applicable to others. And then we're going to see others, shipped worldwide in different places. But it's important to remember that this cold chain storage problem is not one that's new. In actual fact, the Democratic Republic of Congo deployed this for the Ebola vaccine. It wasn't hard. It was just difficult and expensive. So I think it's important to say it's not impossible. It just takes hard work.
All right, Stuart, really appreciate that. Sort of key for the distribution, how quickly we can roll that out. Stuart Henderson, Accenture Global Life Sciences lead. Thank you very much. All right, coming up, you got a Wall Street versus Main Street conversation. Former Fed Chair Janet Yellen, former BOE Governor Mervyn King, and former RBI Governor Raghuram Rajan, and former Secretary of the Treasury Larry Summers. They are all weighing in on that very debate that's coming from the Bloomberg New Economy Forum. We're going to bring you some of that panel coming up next. This is Bloomberg.
Could have been a financial market meltdown. There was an overwhelming rush to the safety of cash in March. It threatened massive asset fire sales, which could have caused credit to dry up in the economy. And the Fed and other central banks erected emergency liquidity and lending facilities that have really worked and kept credit flowing in the economy. For example, spreads on corporate bonds were just spiking. And after the Fed set up its secondary credit market facility, they really came way down. And there's been a great deal of issuance of debt. Monetary policy in all the
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester. I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there is a Google problem in this country.
All right, let's go back now to the New Economy Forum, where former Fed Chair Janet Yellen speaking on a panel with former BOE Governor Mervyn King, former RBI Governor Raghuram Rajan, and former Treasury Secretary Larry Summers.
That challenge that Mervyn has outlined.
Well, Janet talked about the advanced country central banks having done a fantastic job. And I think this did help many emerging markets, which were subject to the same kind of stress that you saw in the beginning of the crisis in March. And the accommodative policies of the Federal Reserve, the ECB, the Bank of Japan helped alleviate some of that EM stress. Also, emerging markets have adopted some of the tools from the Industrial Country Central Bank toolkit to help their governments do the spending, which, as Mervyn said, is extremely important to ensure the real economy doesn't collapse, that you maintain the body economic by helping small and medium enterprises and helping households. That requires spending, and central banks in Indonesia, Poland, across the emerging world have supported their governments. The key question now, of course, is how do you sort of ensure that that bridge, which was built to the end of the virus, it actually extends that far, and there are fears in industrial countries it may be too short. And emerging markets didn't build a pretty strong bridge in the first place because they had very limited resources. And that means that there is far more stress which has built up within the system, which has been hidden by moratoria, by payment sort of postponements, and that stress has to be dealt with. This is not a central bank problem. This is a problem of fixing the judicial system so that it can alleviate stress, fixing the debt renegotiation system. And again, I'll end by saying, so far it's been very good. But whenever you get into these kinds of policies, exit is often a great issue. How do we exit without tanking the system once again? And it's too early to start thinking about it, but it is a question which will face us down the line.
Larry Summers, let's take it as read. If we take from the other three speakers, quite a lot has gone right in the major central banks' response. But what would you have done differently?
Look, the big thing was preventing a financial collapse. The central banks acted definitively to do that. That's all that was ultimately historically important. The mistake is for them to vastly exaggerate their continuing relevance. They lack, starting at the zero bound where we are, the capacity to provide meaningful impetus to their economies in any way that is consistent with any concept of central bank functioning. They do not have the capacity to meaningfully affect the degree of inequality. They do not have the capacity to vaccinate people. They do not have the capacity to fight climate change. And they need to acknowledge the limitations of their influence in a clear way so there can be no pretending about what they're going to do, and that the authorities have the responsibilities they do. The central banks have also, in my view, not put adequate emphasis on the global dimensions of this problem. A striking feature of the contrast between this crisis and the last crisis is that the last crisis had a major response from the IMF, issuance of SDRs, big increases in lending from the World Bank that was driven by the global community. There has been no boldness at the global level comparable to the boldness at the national level, and that could get us in real trouble down the road, as Raghu points out. And frankly, the central bankers, because they want to curry domestic political favor in each country, have not had enough to say about that.
Just to come back on that, you talk about a lack of boldness. I mean, Larry Summers, you've proposed as one of the things that could happen to support the global system, a big new issuance of IMF special drawing rights, SDRs. We have to ask you, have you persuaded incoming President Joe Biden of that yet?
They'll speak for themselves. I'm optimistic that the U.S. will not be the kind of block on that proposal that it has been before. And of course, it's possible to do substantial things, issuances of $500 billion without congressional approval. So I'm optimistic that we'll see progress on that. But I think that unlike the central bankers of an earlier era, you have seen much less discussion in the central banking community of the global imperative, particularly the challenges necessary if emerging markets are to avoid a wave of financial crises going forward, the issues associated with debt relief. And I think that's been unfortunate. And I have to say, I think it's been because the central banks have been excessively focused with their domestic politics, which leads them to talk about subjects like small business, like the environment, which are really not basically within their proper remit.
Janet Yellen, do you agree that maybe the Fed shouldn't be talking about needing to target the difference between black and white unemployment rates, for example, as it did in this summer, and shouldn't be engaging on these broader agendas, climate change?
So the Fed has always operated under a dual mandate. It's inflation and maximum employment. And in this environment of very low inflation, too low inflation, there's really no conflict whatever between these two goals. And the Fed is really focused on trying to create a very strong job market. And I think that they have made that clear. I'm not sure everyone in the public on Main Street understands that, but full employment is a goal that they ought to pursue. I agree with Larry that the effective lower bound is a big constraint. At this point, they're doing almost all they can do. They need fiscal policy to help. But when they talk about inequality and the disproportionate burdens on minority workers, what they can do is to try to pursue the strongest possible job market. Because when they're successful at that, as they were prior to the pandemic, with unemployment at a 50-year low at 3.5%, that brings benefits particularly to less skilled and minority workers. When job markets are really tight, we saw wages rising most rapidly at the bottom of the wage distribution, workers being pulled off from the sidelines, coming back into the labor market, firms finding it incredibly difficult to hire, lowering qualifications, engaging in their own training to bring people up to speed, willing to hire people that with a weak labor market, their resumes wouldn't have been looked at all. And the Fed has recently revised its framework for conducting monetary policy and emphasized that full employment is a broad and inclusive goal. And they've changed their operating strategy to, and because of the importance of the effective lower bound, to pursue that with vigor. And I think that's appropriate, and I think it's the strongest contribution that central banks can make to trying to deal with inequality. They don't have other tools.
Janet, can I just see whether we're in agreement? I am 100% in agreement with you on the absolute importance of maximizing employment in the current context when there's no real danger of getting inflation to an excessive level. I am in 100% agreement with you that maximizing employment is the best social program of all and confers all sorts of benefits. But don't we think that central banks really need to be careful about holding out the idea that they are relevant to sectoral issues involving differentials between one sector and another, or structural issues like environmental protection? Would you agree, for example, that any idea that the Fed should make special efforts to buy green bonds is a confusion?
So I don't think, I've never heard the Fed say that they're trying to target the unemployment rates or situations of any particular group. In a tight labor market, the gaps, I think, between, for example, the unemployment rates of minorities and whites tends to narrow. I don't think there's anything they can do on that front beyond a generally strong labor market. So it would be a mistake, I think, to say we're targeting the unemployment rate of any particular group. And on sustainable goals, I think it does make sense for in supervision to be taking the risks from climate change, both climate-related risks and the risks of changes in prices and stranded assets as countries adopt meaningful climate policy, to consider that as a risk to banking organizations and to do stress tests to look at that. But of course, we need public policy oriented toward making a big difference on climate change. And I agree with you, that is not something central banks can be asked to accomplish.
I'd like to just add something on what Larry said about inward looking. I mean, to some extent, what you see is the large countries, the large developed countries have become inward looking for obvious reasons because of the political forces within their countries. So there is really no global leadership right now. Hopefully it will emerge. But also, I think the point he made about central banks, that's an offshoot of the fact that there's tremendous pressure to look inwards in these countries. The Federal Reserve had these swaps with a number of countries in the global financial crisis and got a lot of flack for looking outward at that point. So it did start focusing a lot more inward. And so that does leave a vacuum at the global stage on issues of global, transmission of monetary policy, cross-border capital flows, etc., but also the issue that Larry mentioned about cross-border credit, which at this point is heavily, heavily under stress.
Mervyn King, we remember the title of this is about Main Street or Wall Street. Given what Larry has said, do you think that central banks or the Bank of England or other central banks have done enough to show that they're supporting Main Street, not just Wall Street? Do you worry about the fact that they are perceived to be propping up asset prices as a main tool of policy at the moment?
Well, I am concerned that the fact that the narrative about why monetary easing has been so strong in these particular circumstances, that narrative hasn't been made clear. So it's not surprising that some people have gone away with the impression that the objective of central banks is to support asset prices. I don't think that is their objective, but I think one can see why some people might think it. I think Larry is absolutely right in saying that the danger with central banks today is that they often give the impression that they're sort of all-purpose, do-good institutions. If there's a problem in the world that exists, central banks have to step in and deal with it. And I think that's a terrible mistake. I think Janet is very compelling in arguing that the dual mandate for the Fed allows the Fed to pursue strategies that will maximize employment. And it's reasonable to argue and to explain why that strategy will have benefits for wider constituencies in the country, not just the aggregate, but individual groups will benefit too. But I do worry that if you like, the new generation of central bankers have been very willing to step into areas that, as Larry said, are clearly for government, and that includes climate change. And I would have thought that one of the big lessons from this episode through which we are now passing is that if we are going to do stress tests on climate change, we certainly need to do stress tests on the next pandemic, whenever that may come. Are we prepared for that? There are many ways in which financial stability is threatened other than climate change. And I think that over the next few years, the big challenge that the world will be facing is dealing with a wave of debt restructurings in both the business and, in many cases, the sovereign sectors. So I think Larry's right to point to the need for a more global strategy for dealing with this. But one reason this is so difficult, I think, is that over the past 20 years or so, central banks, as well as governments around the industrialized world, bought into this agenda of unfettered globalization. And we see now a very real pushback to that on very understandable grounds that many people have not benefited from that. And I think, therefore, central banks are naturally cautious before stepping in. But when it comes to debt restructuring over the next few years, central banks need to be part of that global debate. They were when Larry and I were involved 15 years ago, and I think they need to be again.
Larry Summers, the response to this great need, the popular need to show that the policy is more inclusive, that globalization could be more inclusive, and to the long list of things that you said that central banks are impotent about, could be just to say central banks' main role now is just to make large-scale fiscal action affordable, just as they effectively have this year by keeping rates low, making it possible for governments to borrow. Should they just recognize that that is their main role at this point?
I wouldn't put it that way. I would put it that their main role is to support stable, non-inflationary economic growth. And I think for the foreseeable future, that's likely to involve keeping interest rates at very low levels. I think the deep problem, the deep macroeconomic problem that the world has today is that savings are exceeding the natural level of private investment, putting downwards pressure on interest rates to near zero real interest rate or below levels, and leading to sluggish growth and lack of inflation. And that is the world's fundamental problem. And it is not a problem that central banks can on their own resolve. It is a problem that central banks can acknowledge, as Janet certainly has in her period, in the period after she left office, in very strong and clear ways as the evidence has become clearer. But they need to point up this as a problem, recognize that it has important implications for fiscal policy, that it has important implications for the ways in which governments manage their debts, and that they are prepared to do their part. It doesn't necessarily mean explosions in debt, but it does mean careful thought about a range of fiscal and structural policies. But we do need to recognize that whereas from the period from the late 1970s until the early 2000s, the central macroeconomic problems were the temptation to inflate and the crowding out of private investment by budget deficits. Today, the central problem is absorbing all the savings in a healthy way so that we have strong economic growth and we don't have huge leverage and huge financial bubbles. And that is a fundamentally different macroeconomic problem that calls for fundamentally different macroeconomic strategies, of which there may be a role for inflation targeting, but it is largely beside the point in a world where the real problem is insufficient price inflation and excessive asset price inflation. And we need to adjust central banks' paradigm to take account of those realities. Look, if I can say one more thing, the world's financial leaders said after Dodd-Frank was passed, after the Financial Stability Forum did all its things, that we now had a much healthier financial system that could continue to function without large-scale bailouts. Less than 5 years after that was definitively proclaimed, we've had the biggest set of actions directed at propping up the financial system in global history. And while it's looking okay right now, as Raghu said, we're not sure that even what we've done is going to be enough to hold. That suggests the need for a great deal of fundamental rethinking.
Let me just go. We're going to hold that thought. We need to get the polling answers, which I gather are pretty strong. So if we could just bring up what the response from the audience to the poll was. So that's pretty evenly split, actually. I think we gave people too many options, but there's certainly quite a lot of recognition that central banks need to think about new things and new toolkits. If you want to, we're going to go to some questions now. If you want to use the platform to submit some questions, I will be able to put them to this amazing panel. But Janet Yellen, what's your response to what Larry was just saying?
Well, I agree very much with Larry. I think he gave an excellent description of what the core problem is that the developed world faces, that there is a glut of saving and a shortage of investment, and that's why the effective lower bound is such an important constraint, and it's what really means that we have to have fiscal policy, structural policy, and things other than just relying on central banks to keep healthy growth with low inflation. I think central banks need to do what they can, but then not overstate what it's possible for them to do. The Fed has recently concluded a strategic policy review and made adjustments to its monetary policy strategy, adopting a system called flexible average inflation targeting. I think this is an appropriate change. It somewhat improves the scope for monetary policy to support the economy when short-term interest rates are often constrained by the effective lower bound. I think it's helpful in preventing a cycle of falling inflation, feeding falling inflation expectations. But, well, I strongly believe central banks need to be independent and need to do everything they can. The changes they've made, they're not a game changer from the point of view of secular stagnation. And bottom line, I agree with Larry on what's required.
You talked a lot about the importance of fiscal policy at this moment. I have to ask you, would you like to be more closely involved in that as a Treasury Secretary for the new administration?
I don't have anything for you on that, I'm sorry.
You don't think you'd be a good Treasury Secretary? Could I ask you that? I could probably ask the rest of the panel that.
It's for other people to decide, I think.
Yeah, well,
Raghuram Rajan.
Yeah, she would be a great Treasury Secretary. But let me talk about another issue, which is related to Larry's secular stagnation idea. I mean, in some sense, the hope for the world was that fast-growing emerging markets and developing countries would provide that demand, which sorely seems lacking at the aggregate level. One of the big concerns we should have with this pandemic is how much scarring has gone on in those economies because they haven't had the ability to provide the kind of fiscal as well as credit support that industrial countries have. So my worry is, apart from the North Asian economies, which seem to have come out quite well from this crisis, many countries in Latin America, Africa, South Asia are going to suffer some diminishing in growth potential going forward, coupled with some of the impediments to trade that we see. I think this is a cause for concern for the global economy. And it's something that we should do very much, work very hard over the next few years to try and reverse. And that's where Larry's call for global sort of leadership, I think, makes a huge, is of huge importance.
And where should that leadership come from if we don't think central banks should be claiming that they can solve all these problems alone?
Well, right now it seems that there is likely to be change in Washington. Historically, it's been the United States which has taken the leadership. In 2008, 2009, it was, of course, Gordon Brown who, essentially corralled the G20 into doing some of the important actions Larry talked about. But we need somebody to actually take leadership now and corral the countries to doing more, giving direction to the IMF and the World Bank, and as well as perhaps getting some central bank action into this if necessary.
The world central bankers are part of the financial G20. They should be calling for urgent action in the communiques of the financial G20, which ultimately should lead to a leaders G20. The world needs the kind of G20 meeting that took place in London 3 months into President Obama's term to set the terms for a strong global response. This doesn't involve any significant burden on taxpayers in the United States or other industrial countries. SDRs, more aggressive financial engineering from the World Bank. The IMF has twice as much gold by value as it did a decade ago. Because of the appreciation in the price of gold, there's no reason why it can't be backed to help support doing more for the poorest countries. The private sector has not engaged in any serious way on debt relief and restructuring for emerging markets. We all talk about cooperating with China on the most important global issues. There needs to be cooperation with China on the whole set of issues around support for emerging markets. If central banks could explain not that they can do it, but that ultimately the financial stability of all the institutions they're responsible for, the financial stability of their economies, depends much more urgently on achieving successful global cooperation than it does on anything else. If they could make that case, they would be making a much greater contribution to the current global moment than they currently are.
Mervyn King.
I think it's much more difficult than that. In 2010, the issue was to bring countries together and allow them to do what they all wanted to do individually anyway, which was to ease policy and to deal with a rather narrow problem in a way of collapse of the banking sector. The issue we have now is much broader than that. The problems of emerging market economies or low-income economies are one thing where global cooperation could help. But dealing with the underlying strategic issues facing the global economy is something rather different. And the problem is not the mandate of central banks. It's not the toolkit of central banks. It's actually understanding the forces that are leading the economy to grow very slowly. And understanding what's going on is far more important actually at present than the mandate or the policy framework. That, I think, is what needs to change. And it isn't just expansionary fiscal policy because interest rates are close to zero. It is much, much wider than that to deal with this problem of excess saving in the world as a whole means lower saving rates in some countries, but higher saving rates in others.
Mervyn, sorry. Go ahead.
I agree with Mervyn, but I think the world looks to the central banking community to explain the nature of the macroeconomic challenges before it, even if the central banks themselves lack the tools to deal with it. And if the central banking community can explain, as Janet just did, as I tried to a little bit in talking about the absorption of saving problem, if that problem can be laid out clearly, that is the first step. Doesn't solve it to lay it out clearly, but it's a crucial step towards the whole range of measures. And you're absolutely right, Mervyn, that it involves a million different things that are necessary to resolve it. But first, we need to define that problem, and that's something central banks can surely do.
I totally agree. And I think the distraction of moving to other policy issues is taking central banks away from what they should be doing, which is explaining this central global challenge.
We could have this conversation all afternoon. I would really enjoy it. It's been a fantastic conversation, but we must move to the next session now. So Lord Mervyn King, Raghuram Rajan, Janet Yellen and Larry Summers, thank you very much.
You've been listening to a panel with former Fed Chair Janet Yellen, as well as former BOE Governor Mervyn King, former RBI Governor Raghuram Rajan, and former Treasury Secretary Larry Summers. A really interesting conversation at the Bloomberg Economy Forum. You can continue to watch the panel on LiveGo and Bloomberg.com and www.neweconomyforum.com. All of this taking place, Guy, with the backdrop of rising virus counts, questions about whether or not we're going to see fiscal stimulus from the U.S. and when, and recovery fund questions in Europe as well, and then emerging markets really leading the way. Hank Paulson right now is also speaking. Let's listen in to what he has to say.
Prosperous future. So I'm delighted to join this forum in its third year, and I'm pleased to see how it has grown and thrived. It's worth recalling that when we gathered for our first meeting, the outlines of our stormy present were already apparent. I remarked then that we'd arrived at a moment of change, challenge, and potentially even crisis. I warned that the prospect of a crisis between the United States and China was leading to the risk of an economic iron curtain. Fast forward 2 years. It gives me no joy to report that those warnings have been borne out. The U.S.-China relationship has become more fraught. We've seen more tariffs. We've seen heightened restrictions on the flow of technology, disruptions in supply chains, more restrictions on investment, and fewer capital flows in fewer sectors. We have fewer exchanges, and fewer students and scholars are heading in either direction. Visas have been revoked. Journalists have been expelled. Consulates have been closed. Proposed acquisitions and investments have been denied. Political rhetoric has become more inflammatory, and it has given us a taste of how debilitating strategic turbulence can be. The pandemic has made the situation worse. The U.S. and China need to work separately, jointly, and with others to end this crisis, and soon. President-elect Joe Biden has a generational opportunity to plot a course for America that allows us to compete and to thrive. I've known Joe Biden for many years. He's a unifier and a patriot. The American administration is about to change, but the clock will not simply be rewound. The Trump administration was responding to real concerns of American people about China and real failures of China to act as a responsible global citizens. The question is how we respond to these legitimate issues. One perverse benefit of the tensions that have characterized the last few years is that the dimensions of U.S.-China strategic competition have become much clearer. Even those of us who didn't agree with every policy choice in Washington or Beijing have come to understand that while new leaders can bring new policies, competition between big powers, and especially between two big powers with rival ideologies, very different political systems, is mostly structural. Competition is now baked into this relationship. A competitive approach to China was inevitable, but keeping it healthy and not pernicious is vitally important, and that won't be easy. To compete effectively, President-elect Biden will need to get the dimensions of competition with China right. So what does that mean? For many Americans, the goal of China policy has come to be one thing: achieving reciprocity. To most people, that means we will do with China only what China does with us. We will punish China when China harms us. The ongoing administration made this idea of reciprocity the very foundation of its strategy toward China. The strategy declared that the U.S. would welcome economic relationships rooted in reciprocity, implying that America would shun any and all economic relationships that lack it. This vision was welcomed by many at home and even some allies. At one level, this isn't surprising. It speaks to an American fundamental sense of fair play. It's simply unreasonable for Beijing to expect the rest of the world to keep its markets open to China unless China continues to open its markets to the world. I've long made this argument myself, but this cannot be the end of the story. Here's the big challenge. America has an open economy, which is our greatest competitive strength. China, by contrast, has an economy that is closed in many areas. But whenever an open economy mirrors the actions of a closed economy, the open one inevitably starts to close itself off too. If achieving reciprocity makes America's system more like China's, America will ultimately be the loser. We can't remain competitive if we become more like China, with its closed status model, which I believe isn't going to stand the test of time. So it's time to adapt our principled desire for reciprocity to the evolving and real-world needs of American workers, farmers, ranchers, and businesses, both small and big. It's time to move from reflexive reciprocity that responds fiercely but erratically by doing unto China what China does to us, to a policy that I call targeted reciprocity. We need reciprocity targeted to changing needs of the American worker. We need reciprocity targeted to keep American businesses competitive. We need reciprocity targeted to ensure that job-creating capital continues to flow to the United States. We need reciprocity targeted to ensure that best-in-class companies want to remain headquartered in the United States. We need reciprocity targeted not at anything and everything China does. Instead, the U.S. should aim its demands for reciprocity at sectors and areas where America is the strongest and most competitive. Above all, we need reciprocity targeted so that America doesn't become less American in the bargain. We must shift from reflexive reciprocity to targeted reciprocity that holds China's feet to the fire without making it harder for Americans to thrive. Targeted reciprocity would shift our strategy from reactive to proactive. It would leverage what's best about America without losing sight of what's most competitive about America. But the path to success begins at home. And the first step is to reinvest in the policies and values that have made America thrive. Many people fret that there will be a military crisis between the United States and China, and with good reason. But this is an economic competition, not a military one. Economic power is the foundation of military power. Economic power made America the world's growth engine. And economic power enabled China to become a growth engine more recently. So if Americans want to compete with China over the long term, we must re-energize the system that has made our country the envy of the world for generations. We must prove our economic model is better than authoritarian state capitalism. Our success or failure here will be the key to American global leadership, no matter what China does. We need to look to the future and design an economic recovery program that bolsters our competitiveness. That means supporting innovation, upgrading our social safety net while maintaining incentives to work, investing strategically in infrastructure, reforming immigration policy, and importantly, addressing our structural fiscal deficit. Targeted reciprocity is the best means to execute this agenda. And that brings us back to China policy. The first priority must be rebuilding the global economy in the wake of COVID-19 and creating job opportunities for Americans while reducing economic disparity. As the two largest economies, it is in the interest of Americans, Chinese, and the world that the U.S. and China find a way to reboot global economic growth. Relentless, debilitating competition, where the two governments seek to curtail all trade, investment, and technology flows between them, will make that very difficult. Of course, investments that threaten our national security should be prohibited. But we must be careful to avoid sequestering so much technology that American companies lose their ability to commercialize and deploy their products in the world's fastest-growing markets. Companies need to know where the U.S. and China are going to cooperate, where they are going to compete, and where they are adversaries. We need major adjustments to our economic relationship with China, but we must reject the increasingly popular idea that merely having an economic relationship with China is somehow bad. What we need is one that is better suited to America's own interests. The economic linkages that are the rightful source of so much tension today do, in fact, benefit us in important ways. So here's what an agenda built on targeted reciprocity looks like. President Biden is a multilateralist. He understands we should be working with other nations to press China for structural economic changes. Biden should coordinate with leading economies to upgrade the global trading system in its governing bodies, like the WTO. Global rules for trade, investment, technology, the environment, and the digital world now lag behind reality and must be updated. If these allied economies can agree on a framework, they will be in a far stronger position to invite China to join, if it's willing to meet their agreed standards. If Beijing refuses to join this effort and remains inflexible, we should look to a punitive toolkit built on targeted reciprocity that includes jointly withholding access to our markets. Of course, that brings us to the question of bilateral tariffs, which have been the central feature of the Trump era. Tariffs are a tax on Americans. Their erratic application has harmed the U.S. reputation as a global supplier and a safe harbor for investment. Much of the damage has already been done, and still our trade deficit with China continues to rise. So we should now link tariff removal to a new bilateral trade agreement. The Biden administration should initiate a comprehensive new round of bilateral negotiations with China. It should aim for a fair, sweeping, and reciprocal trade relationship based on more meaningful competition. Here is the nub of the strategy. Instead of President Trump's emphasis on outdated, ineffective purchase agreements, we need to focus on the future by opening key areas to investment and export. We must tackle the market distortions of China's state-owned firms, and we'll need to deal with structural and process issues that include services, not just goods. The agreement should be done in phases with regular deliverables, beginning with easier issues that build momentum to tackle the tough ones. In return, the U.S. should be prepared to open its own markets. We also need to be more consistent and predictable. Achieving this will be hard, but it will be helpful in creating jobs and assuring a more fair and equitable recovery. President-elect Biden can expand market opportunities for Americans and bolster global growth in the bargain. Another important component of a refreshed agenda is to forestall environmental catastrophe. Climate change is the most certain and formidable economic challenge the world faces. As governments develop their post-pandemic recovery strategies, promoting environmental goods and services should be a core part of fiscal stimulus plans. China took a positive step with its carbon neutrality pledge, but we should consider climate change as another economic issue that demands targeted reciprocity. For one thing, working with China is in our self-interest. If we want to prevent the worst climate outcomes and preserve essential and fragile global ecosystems, we need China to solve its massive environmental problems at home and adopt better practices abroad. America also needs to capitalize on huge economic opportunities in China and globally. That means ensuring opportunities for our businesses to invest in and export clean energy products and technologies, as well as environmental goods and services. The Biden administration plans a fresh start in climate diplomacy, beginning with the Paris Agreement. So we'll have a new opportunity to rethink the international climate architecture. By now, it's clear that aggressive, voluntary climate targets are insufficient. We need to create a structure with teeth, one that focuses on the major economies, including China, and deals squarely with the problem of free riding and creates strong incentives to curb emissions. This should include jointly bringing clean energy technologies to the scale necessary to address climate change. We each also need to provide incentives to channel private sector capital into innovative solutions that support green development and value nature. In the same spirit, our two countries should lift tariffs on environmental goods and services. China has resisted WTO negotiations to do just that, making it difficult for U.S. firms to fully participate in an estimated $3 trillion opportunity in China to help clean up its polluted air, water, and soil. Once again, targeted reciprocity can be a negotiating tool and lever to help all of us, including Beijing, make concessions that are in the global public interest. Ladies and gentlemen, the discussion at this forum is vital. We're in the midst of a turbulent and painful period. Yet for the first time in years, we have opportunities to make a fresh start. Our first goal must be to crush the virus. Our second should be to reduce the risks, unpredictability, and volatility that have damaged our citizens' livelihoods and businesses both large and small. This is President-elect Biden's essential task, and it is our essential task. Getting strategic competition with China right will, quite simply, have to be part of this. Competition without unnecessary confrontation should be our goal, because confrontation without effective competition has produced some poor results for the American people. It has damaged our economy. It has stunted our export opportunities. In time, it will threaten the peace of the world, and it does not make us safer. And so we will have chaos and conflict if we cannot get this right. This is in no one's interest. Not America's, not China's, not the world's. A clear-eyed but productive U.S.-China economic relationship built on targeted reciprocity is what we need now for the United States to restore and strengthen its global leadership, create a safer America, and support world peace. Thank you very much.
And of course, Hank Paulson there.
OK, the former US Treasury Secretary Hank Paulson speaking at the Bloomberg New Economy Forum. Targeted reciprocity. You think about that in the context of the Cold War, containment, rollback, all of those kinds of phrases. I wonder whether you can add targeted reciprocity to that. Hank Paulson there talking about the transition as well from cooperation to conflict. Henry Kissinger talking about that as well. In fact, he had this to say on another panel earlier on. America and China are now drifting increasingly towards confrontation, and they're conducting their diplomacy in a confrontational way. The danger is that some crisis will occur that will go beyond rhetoric into actual military conflict. Henry Kissinger. Kissinger, of course, obviously famous, Alex, for the kind of late 60s, early 70s détente that ultimately ended, some would argue, in the Soviet invasion of Afghanistan that very much concluded détente. So it's interesting the kind of the different approaches, that are being taken here. But clearly, the language and the advice being given to the Biden administration very much being couched in Cold War terminology.
Yeah, and interesting also because of the news over the weekend about Asia-Pacific nations like China, Japan, South Korea, basically signing by some metrics the world's largest regional free trade agreement. It's called the Regional Comprehensive Economic Partnership. It's kind of a mouthful, but you're basically looking at about $26 trillion worth of goods that are moved around. It's about 30% of the world's GDP. It's going to make trading a lot easier. Now, the difference between that and the Trans-Pacific Partnership was that China's now actually involved. So what that winds up doing when the U.S. might have to rethink their strategy under a Biden administration towards China would be extremely interesting.
Interesting to take it back to the Cold War. Spheres of influence, hegemonic spheres of influence were a dominant theme during that era as well. And it's, again, you go back to the Clausewitz and you kind of think about the fact that he described war in very kind of mercantile ways. The two, he said, were very much hand in hand, and you could certainly see that maybe playing out. Let's get back to the markets and talk really about what's been driving things here today, because it's more about the vaccine story that has really been front and center here. The stock 600 up by 1.31% over the last 6 days, because I'm going to include last Monday. We are up by around 6.5% on the stock 600, but today adding more to the upside, and you can see the move higher we got as a result of the efficacy rate being published by Moderna for its ribonucleic messenger ribonucleic acid vaccine that it published the details of earlier. So that's been the market impact. Let's talk a little bit about what's happened kind of across Europe and broadly through some of the other asset classes as well. I bring up Madrid once again. What we're seeing in Milan today, again, highlighting the fact that we are seeing peripheral Europe responding. These are service sector economies that are very much driven by tourism. That is one area we're seeing a benefit. The DAX is up less, understandably. It's more engineering. The CAC 40 up by 1.92%, certainly benefiting from the uplift that we're seeing today. But it is across a bunch of asset classes that we are seeing this uplift today. Oil, close to Alex's heart, trading higher as well, off its earlier highs, but still up by over 3%. And unsurprisingly, we're seeing a sell-off in the bond market, though it wasn't that way first thing this morning when I got into the office. The interesting thing is very little movement in both the bond market, you can argue, and also in the currency markets. This looks like it really is kind of in the commodity markets and in the equity markets that we're seeing the effects of the vaccine really being felt. Some interesting stock stories as well. We'll talk about these in more detail in just a moment, or two of them at least. IAG over the last 10 days is up by 65%. This is the owner of British Airways and Iberia. That stock really flying at the moment, to excuse the pun. We'll talk to an analyst from Citi in just a moment about that. And then we've got this BBVA sale of its US business to PNC. That really has had a huge impact on the banking sector here in Europe. So BBVA is up by 16%, but people are talking about that cash being deployed to make a major acquisition. Sabadell is being touted as being possibly the main target. Sabadell is up by 25% today on the back of that, and best performing stock on the stock 600. Alex.
All right, let's dive into more of that. PNC's purchase of BBVA's America's banking operations. Joining us from Madrid is Bloomberg's Charlie Devereaux. Hey, Charlie, why now are we seeing this deal maybe get done?
Well, hi there. Yes, well, I think this is a happy coincidence where you have one bank that's flush with cash and one that was sorely in need of a capital injection. You've got PNC, which had a $15 billion hole burning in its pocket after selling its stake in BlackRock back in May. And on the other hand, you have BBVA, which has one of the lowest capital ratios in Europe and whose business in the U.S. had been really struggling. It had had to take 4 write-downs on it in 13 years and 2 in the last year. So certainly from BBVA's point of view, this seems like a pretty good deal because it's receiving something like 2.5 times the value assigned to it by analysts.
Sabadell's flying higher today. What is the cash now in BBVA's pocket going to be spent on?
Well, that's a pretty good question, and certainly that is one of the options. And in fact, we've just had some news out in local media that BBVA has hired JP Morgan to advise it on a potential acquisition of Sabadell. But actually, management today tried to stress that they did have other options as well. One of them was possible M&A in its key markets, but others could be share buybacks and organic growth.
So this is like the rotating ball of money from that sale of PNC and the BlackRock's stake sale. So where does this leave then U.S. and European banking systems? This is a huge growth channel as well for PNC.
Yeah, it seems like that. This is an opportunity to move into another region and leapfrog its rivals. And we'll have to see if other regional rivals respond with their own expansions.
Charlie, we'll leave it there. Thanks for the analysis. Bloomberg's Charlie Devereaux on the transatlantic banking story that has lit up the story on both sides of the pond. Let's get back to the main story, though. Moderna says its COVID-19 vaccine 94.5% effective in analysis of a late-stage clinical trial. Data shows the vaccine prevented virtually all symptomatic cases of the virus in the 30,000 patients involved in the trial. Earlier, we spoke to Stéphane Bancel, Moderna's CEO. This is what he had to say. OK, we'll bring that in a little bit later. Joining us now for more and to get his take on the news that we've had from Moderna is Bloomberg's very own Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst and Director of EMEA Research. Sam, I think Alex hit the nail on the head right at the get-go of the interview with Stéphane, and that was this is an effective drug like the Pfizer one, an effective therapy to deal with COVID-19, an effective vaccine, should I say, but it can be stored at a much higher temperature. Is that the key difference here, and how important is that?
Yeah, sure, Guy. I mean, obviously, we're talking still about pretty cold temperatures, minus 20 Celsius. But remember, minus 20 Celsius is similar to most freezers, deep freezers that even I have one at home. So that becomes a lot less of an issue for this vaccine. But of course, you do have the fact that, we don't think that in the developed world, at least, there's an issue with using even the minus 70 vaccine that Pfizer and BioNTech developed. And let's not forget that the Ebola vaccine that's basically used in Africa also needs very, very low temperatures for storage, and that's not hindered its use. So this is a win because it just makes life a little easier, but it can't be the only reason that you choose one vaccine over the other.
So, Sam, Guy and I were pumping you for questions before the Moderna interview to get your take. And I wonder, what wasn't answered? What are some of the bigger questions that the market participants need to pay attention to?
Yes, obviously, the one thing about the elderly population, which I heard you ask, and you said, well, we don't know yet. And, so we've calculated it. Obviously, it at worst, it can be 50% protective. Because you only had 5 cases of infections or disease in the vaccine arm, and there were 15 total elderly people in the trial so far with cases. So at least 50% protective, and I'm pretty sure it will end up being more like 60-70%. And why do we focus on this group? Because they're the ones who are most at risk. You put that together with the fact that of the 11 cases which had severe disease, none were in the vaccinated group. We're in a pretty good setup here.
The other question I was fascinated to ask him was about mink and what happens if we get a mutation and whether or not messenger RNA would be the right kind of, would be the best way of dealing with that. And he certainly seemed to suggest that it was. Why is that, Sam?
Well, yeah. So, Guy, he's absolutely right. I mean, we do have to worry about mink and non-mink and any other source of mutations. Remember, when this virus is rapidly spreading amongst humans, it could even have a better opportunity to mutate and evade our immune system if that's going to happen. So the beauty of the mRNA vaccines is that you can just put another, all it is a chemical synthesis, essentially, of a long piece of RNA, and you just swap it. You put the new one in from the new virus. with the hope being that it would be as effective in inducing an immune response. So that has to be studied. But the process of getting to the next vaccine is a lot faster than in normal circumstances.
All right, Sam, thank you so much. Always good to catch up. Sam Fazeli, Bloomberg Intelligence, thanks very much, and thanks for your help earlier as well. All right, want to get more insight then on the rally in the travel sector, because Moderna news came after Pfizer news last Monday, but the effect is a touch different. Joining us now on the phone is Mark Manduka, City Associate Director of EMEA Research. Hey, Mark, we saw a tremendous rally last Monday on the Pfizer news. Today's a little muted. Walk us through what you're noticing in the travel sector.
I see it as a positive. I mean, the good news here is coming thick and fast, quite frankly, in terms of catalysts. And we've, obviously, as you mentioned, we've had one vaccine, now another vaccine, and the positive news is not over. I mean, we've got a stream of updates coming in the near term, whether it's North Atlantic reopenings, whether it's more testings, lower quarantine times, fewer lockdowns. It's all potentially coming in the next month. So I think it's clearly too late to be bearish, at least in the next few weeks. But I think the most important point of all, which you touched upon, Alex, in this segment, is the airline and broader aviation sector here has been in the wilderness for so long. We've been sitting, as an industry with such significant underweights, and particularly those institutional investors sitting on those underweights in the last 9 months. And therefore, ahead of year end, there's going to be a lot of emotion, a lot of chasing, momentum, and these very same investors are going to be filling the gaps, these underweights in their portfolios. So I think it's going to get quite irrational, potentially a stampede. The question I would ask, though, is, are we actually fundamentally out of the woods yet?
And what is your answer?
Always good for a rhetorical question, Guy, I guess, in terms of thinking about, the negatives that are out there. The first thing I'd say is let's just take a step back. What's the smart money going to do here? I personally would be saying, it's probably too late to chase, and we're going to get overextended in the next few weeks, possibly, few months. And I look at this and I say to myself, once the steam has come out of this, once the overextension is there, what do you do? Well, valuation is a bit of a dirty word right now in the airline space. We've used that in our lexicon for a while, certainly not in the last 9 months. And instead we favored phrases like momentum and catalysts. Anyone who's got a modicum of fundamental backbone here is going to have at least a bit of a pause for thought with all the euphoria. And the truth here, I think, is very clear that if you look at the valuations of these companies, and like I said, I appreciate that there's momentum at the moment, but you're trading at peak multiples on close to peak earnings for most of these names right now. And therefore, if you've got a sense of what happens to the corporate recovery, what happens to the leisure recovery next summer, if we get any sense of a misstep now, those peak valuations, those peak earnings out there that are being forecast, I worry. And also, have a think about this. Yep. These companies are going to be looking at their share prices on enterprise values that are bigger than they were even pre-crisis. Look at Lufthansa, for example. And if there was ever a risk of a big rights issue coming, surely it had to be now.
Yeah, well, that's exactly where I was going to go next. How big could that dilution be? Because that strikes me as being the massive risk, not just in this sector, but elsewhere. These companies have been beaten up. They've been searching for ways to raise money. The market is now providing them with one. How big could some of the dilutions be? Because they look massive potentially.
I'm going to answer your question very bluntly. I mean, the fundamentals still remain challenged with or without a vaccine over the next 6 to 12 months for airline travel. The news is not going to provide a magic fundamental bullet for a demand recovery, despite it being the obvious step in the right direction of what we've seen in the last week, as Alex was mentioning. The demand curve is still going to be uneven and truncated. And if you speak specifically about what your previous guests were talking about, adoption rates, true safety, dosages of all these actual vaccines are still very uncertain. And then there's the corporate market. That's still going to be reticent. Employees are not just going to be sent abroad now willy-nilly because there's a vaccine. So the airlines this winter are still going to be burning cash. And as you say, Guy, they're going to use it as an opportunity. So let's name two specifics. EasyJet, are they still going to likely raise 400 to 500 million of additional cash? I don't think the winter outlook has changed too much off the back of what we've heard in vaccines in the last few weeks. Lufthansa, does it still likely need more than 3 billion? Well, of course it does. It's taken out a significant chunk of money from the government, and that will need to be paid back. Winter is still going to be tough. Like I said, the vaccine doesn't change this trajectory, and the dilution is still sitting on the cliff of Q1 next year.
Hey, Mark, you brought up the European guys, just a quick question on the American airlines. You know, does this make the case of getting more stimulus for the sector in Washington less appealing? Like, are they going to have a harder time doing that now if you have this monster rally in the stocks?
I think it's always difficult to say how governments are going to get involved in certain sectors. You know, I think, you know, when you see airline share prices go up across the world, not just in the US, it goes back to Guy's point about being able to suddenly solve the problem for yourself. Bigger market capitalizations mean that you can solve the problem yourself. It becomes difficult when other sources of capital dry up and your market caps are low. But when your market caps start to become buoyant, that is when you start to get capital raises and self-funding taking place and the lesser need for government involvement.
Always a pleasure. Mark, thanks very much indeed.
Thanks,
Mark
Guy.
Van Duker, City Associate Director of EMEA Research. Airline stocks certainly flying higher over the last few days here in Europe. Let's take a look at where the broader markets have settled. A positive day, but very different to last Monday. We have seen the similar sort of rotation within the sectors. The cyclicals certainly getting a pop today. FTSE 100 outperforming. We'll have more on what's happening in the UK in just a moment. Don't forget to tune in to Bloomberg Radio at the top of the hour, the cable show. John Ferrer and I will be walking you through that hour. We'll go back to this Moderna story and talk more about that. This is Bloomberg.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
That they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We don't have a sort of fixed order of use of tools, and I think that's appropriate. It would always be dependent upon the state of the world and the state of the economy that we found ourselves in.
So Brexit talks are entering another critical week. Officials from both sides say the coming days will be pivotal as they seek to reach a deal that can be ratified and implemented before December the 31st. Joining us now is Anand Menon of King's College London, UK in a Changing Europe initiative. Good afternoon. So another pivotal week. James Slack, who is the Prime Minister's spokesman, briefing reporters earlier on, talking about there being no change in the UK's approach. Do you think the departure of the Vote Leave crew from 10 Downing Street is going to have an impact? Do you think a deal is possible?
Yes and yes would be my answers to those questions. Yes, Dominic Cummings leaving will have an impact, if only because it causes a degree of chaos in number 10. The Prime Minister now has to replace him. He has to find himself a new team. He's got to think how his government's going to work. So if only in that respect, it reduces the amount of time and attention that can be paid to the Brexit negotiations. But a deal can be done, yes. And in fact, I think it's probably the case that for 3 or 4 months, everyone has known what a deal will look like. We're just waiting to see whether the two sides will give ground in the areas where they each have to in order to make that deal possible. And that's why the issue of the Prime Minister's time is crucial, because ultimately it seems to me that on our side in the UK, the Prime Minister has to have a very frank conversation with those around him and decide whether he thinks it's worth making the compromises to get a deal or whether politically it's not worth the candle.
So, legit question, can he do that in isolation?
Yeah, absolutely. I mean, he's still, as far as I know, working from number 10. I imagine, he's got access to Skype, Zoom and phones, so he can talk to people. It's not the same, absolutely, but he can talk to those around him. He can talk to senior members of his government. I think one of the questions has always been whether or not he's getting conflicting opinions from different people. I think there are some in his inner circle who favour a no-deal outcome. There are others who are very worried about it, but ultimately he's just going to have to make up his own mind and act accordingly.
Lord Frost is still leading the negotiations. He was part of that Vote Leave crew and was certainly very close to them. The fact that he remains, how should I read that?
I'd correct you slightly. David Frost wasn't part of the Vote Leave organisation during the referendum.
But he was close to them.
Well, he certainly outed himself as a Brexiter and has espoused quite a hard version of Brexit. So I think him being there means that the UK, and I think actually David Frost's views are pretty much those of the Prime Minister's. So there's not going to be a reversion to a very soft kind of Brexit, certainly. The big question in the Conservative Party at the moment is the division between those who think it's worth making concessions to get this rather thin trade deal that's on offer. People like Michael Gove, who is probably, for Brexit matters, Johnson's second in command, certainly thinks it's worth getting a deal. But there are others who actually think, given that getting a deal will still mean significant disruption, it might be in our interest to go for no deal, because at least that way we can blame the European Union for anything that happens in January.
Anand, what role, if any, did President-elect Biden play in the conversations at 10 Downing Street over the last couple weeks, specifically when it comes to kind of reshuffling his inner circle?
I don't think it had anything to do with reshuffling his inner circle. I think the tale of the drama in Downing Street is a tale of personal jealousies, animosities that have been bubbling up for a while and was independent of the election of Biden. I think the outcome of the US election wasn't a major factor determining the direction of the United Kingdom, but I think in a sense it weighed towards the side of those who want to see the government take a different tack. And in particular, when it comes to foreign policy, Boris Johnson is setting himself up as a defender of the liberal international order. And in that sense, the election of Joe Biden will only reinforce that sort of thinking.
Is this a pivotal week? Can you just talk me through kind of how much time really is left? Because I seem to have had a lot of these kinds of weeks.
Yeah, and I seem to have spent an awful lot of time over the last 4 years describing weeks as pivotal, which means I'm reluctant to do so yet again. It's not, things can drag on. For instance, the European Parliament is meant to have a plenary session that will vote on the deal the week of the 14th of December. Now the European Parliament is saying, in extremis, we can arrange a virtual session, perhaps even between Christmas and New Year, where we can do that. So there is still time. But at the end of the day, you've got to bear in mind that this is a a text that has to be very, very carefully checked by lawyers. And then on the EU side, translated into a host of official languages. And all that will take time. So whilst we're probably not at the end of the road yet, I would say the end of the road is definitely hoving into view. And there isn't all that long left if we're going to end up with a deal that can pass all the hurdles it has to.
All right. Anand, thanks a lot. Anand Menon of King's College London. Thank you very much. Guy, when is the deadline? I just don't understand when I'm supposed to care again.
I don't think you're alone. I think, as Anand was saying, we have had many of these pivotal weeks. Maybe we'll have a few more. We were talking earlier on about what's happening in European banking, Alex, talking about what's happening with BBVA, a redhead crossing the terminal while we were having that conversation. BBVA says it is in talks with Sabadell on a potential merger, basically spending that hot cash in its pocket that it's got from PNC that now looks like it's going to generate further consolidation within the European banking space. And banks certainly one of the prime drivers today here in Europe. There are the share prices. Sabadell, the target now, it seems, up by 24%, Alex.
Yeah, that rotating ball of money from selling that BlackRock stake from PNC. Here in the markets, I should point out, it's a really interesting session in addition to the fact we get that Moderna news, because you're getting that kind of relief rally, right? Small caps at a record high, but tech not selling up by 0.6%. It was weaker earlier, and you're not really seeing that reaction in the bond market that you saw last Monday, which begs the question, what's actually baked into the market? Many strategists were saying, look, the Moderna news is baked in, so we're not going to see that much of a reaction. It looks like potentially they are correct. Where you're also not seeing it is really in the FX market. You're getting sort of the risk-on currencies taking a move here, but not the euro, which I found very interesting as well. Well, that wraps it up for me and Guy on this Monday. Coming up, you got Hank Paulson, former U.S. Treasury Secretary, will be joining Balance of Power with David Weston on Bloomberg Television and Radio, so don't miss that conversation. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
We have been here for quite a while. They have obtained the SVF license back in 2016. They've also been granted a license for the virtual bank. They will continue to play an important role in Hong Kong.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. Let's get a check on the markets. They're up again today. It's second Monday in a row. Abigail Doolittle is here. So, Abigail, feels a little bit like last Monday. Every morning we get up on Monday morning and we have a new vaccine candidate.
It certainly does. Deja vu all over again, David. We do have a nice risk rally here for stocks, popping by more than 1%. The S&P 500, the Dow, the Nasdaq not quite as much, and that speaks to what we saw last week. So this week, of course, it's Moderna. Their vaccine candidate has been proved to be 94.5% effective in more than 30,000 volunteers. So we have this nice cyclical rally. Moderna itself is also popping, and that is the reopening trade. So we have folks looking at 6 to 9 months, hopeful that we will, in fact, have an economy that will be able to normalize more so if and when this vaccine, and it doesn't seem like if, it's a question of when the vaccine really gets out there on a more widespread basis. Now, of course, this is bringing what we also saw last week. So we have the travel and the leisure stocks really popping sharply higher. On the other hand, the stay-at-home trade, the Zooms and the Pelotons of this year, those are down. It's going to be interesting to see how much of our behavior over the last, let's call it 9 months, David, trickles forward into the future, even as we do reopen. But right now, those stocks are being sold off. But the one piece, as you and I were talking about earlier, not quite fitting into the puzzle, bonds just about flat. So bonds are not selling off. That might speak to the more difficult month to 3 months, maybe even a little bit longer ahead, as the vaccine is really raging here in the U.S., or excuse me, the virus is really raging here in the U.S. ahead of the vaccine actually getting out there. So bonds a little bit more near term, looking at the reality. Stocks more optimistic, doing what the S&P 500 does, looking out 6 to 9 months, David.
Thank you so much to Abigail Doolittle. And later this hour, we're going to be speaking with Dr. Celine Gounder, NYU, a member of President-elect Biden's COVID Advisory Board. A short time ago, Hank Paulson, chairman of the Paulson Institute and former Treasury Secretary, appeared at the Bloomberg New Economy Forum, and he set out a comprehensive new approach to U.S. relations with China. Welcome now, Secretary Paulson, back to Balance of Power. So welcome, Mr. Secretary. Good to have you here. So let's spend just a minute on the New Economy Forum. You're having this at a time when we're about to have a new administration in the White House. And we're going to hear, actually, from the president-elect a little bit later, about an hour and 45 minutes from now, about the economy. What is the best advice for this administration coming in to try to get the economy in the United States and, for that matter, globally going again in the face of a pandemic?
So David, first of all, on the New Economy Forum, it's an amazing group because we've got 500 elite, business leaders, government leaders, academicians from all, from east to west, U.S., Asia, Middle East, Africa, and they're looking to the new Biden administration. They're looking ahead. I think there's sort of a profound sense of relief because business needs predictability. And and this forum is focused on crushing the virus because it's ravaging the world health and the economy. And so that's going to be a big focus here. And I think for President-elect Biden, his huge focus initially has to be domestically, right? And to crush the virus here, but we're going to need some more stimulus in the interim. And I'm really focused on the recovery package because, a lot of what I talked about was competing with China, but the road to success there begins at home. And it begins to the kinds of things we need to do to fix our economy and make it strong. And that has to do with everything from investing in education and reforming, immigration policies so we attract talent and upgrading our social safety nets for the most vulnerable. And I think a big part of it has to be a big part of it has to be sort of a infrastructure program that is going to emphasize not just bridges and roads, but technologies that are going to be the key to our long-term competitiveness.
So what are the prospects of that as a practical matter? You spent time in Washington, not just on Wall Street at Goldman Sachs. Can we get that done? Can we get the sort of big infrastructure package going that you say we have to have?
I think that's the $64,000 question. I sure hope we can, because one thing we've got for sure with the incoming president is he's shown an ability to work with Congress and cross the aisle. And I think he's going to need to put together a package that speaks to all of America, right, and speaks to the kind of reform. And I think there's general agreement we need infrastructure. And so the question is, how are we going to pay for it? And I think there's some interesting ideas to pay for it. And again, I want to see a package that's focused on our long-term economic competitiveness.
So, Secretary Paulson, let's turn to the subject of your talk at the New Economy Forum, specifically U.S.-China relations, because I think there was a lot of perception that whatever one thought, President Trump really did get the economy going again, largely through tax cuts, through deregulation, and that perhaps some of his tariffs on China, some of his trade war with China stood in the way of growth as a practical matter. We tend to think about this as either free trade on the one side or protectionism on the other. We had Wei Keqiang actually just come out at the New Economy Forum and decry protectionism. You have a sort of a third way, is the way I interpreted it.
Yeah, well, I'm not for protectionism. I'm not for isolationism. You know, I start off by saying, listen, President-elect Biden understands China. The team around him understands China. So I have confidence in that. But he's inheriting a relationship with China that's going to be fraught for the foreseeable future, because this is they're a strategic competitor. And this is structural. It's largely structural. You know, when you have an established power and a rising power, and the rising power's got a very different economic system, political system, ideology, competition is baked into the relationship. That's going to be a cornerstone of the relationship. So the key is, how do you have competition and keep it healthy without it becoming really destructive? And here, one of the points I make is the goal should be competition without unnecessary confrontation, because what we've seen is confrontation without effective competition isn't working for the American people. It's not making the world a safer place. And so as I think about the competition, it's largely economic. Sure, we're concerned. Of course, we're concerned about military competition, but at its core, it's economic, because our military strength is ultimately rooted in our economic strength and vitality. And so it comes down to, so how do we have smart competition that doesn't hurt the United States while we're trying to contain or hurt China, right? And so this is where I talk about targeted reciprocity. That key to the Trump administration's policy has been the idea of reciprocity, right? Deal with China as they deal with us, right. Open markets, in the U.S. that only as China opens them, for U.S. companies. And, that doesn't make sense. It sounds good at 100,000 feet, but if it's flawed to the extent that if we make ourselves look too much like China, we're not going to ultimately be as successful as we need to be. So again, I'm looking at, I did not favor the Trump tariffs. They're a tax on Americans, but they're also really make it hard for our businesses to be successful, to be treated as reliable suppliers. It doesn't make the U.S. an attractive destination for foreign investment. But as long as we've got those tariffs in place, most of the damage is done. So I think there's great opportunity for the incoming president to have negotiations to open up the markets where we're most competitive.
Right, and it's terribly important, I think, as I understand what you're saying. You didn't favor those tariffs, but now they're in place. You don't say that a President Biden should come in and just take them all off, there should be negotiation that tries to help try to create some of that structure of the competition you talk about. When you compete, you want to pick where you think you can do well and where you have to do well. You don't compete necessarily on all fronts. Where do you think the United States should say, we're going to compete there?
Okay, I'm going to pick one area right now because there's a good number of areas, but I'm going to pick an area in the environment, because one area where we know that there's going to be a change is climate change, because this is a key part of the Biden agenda. And so there's a lot of ways we can work with China cooperatively. You know, we have to if we're going to make any real progress here. But I believe we need to continue to treat climate change like any other economic issue. And so I don't like the fact that there's all kinds of tariffs on environmental goods and services. And China's got tariffs on environmental goods and services. And there's this huge market in China. There's a $3 trillion market as they continue to seek investment, you know, to clean up dirty air, dirty water, dirty soil. We've got great technologies in the United States, so we should look to open up that market. I also, you know, I am delighted that China, it's very important that they made the carbon neutral pledge. And I'm sure that, President Biden will rejoin Paris. But one of the things we have learned is that as important as UN voluntary agreements are, they aren't going to solve the problem in and of themselves. They're not going to come close to solving the problems. So we're going to need to put new structures in place involving the major economies, structures with teeth, and that avoid the ability of countries around the world to free ride and have real incentives to curb carbon. And so again, my point here is we need to treat climate change like any other economic issue. We're going to cooperate, but we're also going to negotiate tough.
Yep. And competition is in our DNA, I think. We love competition in the United States. But how can you compete when the competitor on the other side is the government? You said there are fundamental economic and political differences between these two systems. And I think right at the core of that when it comes to economics is they're state-owned enterprises. They are in the game. They're the ref and they're also in the game. Is it possible to structure this in such a way that we can effectively compete with the government?
Listen, I believe that we have a system that is better over the long term and is going to prove itself out over the long term. They have authoritarian state capitalism. Okay, so I think our system is going to prove to be better over the long term. I very much believe that. But in terms of opening the Chinese market, I think there's certain things that are going to be very difficult to change. But there are plenty of things that we can change there. And you're focusing on the right topic, because the Trump administration had been looking to open up, been looking to negotiate old style purchase agreements. And I think the key is to look to the future, to look to industries of the future and make structural changes. And, the protectionist tool of choice today is not really tariffs. It's regulatory barriers, subsidies, and so you need to work to break those down. And I think what the incoming administration should do is open a wide-ranging, a sweeping trade negotiation, investment negotiation with China, and looking at structural issues. And I think that they should focus on some of the things that'll be easier to get done initially. So you get some things done, and use some conventional and unconventional tools to force compliance. But a big part of this is going to be working with our allies. And I think the huge opportunity and challenge that a President Biden has is to restore global cooperation, right? And a key part of that is going to be figuring out how to work with our allies to exert maximum pressure on China.
Well, and that comes right on the heels of this major agreement, the regional comprehensive economic partnership that China participates in, involving an awful lot of Asia. Does that make the President Biden's job a lot harder?
It does. It does, as we've been absent for 4 years in terms of trade agreements, in Asia. it was just a travesty that we weren't there for the TPP, right? And so we look at the Chinese market being opened up for all sorts of other economies, and we're sitting on the sidelines. And so the key, basically, to success in our competition with China is leading domestically, strengthening our economy at home and making sure it's a model, and being a leader overseas. And I don't know how we're going to lead overseas unless we're going to get trade deals done. And we're going to have to, and that's going to be a challenge, because I will tell you, Republicans and Democrats, I regret to say, are becoming more isolationist. And how does that make sense in a world where 96% of the people are outside of the United States, and where a large part of the economic growth is going to be out of the United States? And so many people want to reject the idea out of hand, which is just absurd, that we don't benefit from participating in the Chinese market. Even today, as unbalanced as it is, we benefit significantly, and there's an opportunity to benefit much more, and to these other growing markets. Right. And it's a huge benefit that we have so many outstanding multilateral companies in the United States. Right. But how are they going to be as successful as we want them to be unless we resolve some of these issues? And we need to one of the things that the incoming president will need to do is work with China to determine where we're going to compete, where we're going to cooperate, and where we're going to be adversaries. And until we do that, it's going to be very hard for businesses to be as successful as they need to be.
And it's all called targeted reciprocity. Thank you so much. Hank Paulson, it's always a delight to talk with you. That is the former U.S. Treasury Secretary, Hank Paulson. Coming up, we'll talk with energy expert Elizabeth Sherwood Randall of Georgia Tech about what a Biden administration energy policy might look like. This is Balance of Power on Bloomberg Television and Radio.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid. But even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We turn now to Mark Crumpton for Bloomberg First Word News.
David, thank you. Former Secretary of State Henry Kissinger says the incoming Biden administration should move fast to restore lines of communication with China that frayed during the Trump years. Speaking at the Bloomberg New Economy Forum, Dr. Kissinger said if not, the U.S. could be risking a military conflict.
Unless there is some basis for some cooperative action,
the world will slide into a catastrophe comparable to World War I with a technology that is even more difficult to control than the technology of the period then.
Dr. Kissinger, who paved the way for President Nixon's historic 1972 trip to China, said he hoped the shared threat of the COVID-19 pandemic would provide an opening for political discussions between the two countries when Joe Biden takes office. One more sign that the fast-paced hunt by drug makers and scientists is paying off in the fight against the coronavirus. Moderna says its vaccine was 94.5% effective in a large late-stage clinical trial. The news comes a week after a similar shot developed by Pfizer and BioNTech was found to be more than 90% effective. New York City schools will be open tomorrow as the positive test rate for COVID-19 remains below 3%. A rising infection rate led Mayor Bill de Blasio to warn parents that schools may be closed today, but the rate dipped over the weekend. Mayor de Blasio said, quote, "We've got a fight ahead to keep them open." New York City's 7-day average of new cases jumped to more than 1,000, something de Blasio called very worrisome. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 scientists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there's a Google problem in this country.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects. The question is, what is the storehold of wealth in the meantime?
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We want to check in on those markets. Joining us now is Kaylee Lyons. So, Kaylee, we have a second Monday with equities going up because we have yet another vaccine candidate, I guess.
Yeah, that's right, David. We had Pfizer last Monday, Moderna today, and it's really Moderna that is driving this entire equity market at the moment. The company, the stock itself is about 8% higher, trading at a fresh record high after rallying the most since July on releasing its preliminary analysis of a late-stage, large-scale study of its vaccine candidate that proved highly effective, an efficacy rate of about 94.5%. Virtually all of the 30,000 patients involved in this study did not show any COVID-19 symptoms, did not contract the virus after receiving this vaccine. And another notable point was the stability data from Moderna. The vaccine is stable at a refrigerator temperature for about 30 days, so a longer than expected shelf life, which could ease the distribution challenge. So again, this data, though, is just preliminary. We expect the final results towards the end of this month, but the company said this could be a game changer. And Dr. Anthony Fauci, which of course is the top infectious disease expert in the U.S., called it remarkable. And as you said, David, it's not just Moderna, but we got something similar from Pfizer. That vaccine candidate uses similar technology to Moderna's, and both of these companies are expected to seek accelerated use authority from the FDA if they do indeed prove safe.
So, Kaylee, in the past, we've seen sort of a rotation out of, I'll call the stay-at-home stocks into the let's-go-out stocks. And I guess that some of the let's-go-out stocks are up today. But initially, the NASDAQ was down. Now it's back up in the green. So is it just taking everything along with it?
To a certain extent, you're still seeing a lot of those stay-at-home players you were referring to, the likes of Zoom and Peloton, are under a bit of pressure. They are lagging the outperformance in the broader market, but it's not so much that tech is down as everything else is significantly higher, specifically those cyclical sectors. Think energy, materials, industrials. It is those names that are leading in the S&P 500 today. And what's really noteworthy is the small caps, the Russell 2000 hitting a record high. Again, that is that pro-cyclical, pro-reopening. The economy is going to do better in theory trade that we are seeing play out, though you're not seeing, as you alluded to, big tech under as much pressure as we saw perhaps last Monday, but they are still lagging in a broader sense, David.
So it's clear that equities are liking what they're seeing, but do they believe it? And I guess I asked that question because if you look at the bond market, it's not entirely risk on. There's just a little bit trimming on the bond market. And also, I heard a rumor this morning that maybe the volumes on equity futures were not going up, which is an indication maybe they don't really quite believe it.
Or they already were expecting it, I think you could say, David. I think there's a question of how much of this was already priced in, given that Pfizer and Moderna's vaccines use that similar technology, and we know that Pfizer had that 90% efficacy rate in the data it released last week. Everybody was expecting something similar from Moderna, so it may just be, we already expected this good news, and therefore the bond market isn't reacting to such an extent. And you also can think about it on a time horizon. Yes, we're getting potentially a vaccine, but you have to scale it, you have to distribute it. All of that could take time far out into the future. The equity market may be willing to price it in that far in advance, but the bond market may be less so, David.
Yeah, and I don't want to look a gift horse in the mouth, that's for sure. Thank you so much to Kaylee Alliance, that great report on the markets. Coming up next, former Obama administration energy official Elizabeth Sherwood Randall on the transition from energy under President Trump to energy under a President Biden. This is Balance of Power on Bloomberg Television and Radio.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. A member of the Trump administration may be acknowledging that President Trump lost the election. Speaking at a global security summit today, the president's national security advisor, Robert O'Brien, is pledging a, quote, professional transition, end quote. Mr. O'Brien indicated that Joe Biden appears to have won the election, something other top Trump officials have been reticent to say. Over the weekend, the president tweeted, quote, I concede nothing, end quote. The head of NATO has spoken with the new acting U.S. Defense Secretary about the alliance's commitment to stay in Afghanistan as long as necessary. The conversation comes amid speculation that President Trump might order a rapid withdrawal of American forces in the country. Last week, the president fired Defense Secretary Mark Esper, who had tried to talk the president out of complete troop withdrawals from Afghanistan and Syria. Billionaire Steven Schwarzman has a way to make teachers stand out in the workforce. The co-founder of Blackstone Group said they should be the only group of workers in the United States exempt from paying income tax. Schwarzman spoke at the Bloomberg New Economy Forum.
It will mark them apart from all other types of employment as a valued class. It'll also increase their after-tax compensation significantly.
Schwarzman also noted that only 5% of children in public schools are learning computer science. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. President-elect Biden will come to office having laid out a vigorous policy for clean energy during the campaign. Georgia Tech distinguished professor Elizabeth Sherwood Randall served as Deputy Energy Secretary in the Obama administration after serving in the Obama White House as coordinator for defense policy, countering weapons of mass destruction, and arms control. So, Professor, welcome to Bloomberg. Great to have you here. Let's start with that plan for clean energy that Vice President Biden, now President-elect Biden, was very assertive on. How much of that can he get done without a majority in the Senate? Because that's up for grabs, as you know, in Georgia.
I think there's a lot that can be done because this is a strategy that will integrate energy, climate, the economy, and security agendas. And there, all Americans have a stake in a recovering economy after this pandemic is under control. And so I would describe to you quickly 4 main lines of effort that will be pursued, that will be doable and also achievable with cooperation across party lines. First of all, is to achieve greater efficiency in how we use energy today. That's actually a relatively easy win, improving light bulb efficiency, vehicle fuel economy, doing more with consumer goods, and pushing toward a decarbonized economy at home also positions our businesses to compete for global market share, which is growing for decarbonized goods. Second, we need to strengthen our innovation ecosystem, which is a huge American asset and will be a win-win for the American people, generating clean energy solutions and accelerating job creation, again, of interest across party lines. Also, this is going to have to be on a grand scale. It's going to include investments in lots of cross-cutting platforms that will support innovation in other sectors as well. We also need to invest in clean energy infrastructure to support the decarbonized economy of the future. And there is clearly bipartisan support for modernized infrastructure, hardening our power grid so that it will be the backbone of a new economy and one that's more resilient to the threats that it's facing. And fourth, we need to rebuild partnerships. There, I'll just note, President-elect Biden has made his career on reaching out across party lines. It's something I've seen him do since I first worked for him almost 35 years ago. He'll build bridges and coalitions in Congress, and he'll also reach out to the world so that America can lead again on this important agenda.
Yeah, that was very helpful in laying out how we might spur on, maybe on a bipartisan basis, some of the development of clean energy. But what about reining in, if I can put it that way, on the fossil fuels? Because he's also talked about things like cutting subsidies to fossil fuels, cutting back on fracking, at least on government lands. Can he get a lot of that done without support of the Congress, and particularly the Senate?
You know, I think the government needs to focus on developing all the tools that can contribute to radically reducing carbon emissions so we can meet our net zero goals by mid-century, the goals that President-elect Biden has set forth in his Build Back Better plan. The government will work on generating optionality because the needs of different cities and states and regions and countries will be varied. And we have to meet the needs of the workforce in each of those places. So in that sense, investing in technologies like carbon capture, utilization, and storage will be crucial for oil and gas countries. Similarly, we'll want to invest in lots of new technologies that haven't been invented yet to meet our needs going forward. So I have confidence that we'll actually bring the American people along with us in this bold endeavor, because it will be about a better future for all of us.
How much of this is the government spurring on or reining in, whichever it is, and how much of it is just the markets going in that direction anyway? When we heard the president-elect now say on the debate stage where there's going to be a transfer away from fossil fuels, that has already been going on, hasn't it?
It has been happening already, and the markets have moved ahead of us because in the last 4 years we have fallen behind, and other countries have taken the lead in developing their businesses, their technology solutions that they're bringing to market. That's why I said there's enormous opportunity for us with the greatest innovation ecosystem in the world, combining federal investment where the market isn't quite ready to put money, to grow new technology solutions like the Advanced Research Projects Agency Energy, ARPA-E, modeled on the Defense Department's famous DARPA, which can bring some technologies forward to the point that the market is willing to invest in those technologies and bring them to broad deployment. So I see this again as being really basically an innovation chain where the government invests where you need early investment and the private sector picks up when it needs to move out to market.
Professor, talk about one area that you were responsible for in the White House, as I said, and then over the Department of Energy, which is arms control, nuclear arms control. Do we have a sense of where President Biden will take that? We know that President Trump was trying to get talks started again with Russia.
So, of course, I'm speaking as a private citizen here, but I'll say I have worked with Joe Biden since the mid-'80s on arms control and know that he is committed to both ensuring the safety, security, and effectiveness of the American nuclear deterrent, which protects the United States and our allies and partners, and also to reducing our reliance on nuclear weapons and building collaborative regimes with other countries to ensure our mutual security. So there I have confidence, for example, that if when we achieve the transition that we just heard on your clip, the National Security Advisor has now said will be a professional transition. I look forward to seeing that happen. Then we will have steps taken after Inauguration Day to extend the New START Treaty, the last remaining arms control agreement between the United States and Russia, and a deliberate effort to build on that for new achievements in reducing the threat of nuclear war around the world.
As a matter of policy, would you advise, understanding you're a private citizen, would you advise that we go back in that intermediate range missile treaty that we pulled out of with Russia?
You know, I think we need to look at the full array of issues on the table between the United States and Russia. Russia has developed novel new nuclear weapons and new delivery systems over the past years, and we'll need to consider all of the elements of the equation as we develop a new approach to reestablishing strategic stability, which is at significant risk today.
And finally, let's talk about that transition you referred to. What are the risks at this point of holding off on that transition further? And in fact, there's changes being made in some of the areas that you were responsible for originally, Professor, in the Department of Energy, including the head of the National Nuclear Security Administration. Is there a cost in this delay?
Certainly, in my experience, when I had oversight responsibilities for the transition in 2016 from the Obama to the Trump administrations, we were extremely vigilant because we judged that adversaries would perceive the transition period as a potential moment of weakness. And so you want to be even more focused on security threats and ensuring that the handoff is absolutely steady without any balls dropped. In this case, because of the delay, you could see risk, although I also have confidence in the career people who are remaining in place to protect our security and look out for our interests around the world. I also know that the people who are working with the president-elect are extremely capable and competent and experienced, and they're going to be ready to lead on day one, regardless of what happens during this transition period.
So this is a terribly important point, I think, that many Americans may miss about the transition. And this certainly applies to energy, but more broadly. We see a lot of political appointees being fired right now, being moved out. But there is a civil service there, very smart, experienced people, a lot of intellectual capital that the president essentially cannot really change, right?
Well, he's sought in many cases to marginalize and penalize those who have sought to speak truth to power, who were among those career civil servants. Think about the diplomats, for example, who were moved out of their jobs because they challenged the president's approaches. We've seen this happen in a number of agencies on climate policy. But I also know that we have people who are willing to sacrifice their careers if they're going to be penalized because they know they need to do the right thing. And in this particular instance, what we are relying upon is the career military when you're talking about our security. And there we have a Joint Chiefs of Staff that do not change, that remain in place and that are responsible for our forces out in the field today around the world, ensuring our security and the security of our allies and partners.
Professor, it was really helpful having you today. Thank you so much for your time. That is Elizabeth Sherwood Randall of Georgia Tech. Coming up, we talk with a member of the Biden Coronavirus Task Force, Dr. Celine Gounder of NYU Langone. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Markets greeted news of another potential vaccine success story today with enthusiasm. How does the Moderna candidate compare with the Pfizer vaccine we got results on a week ago? And what lies between successful tests on the one hand and distribution on the other? Welcome now an infectious disease expert. She is Dr. Celine Gounder, clinical assistant professor of NYU Langone Department of Medicine and a member of the President-elect's COVID task force. So welcome, doctor. It's great to have you back with us. So give us your read right now on this Moderna candidate as opposed to the Pfizer candidate.
Well, there are some key differences. Both the Pfizer and the Moderna vaccines rely on mRNA technology, which is a previously unused. So this is somewhat uncharted territory. These will be the very first vaccines that we'll be using that are based on this technology. Both of them appear to be highly effective, at least based on the data that's been shared with us so far. One key difference, though, between the Pfizer and Moderna vaccines is the temperature at which the Moderna vaccine needs to be stored. The Pfizer vaccine, we've heard, needs to be deep freezed at minus 70 degrees Celsius. So that really is not something that the average doctor's office can accommodate. The Moderna vaccine, in contrast, can be frozen or refrigerated at a more normal range of temperatures for up to 30 days. And so that means it's a lot easier to distribute than the Pfizer vaccine.
So as a scientist, as I understand it, there's a lot more data you'd like to take a look at to really understand either one of these better. I mean, specifically, who were the people who got COVID, who did not get COVID, comorbidity, terms like that. But at the same time, I'm told that they might be able to apply for emergency use authorization as early as the end of this month. What do they have to in order to ask for that authority from the FDA?
Yeah, there's some guidelines that have been issued in terms of a minimum of numbers of patients enrolled, numbers of events. So when we talk about events, we're talking about numbers of people in the placebo arm who did not get the vaccine versus the vaccine arm who got coronavirus, because that's the only way to say, was the vaccine actually protective? Now, one thing that's accelerating that collection of data is the fact that coronavirus is surging across the country. So we're getting that signal more quickly. And then also data on numbers of side effects. So far, both of those vaccines, based on what we've seen so far, seem pretty safe and effective.
So are there other candidates that are in the pipeline that could be coming up, like next Monday, for example? It seems like every Monday we get an announcement now.
Yeah, there are two others that are very shortly after in the pipeline, the Johnson & Johnson as well as the AstraZeneca or Oxford vaccine. Those are both also pretty far along. And there are a host of others that are in the pipeline after that. So I think it's important to understand that there will be a number of vaccines that will probably get emergency use authorization that will start to scale up in the coming months. And really, part of the decision will be which vaccines to use for what populations in what areas, and that will be an evolving thing.
So let's assume, and I understand it's a big assumption, that we get through all the tests and the answers are good answers and we can actually distribute this vaccine. What would it take to distribute millions upon millions of doses of vaccine, particularly because both of these candidates, as I understand it, you need to do it twice?
Well, right. So both the Moderna and the Pfizer vaccines require 2 doses, so about a month apart, 3 weeks apart. So that in and of itself is a bit of a logistical challenge because you need to make sure everybody who got the first dose gets a second dose. And we're all busy. We have the rest of our, things that we're doing in our lives and might forget to come back for that second dose. So we need to make sure that happens. But I think people underestimate the complexity of these supply chain and delivery systems. Think about personal protective equipment. That's a very simple technology, masks and face shields and gowns and gloves. But look at how difficult it has been to make sure we had adequate supplies of those throughout the course of the pandemic. Now multiply that in difficulty by a new technology that requires being kept at cold or ultra cold temperatures. This is not going to be a simple distribution logistical challenge.
And everybody's going to want it at once, I suspect, apart from people who really are just nervous about vaccines. How are we going to decide who gets it first? And more specifically, to the best of your knowledge, are there plans in place right now, either at the federal or the state level, to say this is the priority we're going to give people?
Those plans are in development, and some of those are occurring at the state level. Some of this is also going to be happening within the Biden-Harris transition team, planning at the national level. But big picture, we do have some sense that the targeted populations are going to be frontline healthcare workers, very high-risk populations. So, for example, people who are living in nursing homes and assisted living facilities and the like. And then after that, you'll see an emphasis on people who have underlying medical conditions that put them at very high risk for severe disease.
You're one of a group of very distinguished scientists who are part of this task force for President-elect Biden. There's concern right now about the transition and the transition not happening the way maybe it would normally happen. From your experience, from what you know, is that a big problem or not? Because, or basically, do you have the data that you need at this moment to start working on what happens after January 20?
Well, we have the data that's available to us, that's available to the rest of the public. And you know, if you think about the fact that we are essentially at war, we're at war with this virus. If we were in the middle of a world war with a foreign power and we did not know precisely where our aircraft carriers and our tanks and our troops were, it would be very problematic to continue waging that war during a transition of power. So on the one hand, we are gathering all of the data that's accessible to us, it's available to us, but we really need to see the GSA move forward on ascertainment so that we can really get insider information to move forward with our own plans.
And what are your priorities among the task force? I mean, what are you trying to take on first, second, third?
Well, one of the things you'll see very early on is that the president, through an executive order, will be invoking the Defense Production Act to scale up production of personal protective equipment. So again, that's the gowns, the gloves, the masks, the face shields that have been in short supply throughout the course of the entire pandemic, that are in even more scarce supply now that cases are surging and demand is surging across the country. So that will happen very quickly in the new administration. It's something that we've been pleading the current administration to do for months. In addition, other really key priorities are testing. The current administration has really discouraged testing, but it's very difficult to contain a virus if you don't even know precisely at any moment in time who's infected, in what places, and why that's happening.
And Dr. Gounder, we're going to talk to you about that a little bit for now. That's Dr. Celine Gounder. She's a member of the President-elect Biden's COVID Advisory Board. We're going to have more with her coming up in our second hour on Bloomberg Radio at 1 p.m. Eastern Time. Coming up here, we hear from former Secretary of State Henry Kissinger on COVID-19 and its effect on U.S.-China relations, speaking at the Bloomberg New Economy Forum. This is Balance of Power on Bloomberg Television and on radio.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
Henry Kissinger was the architect of U.S.-China relations in the modern era. He spoke earlier today at the Bloomberg New Economy Forum on what COVID means for international relations and whether there is a global solution.
Its long-term solution has to be on some global basis. Then within that framework, the performance of countries that solve the problem both of their internal medical needs and of the global or regional method of solving it may affect the position of those countries. But I don't think COVID should be dealt with from that point of view. It should be dealt with as a lesson in the need of certain issues that can only be dealt with on a large basis, hopefully even a global basis.
And those, is that what you referred to at the beginning in terms of a framework of issues that China and America could come round together on? You could do COVID, climate change, trade.
I'm not saying that we and China will live with a consciousness of harmony. I am saying that there will always be stresses and tensions. But the question is there a direction towards which we can cooperate? And there'll be other issues on which we will differ. But unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
That, of course, was former U.S. Secretary of State Henry Kissinger. Watch more from the New Economy Forum on Live Go through your terminal on Bloomberg.com and on Bloomberg New Economy's social channels on Twitter and Facebook. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
So how many times a day do people ask you when your vaccine is going to be available?
Yes, well, that's definitely a very regular question, whether it's from employees, customers, media, or my mother.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They're torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
I'm Mark Crumpton with Bloomberg's First Word News. Political experts say House Speaker Nancy Pelosi has her work cut out for her. With the narrowest majority in decades, the Speaker's ability to build consensus and keep Democrats moving in the same direction will be severely tested. Her first test comes later this week. House Democrats will hold leadership elections that appear to offer reprise of the existing team at the top, led by Pelosi, Majority Leader Steny Hoyer, and Majority Whip James Clyburn. As we have been reporting, there's word today of another promising vaccine in the fight against the coronavirus. Moderna says its shot has been found to be highly effective in preventing the disease. The vaccine had 94.5% efficacy in an analysis of late-stage trials. Interim results suggest the vaccine may also block severe cases. A week ago, a similar shot developed by Pfizer and BioNTech was found to be more than 90% effective. The UK is signaling it won't back down as Brexit talks with the European Union enter another crucial week. Officials from both sides say the coming days will be pivotal in trying to reach a trade deal. Two of the most senior officials from the Brexit campaign left Prime Minister Boris Johnson's inner circle last week. The UK's chief negotiator insists he will not be changing his position. Hurricane Iota is set to slam into Central America today as the Atlantic's strongest storm of the year. Forecasters say Iota, now a Category 5 storm, will bring catastrophic winds and torrential rain to a region still reeling from a storm 2 weeks ago. It will hit near the Honduras-Nicaragua border on the heels of Hurricane Eta, which killed more than 100 people. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It's 1 p.m. in New York, 6 p.m. in London, and 2 a.m. in Hong Kong. I'm Bonnie Quinn. Welcome to Bloomberg Markets. Here are the top stories we're following on the Bloomberg and from around the world. U.S. equities in the green today after that positive news on a COVID-19 vaccine, sending shares tied to an economic reopening higher, while stay-at-home stocks lag. Bonds, though, unmoved. We're going to be speaking with Ed Yardeni, president of Yardeni Research. We'll take a closer look at Moderna's vaccine that is said to be 94.5% effective against the coronavirus. It's the second vaccine in the United States to have a stunningly high success rate. And with the virus surging around the globe and the future of the workplace still uncertain, we'll talk to Christian Ulrich, global CEO of JLL, one of the largest players in commercial real estate. First, let's get a quick check of the markets. We did see equities rally early on today on that coronavirus news, and they continue to, with the Dow leading the pack up 1.25%, the S&P up 0.8%, and the Nasdaq lagging, although it still is up about 1/3%. As you can see, the 10-year yield 90 basis points right now. It's been 89, 90 all day. Crude oil up 2.8%, 41.28. And look at that offshore yuan trading at 6.5742. For more on all this now, let's bring in Ed Yardeni, Yardeni Research President and Chief Investment Strategist. So, Ed, we didn't see much movement in bonds today on news of this now second success story in terms of a vaccine. What does that say to you?
Well, I've been watching the weekly data on the Fed's balance sheet. It's available on their website. And what it shows is that the Fed has been very aggressive in what I call QE forever. Back on March 23rd, they announced that they were just going to have an open-ended commitment to buy Treasury securities without telling us how much and for how long. And they've been doing it in billions and billions of dollars ever since then, more than offsetting the issuance of treasuries by the government for all this COVID emergency needs. So I think the Fed has actually been doing its best to keep the bond yield under 1%, and so far so good.
So are we talking about two very different markets with different philosophies, different mindsets, and different ideas for outcomes post-pandemic, Ed?
Well, I think that the stock market has done an amazingly good job of anticipating a V-shaped recovery in the economy. The economy only had a 2-month recession. It's bizarre. But we had a recession that basically lasted March and April during the lockdowns. We've never had a lockdown recession. And then as the restrictions were lifted, we all had cabin fever, and some of us got checks from the government. Some of us got unemployment benefits that were bigger than in the past. And the economy has just been on a V-shaped recovery from May right through October. The latest data we have is through October. Now, it could start to weaken because of the second round of this pandemic. But the stock market right now is telling us that that we are going to get a vaccine. And we've had, a week ago, we had the Pfizer news, and now we have the Moderna news. Both of them are same genetic technology and very promising. And what's exciting about the Moderna technology, and I don't own the stock, I wish I did, is that, you can put it in a refrigerator, whereas the other one, you need, massively cold temperatures to hold it and transport it.
Sure, for now. Ed, the thing is, though, what you said makes a lot of sense to somebody who isn't really, involved, let's say, in any way. But if you're a small business owner who's had to shutter their doors because the PPP money ran out, or you couldn't abide by the conditions of it, you've had to let go staff, or if you're, somebody who's literally going to a food pantry and has never been before, what you just said doesn't make sense.
I know. I mean, it's terrible when you focus on the people and businesses that are in pain from all this. And I'm not even talking about the healthcare consequences, which have been horrible for a lot of people, a lot of families. The stock market's very forward looking, and the market's telling us that we're going to survive this. We're going to come out of it. But as you said, there are people that clearly have been hurting and will continue to hurt for at least probably another 3 to 6 months until everybody can be vaccinated.
Do you feel that we need a fourth round of stimulus? I'm increasingly hearing that perhaps it's not even necessary, and given your stated outlook, it would seem that you might be in that camp too.
Well, again, to your point, people who are suffering obviously can use some additional cash to get them through all this. But, I have to deal with the reality of politics in Washington these days. It's been partisan for at least the past 4 years. I don't think it's going to suddenly be bipartisan. So it's conceivable that we may just not have the political will to get another stimulus package. The good news is that the CARES package, which was passed on March 27, there's still a lot of cash that hasn't been fully spent there. There's a lot of money that has still been sitting in savings. There's a record amount of liquid assets. I think there's still a lot of people that are very cautious and fearful. So we really need to get the vaccine. Once we do, a lot of this cash is going to go back into the economy, and it's going to go back into the financial markets. But it has been already, which is why both the economy and financial markets have performed better than one would have thought. And it's a very mixed situation. Pandemic challenged service companies are hurting and their employees are hurting. On the other hand, anything that's housing related, it's been an absolute boom. Existing home sales, new home sales, and anything related to homes has been on fire.
Ed, Janet Yellen was on a panel for a Bloomberg event earlier on, and she specifically mentioned she doesn't think that the Fed should target individual groups, which I thought was interesting because, it's the current position of the Fed that, everything that can be done in that direction should be done if it's possible. I would love your thoughts on that. Is it possible to target individual groups? And if so, why shouldn't the Fed do that?
Well, the Fed was originally created to give us financial stability. They didn't have the double mandate, which was passed by law in the late 70s, which requires them to keep inflation low and keep unemployment low. And everybody thought that's a tough job to perform because sometimes the contradictions. When the economy is doing very well, unemployment's low, you can have inflation. But the reality is, for at least the past 10 years, we've seen the labor market improve until the pandemic hit, and we've seen inflation remain very low. But you're right, of late, the Fed has kind of joined in and said that they do believe that they have some responsibility for targeting specific groups. And when we say specific groups, we mean people who've been hurt the most, that remain unemployed. Now, in terms of the tools, the CARES Act actually provided $450 billion earmarked to give to the Treasury to then give to the Fed as capital to lend out. So the Fed has become, in many ways, the Bank of the United States. I mean, the Fed actually has the ability to lend $4 trillion out if it so deems. It turns out that they didn't come close to making those kind of loans because everything else they did worked so remarkably well in reviving the economy and the financial markets. They just didn't feel that they really had to go and make those loans. But it looks to me as though they're gearing up to start to use that lending power to help some sectors of the economy. Whether they should or shouldn't is a whole, we could spend hours on that one.
Yeah.
They were created to be independent, and I think their independence is no longer part of their act.
Yeah, not fully that kind of independence, perhaps. Ed, I know that you had been looking for yields to go up above 1%. Where are you now on that? When do we see that happen, and do they stay there?
Yeah, well, what I've been looking for is as the economy improves, I've been thinking that if the bond yield goes above 1%, I will not be surprised if the Fed officially announces yield curve targeting, which is another way of saying that not only would they be pegging the Fed funds rate near zero, but they might actually announce that they are going to try to do their best to keep the bond yield below 1%. So I think if it was up to economic forces operating in a kind of a free market fashion, we probably would see the bond yield moving higher above 1%. But as we just discussed, the Fed seems to have taken on more responsibilities, and it seems to be getting more weight to employing people than worrying about inflation. As you know, they recently said they'd be more than happy to see inflation a little bit above 2%, and they have been able to even get it to 2% in the past 10 years plus.
That dual mandate may be a little imbalanced, as you say. Yes. Okay, Ed, thank you so much. Our thanks to Ed Yardeni Research, President, Chief Investment Strategist, and of course, founder. Coming up, it's one of the biggest bank deals since the financial crisis. Details on PNC's $11.6 billion bid next. This is Bloomberg.
We would love, at the right time and the right way to have a digital bank license. We would almost certainly do that in partnership with a strong local partner, and we would use the technology and the experience that we've gained from Mox in Hong Kong.
This is Bloomberg Markets. I'm Bonnie Quinn. PNC has agreed to an $11.6 billion deal that'll make it the largest regional bank in the United States. The lender buying BBVA's American banking operations. The Spanish bank's U.S. business is focused on mobile banking, but its value took a hit from the pandemic. Joining us now with more is Bloomberg's Hannah Levitt, who has been covering the story. So, Hannah, is this a done deal?
Hey, Bonnie, thanks for having me. Yes, it is a deal. They announced it this morning, and they said that they're expecting it to close about halfway through next year.
What was the calculus for PNC in doing the deal? I mean, obviously they had a bunch of BlackRock cash that they might have wanted to put to use, but why this particular use?
Yeah, that's a good question. So PNC, they've done this before. They did this during the last crisis where they bought another smaller bank. So heading into this one earlier this year, they sold out of their massive BlackRock stake. And the CEO, Bill Demchak, was very vocal about looking for potential opportunities to do a deal here. And, this is on the backdrop of they've been pursuing this national expansion strategy. But, in the past few years, it's been largely organic. So now this is deploying that capital to really, jump up the ranks in terms of their size.
Yes, in fact, I remember we had Bill on, and he did sort of mention coyly that they, of course, are always looking at potential deals, and obviously this was one of the ones that they were looking at. A few hours after the news, we got news from Spain that BBVA in Spain is merging with another Spanish bank. Obviously, the sector in a bit of trouble there. Are the two related? Is it helpful to the Spanish operations to get rid of the U.S. operations first?
Yeah, so it certainly frees up BBVA to pursue a deal of itself, a deal of its own, or anything ranging from buybacks to pursuing another deal. So this could serve to do that for them.
Might help with the regulators in Spain too. So further regional bank consolidation in the United States, Hannah, we've been thinking that it might happen. Is it beginning? Is this the start of it now?
Mm-hmm. Yeah, that's the forever question, right? So we saw that when BB&T and SunTrust merged last year to create Truist. That was the big question then, and it's still the big question now. And clearly we've seen today this is an instance of it happening. But what we know today is that rates are low; they're likely going to be low, and meanwhile banks are having to spend a lot on technology. And so just the combination of these factors creates an environment where they're going to want to be bulking up their size a little bit if they can.
All right, Hannah, thank you. We will continue to follow your reporting for any more mergers on the way. That's Bloomberg's Hannah Levitt. Still ahead, Yellen speaks, what the former Fed chair had to say about fiscal policy, and more highlights from Bloomberg's New Economy Forum. That's next. This is Bloomberg.
Such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there is a Google problem in this country.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Markets. I'm Bonnie Quinn. It is time for your latest Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. Home Depot agreeing to buy building products distributor HD Supply for about $9.1 billion. That reunites the home improvement chain with its former subsidiary. They split up more than a decade ago. Home Depot paying a premium of about 25%. The biggest meat producer in the U.S., meanwhile, Tyson Foods posted better than expected quarterly earnings. Higher demand for beef and pork offsetting weaker chicken sales. Tyson did issue a warning. It says the pandemic may increase costs and affect demand. And the chairman of the SEC is stepping down. Jay Clayton leaving at the end of the year. He's a former corporate deal lawyer who has led the SEC since 2017. His term was set to expire in June. And that is your latest Bloomberg Business Flash. So, the four-day Bloomberg New Economy Forum underway with business and political leaders discussing various issues from the economic fallout of the pandemic to the future of global trade and climate change. Former Federal Reserve Chair Janet Yellen weighed in on the necessity of fiscal policy going forward.
The notion that the Fed can do all that is required at this point to support the economy is just wrong. And the Fed is really pleading for fiscal relief. I believe it's essential.
And of course, we know that the Fed chair, or the former Fed chair, has also been placed as a potential Treasury Secretary candidate. So for more on the warnings of how limited central bank action can be, we're joined by Bloomberg Economics chief economist Tom Orlick. So Tom, give us the motivation for what the former Fed chair said. It's not usual for former Fed chairs to comment on monetary policy, and yet she clearly did right there.
Right. So this was a panel of very senior economics officials: Janet Yellen, Larry Summers, Raghuram Rajan, the former chief of the Reserve Bank of India, and Mervyn King, the former governor of the Bank of England. And there was a very clear message coming through from that panel. Central banks have done what they can. They've stabilized financial markets. That was the crucial contribution back at the beginning of the COVID crisis. Now, interest rates are at zero. It's not realistic to expect monetary policy to do the heavy lifting or even really the light lifting of driving the recovery. It's time for fiscal policy to step forwards.
Right, and she made that point, but she also said several other things. For example, that the Fed shouldn't be targeting particular groups of people, and she made some very strong comments on the Fed. It made me think that perhaps she was thinking more about a Treasury role, but of course she said that she wouldn't comment on whether she had been asked or would consider going to Treasury.
Yes, no comment from Yellen on whether that Treasury role is in prospect. But the discussion, as you say, did go wider. And I think the concern sort of articulated first by Larry Summers, but then echoed by others on the panel, was really about mission creep for central banks. If we think about the last 15 years, the period since the great financial crisis, it's really been central banks that have stood out as the most effective policy institution, right? Monetary policy has done the job when other institutions maybe haven't done so well. And so there's a tendency when we think about issues like climate change or elevated levels of unemployment for Black and African Americans, to think that central banks can step into that role and help provide solutions. And the message coming from Summers and echoed from others on the panel was, you know what? That's just not what central banks can do.
Yeah.
Yes, if they do their job right, they can contribute at the margin, but really climate change, differential employment levels for different groups, these are not things which central banks are equipped to deal with.
US-China relations as well were very near the top of the agenda. What was the consensus there, if there was one, Tom?
So with President-elect Biden and his team preparing to sort of assume responsibilities for the US side of that relationship, Clearly, it was near the top of everyone's minds. We had a stark warning from Henry Kissinger saying that without good channels of communication between the two sides, we could be facing a catastrophe comparable in scale to World War I. And then we had a sort of practical suggestion from former Treasury Secretary Hank Paulson. Paulson, of course, the guy who created the Strategic Economic Dialogue, which helped frame the relationship between China and the US in the Bush and Obama era. What Paulson was calling for was something like sort of managed reciprocity. He's saying, yes, there's going to be intense competition between China and the United States, but the US needs to manage that competition in a way which retains the benefits of openness and dynamism, which are the long-term drivers of US competitiveness.
Yes, there were several messages actually for potentially, or I suppose presumably, incoming President Joe Biden. Henry Paulson, as you said, talking about how Biden should coordinate with global economies to get a framework for upgrading the global trading system, but there should also be targeted reciprocity on China. Are the two compatible?
So I think the recognition is that the Trump administration, whilst it has made a number of what you might call tactical blunders in the relationship with China, did strike a chord with American voters and with some in Europe in its reframing of the China relationship as a more competitive relationship. I think the plea from Paulson, and I'm sure we'll hear that echoed from others as the New Economy Forum continues, is that that competitive relationship can be managed in a way that doesn't lead to an ever-widening rift. And where there are areas where there can be mutual benefit, like climate change, for example, the relationship can be maintained.
Tom, thank you very much. That is Tom Orlick, Chief Economist for Bloomberg Economics. That forum continuing all week.
So when you went to Baltimore, you went initially to be an anchor woman, and then it didn't quite work out.
Yeah, I got fired.
Well,
well, demoted.
You got demoted, but they didn't. They had a contract,
yeah.
So they didn't say goodbye. Yeah. And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. You know, lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend Gail, who I met there at the time, she was also working there. She said, "Oh my God, you're 22, making $22,000. Imagine when you're 25." Then you're 30. So I'd be making 60 about now. It'd be good, 62. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000. Right. So they kept me on and said, "We'll put you on this talk show just to run out your contract."
We don't have a sort of fixed order of use.
IQ Europe.
I'm Mark Crumpton with Bloomberg's First Word News. As Vani just mentioned, former Secretary of State Henry Kissinger says the incoming Biden administration should move fast to restore lines of communication with China that frayed during the Trump years. Speaking at the Bloomberg New Economy Forum, Dr. Kissinger said, if not, the United States could be risking a military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
Kissinger, who paved the way for President Nixon's historic 1972 trip to China, said he hoped the shared threat of the COVID-19 pandemic would provide an opening for political discussions between the two countries when Joe Biden takes office. New York City schools will be open tomorrow as the positive test rate for COVID-19 remains below 3%. A rising infection rate led Mayor Bill de Blasio to warn parents that schools may be closed today, but the rate dipped over the weekend. De Blasio said today, quote, "We've got a fight ahead to keep them open." The city's 7-day average of new cases jumped to more than 1,000, something Mayor de Blasio called very worrisome. French President Emmanuel Macron says that Europe can't go back to relying on the United States even after Joe Biden takes over. In an interview, President Macron said the European Union must push on to act independently in technology, finance, and defense. He said a new U.S. administration shouldn't change where the EU is headed. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Live from Toronto, I'm Amanda Lang. Welcome to Bloomberg Markets.
And from Bloomberg World Headquarters in New York, I'm Bonnie Quinn. We're now joined by both our Bloomberg and BNN Bloomberg JLL Global CEO, one of the world's biggest commercial real estate companies. Home Depot's $9+ billion deal. The home improvement retailer bets on a post-pandemic future with its acquisition of HD Supply, a major supplier to hotels, senior living centres and apartment buildings. Amanda.
And Vani, it may not be quite the massive surge we saw a week ago on Pfizer's news, but positive sentiment out there, and that is evidenced in the energy subgroup of the S&P 500, up 5.25% this morning. Although the price of oil itself is slightly more tempered, it is also gaining, and you can see across the board gains here with the stay-at-home stocks, including big tech, lagging. But we are seeing some enthusiasm right across the board. And I want to just bring you inside the Bloomberg here for a look at investor sentiment, because this one does tell a tale here. This is the bearish, bullish, less bearish readings. And you can see here we are back at levels not seen for a long time. So in terms of the sentiment behind the push for a vaccine and the realization that we may get it sooner than some had feared, this is starting to be obviously what the market will be trading off of. Some of the details around Moderna's vaccine came from its CEO. Stéphane Bancel was on Bloomberg Television earlier talking through some of the issues, including the trials themselves and the distribution issues. Have a listen.
We have been working on mRNA vaccines for more than 5 years. This is the 10th vaccine that we have been running a clinical trial on. The other vaccine that you mentioned, it's the first time that they are doing an infectious disease vaccine. And so over the years, we've invested heavily in science, in process development, that allows us now to have a much better storage condition than what we used to have 5 years ago.
Stefan, this is really important because it's going to have a huge impact on distribution. How much of an effect will that stability at a higher temperature have in everybody's ability to be able to get hold of this vaccine?
I think it's a huge impact. We're going to have a vaccine stored at -20 between our factory and the big distribution centers. And those are able to handle that type of product because they're already product approved by the EMEA in Europe, MHRA in the UK, or FDA in the US at -20 Celsius. But what is very important with today's news is we can now, for up to 30 days, have a vaccine stored in a regular fridge at 2 to 8 Celsius, like you do insulin. And as you know, every pharmacy, doctor's office, hospital has that capability. So we think it's a very important game changer. The other piece too, to keep in mind is our vaccine does not require dilution. The other vaccine that you mentioned requires dilution at the site. So you take the vaccine out and you need to dilute it. It's an extra step. What we have to do to get the world back to normal is a massive vaccination campaign that had never really happened before. And so every time we're going to be wasting doing these type of things for our product is going to be an issue. And so we think that between the fridge condition storage and the fact that we do not require any dilution on site, that's going to be a big advantage for nurses and doctors to be able to provide those vaccines quickly to the population who wants it.
Such a good distinction. Have you had conversations with the current administration or the incoming Biden administration about kind of distribution and how to mobilize?
Yes, so the Operation Warp Speed has been working in the US very closely with the CDC for a long time. And we are in daily discussions with them. What we're going to do, as soon as we got an approval or an EUA by the US FDA, is to ship the product via McKesson, who the US government has selected because they are very active in the seasonal flu process, to get the vaccines out to hospital and pharmacies. As I'm sure you read, CVS, Walgreens, Rite Aid, all the big pharmacy chains in the US have signed up to get the vaccine from McKesson to provide administration in the pharmacies.
Moderna CEO Stefan Bancel speaking earlier. For more on the Moderna vaccine, we're joined now by Daniel Salmon, Professor of International Health and Director of the Institute for Vaccine Safety at the Johns Hopkins Bloomberg School of Public Health. So, Dr. Salmon, is this a game changer? Did you wake up this morning delighted by this news?
Well, I mean, it's good indication from two companies that they seem to have effective vaccines, but they're, press releases. Very few people have seen the data. I haven't seen the data. It hasn't been shared publicly. So it's a good indication, but, there's still a lot of details that need to follow.
And on that front, one of the, there are many details even before this would be a consideration, but we know that emergency use will be requested from regulators. What's your sense of how quickly that will translate into action? In other words, that it'll fast track through the safety process?
Well, so it's not just safety they look at, but that's a part of it. And it's pretty clear that it's going to go to FDA's advisory committee, the vaccine-related Biologic Product Advisory Committee. So this is a really important step. It means that the data from the clinical trials are presented to independent external scientists. They review the data. It's done in a public meeting, and ultimately they make a recommendation. So that's what this process is likely to look like. And I think that process will help inform everyone about what the products look like in terms of effectiveness and safety, and should be helpful in people being confident that the process is working. I think that's going to happen quite quickly. They've already had meetings of the BRPAC where they've prepared for these data. So I expect that we'll see that process and have it go through emergency use.
Dr. Salmon, your career has been focused on vaccines and how to have them, I suppose, welcomed by a community and by all communities in order to stop a disease. What are the challenges you foresee with this particular or these particular vaccines?
Well, I think we're launching this vaccine program in a very difficult situation. I mean, a substantial proportion of the population doesn't think that COVID is a serious disease, and we're seeing people very resistant to basic control measures like wearing masks and avoiding indoor exposure. And as much as half of the population reports they either don't want the vaccine or they're not sure about it. So I think there's a lot of work that needs to be done in that area. Having a vaccine is great, but having it control the pandemic requires most people to get it. And there's a lot of challenges there and a lot of work that needs to be done.
And let's just focus on that for a second, because as I understand it, because of the nature of these vaccines, they will prevent one from being sick, but not from spreading it. In other words, you could be a carrier of the virus and spread it while you yourself don't get sick from it. Persuading people to get it is going to be job number one. How do you think that happens in the polarized state of America today?
Well, I'm not sure that your premise is right. I haven't seen data to show that it prevents clinical disease but not infection. And if that, I'm not sure where you got that from. If that's correct, I'd be surprised if it were completely true. And it's an important factor. But I think to answer your question, I think there's a lot that needs to be done. People need to appreciate the severity of COVID and realize that it really is a disease that's causing a lot of morbidity and mortality. And people have to trust the vaccine. They have to trust the process. I think that having it go through an external advisory committee will help. It'll then go to CDC's advisory committee on immunization practice, which is another external advisory committee as independent experts, and they'll make recommendations on who will get the vaccine. And I think that all that process should be helpful. But I think there's a lot of listening we need to do to communities and to the public, and we need to deliver the vaccine in a way that it's going to be welcomed. And there's a lot of communications that needs to be done around that.
Mm-hmm. All right, and we appreciate your expertise and for clarifying that point, which we'll make sure that I clarify before I repeat. Daniel Solomon, Johns Hopkins Bloomberg School of Public Health, thank you so much for being with us. And of course, the Bloomberg School of Public Health is supported by Michael R. Bloomberg, who is the founder of the Bloomberg Companies and also Bloomberg Philanthropies. Coming up next, we speak to, on this path to a vaccine economy reopening, one of the largest commercial real estate companies in the world. The CEO of JLL will be with us, Christian Ulrich, right after this.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming,
we can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Shares of the largest player in global commercial real estate, JLL, higher today after positive news on a COVID-19 vaccines and companies tied to an economic reopening surging. Joining us now to discuss the future of the space, literally, is JLL CEO Christian Ulrich, who comes to us from Frankfurt. You manage about 5.1 billion square feet worldwide, Christian. What is your thought on how we'll proceed through 2021? Will cities see people coming back into the commercial real estate that you manage and operate?
Absolutely, Bonnie. When you look at what's happening in Asia, you see many cities, especially in China,
So I believe that we are not hearing Christian Ulbrich. It's not just me not hearing him. He is actually not going out. So we're going to try and get him back and speak to him in just a moment. Once again, a reminder that is JLL CEO Christian Ulbrich coming to us from Frankfurt. So let's take a quick look at the markets. Now we have the S&P 500 just tagging the Dow slightly. It's up about 0.6%, and the Nasdaq is up 0.2%. It's been a positive session for stocks, although not quite as ebullient as the first time we found good news of a vaccine. Of course, that was about a week ago when Pfizer updated its vaccine news. So we will get back now to Christian Ulrich, JLL CEO. Christian, you were outlining your optimism really for 2021, even as I can tell you that literally in New York, every CEO I speak to says, between 10 and 20% of their staff are in the office right now, maximum.
Yeah, that is a current picture. But when you look into Asia, we see how people are getting back into the offices, and the occupancy is already very normal in China and many other cities. And the same will be the case in Europe and in the US. Once people are feeling safe to get back into the office, and the vaccine, which is coming, will obviously help very much so.
And let's just get a regional glimpse from you. You were talking about some of those places like China. What can we learn from, especially, I guess, in Asia, where we are seeing reopening a little bit ahead of the curve of the rest of us, about what we might be tracking to in the rest of the world?
Well, I mean, the most important piece is that people are feeling really safe and comfortable to get back into the office. And the office itself plays an important role, but obviously also how they get to the office. So public transportation is playing an important part. That's why you see also major differences within the US already, where people are driving with their own car to the office. They're much more open to get back into the office than in places like Manhattan or downtown Chicago. But overall, technology will help us to give people that feeling of safety in the office. We can measure densification. We can measure where we have to send a special cleaning team in. And a lot of tools are available, measure the air quality, which all of those are available to make people feel comfortable in the office.
Christian, how much thought are you putting into swapping out some of the properties that you manage, or at least changing them to some other type of purpose? I don't know, storage seems to be a big one these days.
Well, obviously, when you have city center office buildings, there will be clearly demand post the pandemic. What is more challenging is the question around hotels going forward. We believe that business travel will be impacted longer term and will be at much lower levels even post-pandemic. And so you will see a lot of repurposing of hotels, which were more focused on business travel rather than on tourism. And for those, you will see repurposing. And then the other big area is obviously retail space. Retail has been in a transformation period already before the pandemic, and that is now being accelerated. Retail is a question of experience and convenience. And if it's more convenient to buy your goods online, you will do so. And if you want to have an experience, you will go shopping into a shopping center or come downtown. But the amount of space we need for the experience shopping will be significantly less than what we have seen 5 years ago.
Where do you think we are in the consolidation trend in this industry? Do you expect to see a lot more of it?
Well, any kind of economic crisis is usually an accelerator of consolidation. And so we will now, coming out of that crisis in 2021, we will see a significant amount of consolidation in our industries as we will see it in other industries.
So, Christian, I mentioned storage a moment ago, but it does seem like there's a lot of interest in warehouses and industrial space. You even see it basically in New York City and some of the outer boroughs. What happens there? Does that kind of space become a bubble at some point?
Well, I mean, as long as online buying of goods from people is continuing to strive and grow as it has been over the last couple of years, there's clearly a need for more logistics space and especially for the last mile space. And therefore, we will see that trend continuing probably for the foreseeable years, that we need more modern space, especially. You know, at the moment, because of the shortage of distribution space, we are also using distribution centers which are not really state of the art, and they will be then replaced by newly built distribution centers which are much more productive.
Amanda.
All right. That is Christian Ulbricht, the CEO of JLL. Thank you so much for being with us, sir. We appreciate your time today. This is Bloomberg.
Healthcare systems throughout the country. That's what we're watching.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Markets. I'm Amanda Lang in Toronto alongside Vonnie Quinn in New York. And for HD Supply, it turns out you can go home again. Former parent company Home Depot acquiring it for $9 billion. Our stock of the hour now with Abigail Doolittle and a closer look at this deal. Abigail?
Well, very creative introduction there, Amanda. And yes, we do have the shares of HD Supply absolutely soaring on the day, up more than 25%, the best day ever since going public in 2013. They, of course, were, as you mentioned, a unit of Home Depot back in the day, but Home Depot did spin them out back in 2007, or sold the unit. And what distinguishes HD Supply from Home Depot, HD Supply has more of a professional bent. About half of their business is facilities, the other half is construction industrial. Home Depot is more toward the amateur contractor, if you will, or the retail component. About 45% of their sales is from the contracting side. But again, HD Supply, that's the professional contractor. Now, if we go into the Bloomberg terminal, it seems as though Home Depot will do very well, not just with the smaller contractors, but also the professional contractors. This shows the increase in existing home sale prices in the U.S., a record high, right around 312,000, and year-over-year growth also on a record pace of 14%. Not surprisingly, Vonnie, we've seen a nice rotation into some of the sectors over the last few months, the industrials, along with materials and utilities that support this idea that lots of building is happening out there. Even some reports that folks can't get contractors for 6 or 12 months, both professional and on the smaller level, because of the demand to improve housing.
Right, you just said it. Home building and improvement has been in high demand all year.
Yes, indeed. And so some of HD Supply's competitors, huge rally on the year, not just for HD Supply, but also take a look at W.W. Grainger, Tractor Supply, Fastenal, lots of strength for these building segments. And it does seem lots of reports, even with the encouraging news around the vaccine, the deurbanization of the U.S., at least right now toward the suburbs, may support these trends.
All right, Abigail Doolittle, thank you very much with our stock of the hour there and the big deal between Home Depot and Home Depot Supply, HD Supply. From New York and Amanda Lang in Toronto, this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you? Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. The World Health Organization's Director General says the UN agency is extremely concerned by a surge of coronavirus cases, particularly in Europe and in North America. Dr. Tedros Ghebreyesus said today health workers and systems are, quote, being pushed to the breaking point. He spoke to reporters at a regular briefing at WHO headquarters after a 2-week self-quarantine as a precaution after coming into contact with a person who tested positive for COVID-19. A member of the Trump administration may be acknowledging that the president lost the election. Speaking at a global security summit today, President Trump's national security advisor, Robert O'Brien, is pledging a, quote, professional transition. O'Brien indicated that Joe Biden appears to have won the election, something other top Trump officials have been reticent to say. Over the weekend, the president tweeted, quote, I concede nothing, end quote. The UK is signaling it won't back down as Brexit talks enter another crucial week. Officials from both sides say the coming days will be pivotal as they each try to overcome the key barriers to reaching a trade deal. The urgency is ramping up with Britain's departure from the EU's single market on December 31st fast approaching. Without an agreement, millions of consumers will face the return of quotas and tariffs for the first time in a generation. Billionaire Steven Schwartzman has a way to make teachers stand out in the workforce. The co-founder of Blackstone Group says they should be the only group of workers in the United States exempt from paying income tax. Schwartzman spoke at the Bloomberg New Economy Forum.
It will mark them apart from all other types of employment as a valued class. It'll also increase their after-tax compensation significantly.
Mr. Schwartzman also noted that only 5% of children in public schools are learning computer science. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
2 p.m. in New York, 7 p.m. in London, live from Bloomberg's World Headquarters. This is Bloomberg Markets The Close. I'm Caroline Hyde.
And I'm Taylor Riggs. Romaine Bostic is off today.
And he misses another potential breakthrough. Moderna announces its COVID-19 vaccine was 94.5% effective in an early analysis. Now, that large late-stage clinical trial following the success of Pfizer's drug last week, giving investors reason to be optimistic. And indeed, they are a record day for the Dow, the S&P, small caps, and the global stock benchmark. The equity indices, Taylor, marching to new highs after that Moderna news. Work from home favorites like Zoom Video, they slump. Oil prices jump. Meanwhile, Beijing is bouncing back. China's recovery strengthens. That's as the country joins Japan and South Korea in the world's largest regional free trade agreement. That's while President Trump plans more hardline moves against China, potentially tying the hands of President-elect Biden. All that and so much more coming up. But first and foremost, Taylor, let's check in on these markets. What an array of records we have. Dow Jones Industrial Average almost at 30,000 is our level. 309 points higher. The NASDAQ, though, is your worst performer, but still in the green, up 0.25% as perhaps those usual work-from-home, stay-at-home trades perform slightly worse than the banks, than the energies companies that really drive us higher today. And the back of I talk energy. I look at New York crude up almost 3 percentage points. That's even as OPEC Plus looks to rein in some of its production output that we see, but really is a feeling good moving part for oil because China's also numbers looking pretty good in terms of its industrial production. We see no movement, though, in bonds.
Well, and that's exactly where I wanted to go, Caroline. Love that you mentioned this. Take a look at this. It's really what is not moving today that catches my attention. So all of that hope, all of that optimism that you get within the equity markets, yields holding flat. Perhaps maybe we've seen all that we can from this, quote, reflation trade, but you've not seen all that we can see in small caps. Flip up the board. Let's take a look at this. Caroline, this is unbelievable. This is the second back-to-back week of 6% gains or more on the small caps going back since 2011. session. Today, week 3, it looks strong. We're up 1.5%, but the week is young, Caroline.
Indeed it is, and maybe we go like we did last Monday, the euphoria that then slightly pulls back. Jeremy Siegel's with us. We need his experience, his expertise, professor at University of Pennsylvania's Wharton School, joining us from Philadelphia. Your perspective then, Jeremy, are we all guns are-blazing when it comes to equities today, and then will the foot come off the gas?
I think everything points upward. The light at the end of the tunnel got brighter again this morning. And remember, stocks are the longest-lived assets we have. So, we have a really tough period, I think, the next 2 or 3 months. But then it's downhill for the virus and up for the economy. And that's exactly what the stock market is looking at.
Professor, it's interesting. You're at near record highs across the board. How do valuations look to you at this point as we price in bigger growth going out?
We're looking right now at about 21 times next year's earnings for the S&P 500. I actually think next year is going to be better than expected. I think the economy is going to be stronger because of all the pent-up demand that we have and liquidity that we have out there. And actually, I think there's going to be some moderate inflation. I think we're in 2, 3, 4% inflation. And my research shows that that is not bad for the stock market. Pricing power, higher margins because of the cutting in costs. I think that all this is in the mix of what is on the stockholders' minds, investors' minds right now.
What about, Jeremy, those that currently hold big tech, those that hold Zoom Video, for example, that's slumping on the back of concerns that maybe we got too exuberant about the valuations, those sort of key tech stocks?
Well, they're fully priced. They're wonderful companies, but my feeling is next year is going to be the reopening trade and the look for yield, because we know Fed is still going to stay slow. People are going to say, well, maybe dividends are the only way to go because long bonds, short bonds are just not going to make it. And I think that is another reason why you're going to see a little bit of a trail off of those hot stocks. Now, they really have changed the world, to say the least. But when you're trading at 20, 30, 40 times sales, I don't know how much power is left in them.
So tie in some of that equity analysis to the bond analysis that you just mentioned about bond rates staying low, and yet you're also seeing 2, 3, 4% inflation. How do you get 2, 3, 4% inflation if the Fed is going to keep yields capped?
They're going to keep the short end. Actually, I think long-term rates are going up. I think we're going to see 1.5%, 2% next year as these holders say, listen, with this inflation, I'm just not going to be able to continue to hold bonds that are just so falling behind inflation. So I think, and I've called this before, that we will look back on 2020 and say this is the end of the 40-year bull market in bonds, that long-term yields will never be as low again.
Wow, one to note, Jeremy. I'm interested in your perspective within all of this, therefore, is the US dollar. I'm seeing a note today, Citigroup, saying that the dollar may drop 20% next year on the back of this vaccine hope, this optimism. What then of US stocks versus international?
Well, I think the dollar will be weak. If you have more liquidity that has been provided, we have had more liquidity in the US than the rest of the world. That puts pressure on the dollar, to say the least. It's already moved down. However, a strong economy is generally good for that currency. So there are two conflicting worlds, but I think there's going to be pressure on the dollar in 2021. And we're going to see that because the dollar was very, very high for the last couple of years. And I think that downward shift will continue.
Interesting. Weaker dollar, we sometimes automatically assume strong performance then for international and EM stocks. Do you too assume that is inevitable?
Don't give up on the international stocks. Look what's happening in Japan. Emerging markets have come back and they will do better in an inflationary environment and a weaker dollar because of the debts that they have. I think for many years, us internationals have been suffering underperformance. 2021 could very well be that year where they will outperform the U.S. market.
Thank you. As always, Jeremy Siegel, professor at the University of Pennsylvania's Wharton School. Always never enough time with you. We're excited to have him back soon. And coming up, a light at the end of the tunnel, we hear from the CEO of Moderna on its new vaccine and its game-changing effectiveness to block severe cases. Plus, still moving, even after 2 years of Brexit's architects depart. The UK says it won't retreat as negotiations with the EU enter a crucial week. And the cannabis craze. How marijuana became a big winner on election night with nationwide legalization now in sight. All that and more coming up. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
We look at what is moving markets, and once again, it is all on hopes of a vaccine. We were here this time a week ago talking about Pfizer, and then we wake up, it's another Monday. It is another hope of a vaccine, this time, of course, from the likes of Moderna, coming up with a 94.5% efficacy. And, of course, we push the story forward, and we all wait for AstraZeneca, perhaps a few others, to come out in the next few weeks as well, as these vaccines really seen as potentially a game changer. For more, let's bring in Bloomberg's Robert Langreth, who covers COVID-19 for us here. And Robert, where do we go from here in terms of getting FDA approval and then looking for a distribution mechanism?
Yeah, so what happens now is that this, as people almost all know by now, is this is the first preliminary data from the Moderna's big trial, more than 30,000 people, and everyone was looking forward to this result after the Pfizer result because these are similar technologies boded really well. And sure enough, Moderna's vaccine was at least as effective, 94.5% effective in the preliminary data. And the other thing that is exciting about this data is that Moderna also had a number of severe cases in their trial, and all the severe cases, all 11 of them, were in people who got the placebo. There were no severe cases so far in people who got the vaccine, so that is a very promising early result. So what happens now going forward is that we need to wait probably a couple more weeks for safety data that is required for both Moderna and Pfizer to submit for an emergency authorization with the U.S. Food and Drug Administration. And Moderna is also planning on completing the final analysis, efficacy analysis of the trial. This analysis was based on the first 95 cases, but the original trial plan was to have 151 cases. And unfortunately, because the situation is so bad now in the U.S., The cases in the trial are accumulating rapidly as well, and then Moderna thinks they'll be up to the 151 they needed for the final analysis, in a matter of weeks. So once they get that, and once they get the safety data, they'll be able to submit for an emergency use authorization to U.S. regulators.
So who gets it with the emergency use authorization? They say they can vaccinate 10 million people by the end of the year.
Yeah, so if it got an emergency use authorization, that would likely be, for a very limited group of people, likely people at ultra-high risk, such as healthcare workers, emergency providers, emergency responders, and the elderly, that type of group. The ordinary people would not be able to get it. And the other thing that's important to note is that there's be a very limited supply of this vaccine initially, and as you said, enough for just for 10 million people available by the end of the year. So this is definitely going to be in short supply. One good piece of news we also got today is that the stability at refrigerator temperatures of the Moderna vaccine is better than anticipated, and they were able to show it lasts at refrigerator temperatures for up to 30 days, and that'll allow it to be distributed much more broadly to many parts of the country, including rural areas. It'll really help out.
Who next are we waiting for on vaccine trial results?
Yeah, so the next potential trial that could generate some results is the AstraZeneca trial, and that's not the U.S. trial, not the U.S. trial of the AstraZeneca vaccine, which is much earlier on, but there is a trial of the AstraZeneca vaccine in England and South Africa and Brazil, and results from that combined trial abroad could come any time now. And that trial is very important because it'll be some of the first results of a vaccine that uses a different technology than the messenger RNA technology that was used with the Pfizer and the Moderna vaccines. AstraZeneca is using a different technology, so this will tell us whether lots of different vaccines can get these 90-plus efficacy rates, or there's something special about the mRNA technology. So that's a very important result to be waiting for.
Such exciting technology. We hope not only for now, the here and now when it comes to COVID, but for future as well. Robert Landgraf, we really appreciate your expertise here. Thank you very much indeed. Now, coming up, the UK signaling it won't back down as Brexit negotiations with the EU enter another crucial week. And a trade deal, of course, still hangs in the balance. We discuss this with Heather Connolly of the Centre for Strategic and International Studies. Stay tuned. This is Bloomberg.
So how many times a day do people ask you when your vaccine is going to be available?
Yes, well, that's definitely a very regular question, whether it's from employees, customers, media, or my mother.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Our aim was from the beginning to have a portfolio of 6 to 7 potentially safe and effective vaccines. We've signed with AstraZeneca, we've signed with Sanofi and Johnson & Johnson. We will leave no stone unturned.
Romaine is out. So, Caroline, I got to build this chart just for you. It's all about pound volatility as we take a look at what the markets are and are not pricing in. This really stuck out to me, Caroline, because 3-week volatility on the pound rising above the 1 month and above the 2-month volatility. So really looking at volatility happening now, what it is pricing in now, and then perhaps maybe some quiet in the months to come. But Brexit in the final days, Caroline.
Maybe some quietness to come. Never a dull moment when it comes to UK politics. Let's dive into it with Heather Connolly, Senior Vice President for Europe, Eurasia and the Arctic at the Centre for Strategic and International Studies. Groundhog Day is what you said when we were off camera. It is fascinating how long this happens, but not to get too into the weeds of UK politics, but a big Brexit supporter, Dominic Cummings, of course, an inner circle to the Prime Minister Boris Johnson, has departed him, exited, with big Brexit departures coming from those closest to the Prime Minister. Can we read into what sort of a deal we might or might not get, Heather?
So I don't think the departure of Dominic Cummings really impacts the decision that Boris Johnson is going to have to make about a future UK-EU agreement. It's simply something that he's going to have to do. While, Dominic Cummings has basically run a campaign out of number 10. Vote leave in some ways, or at least the style of vote leave, never ended. I don't think his departure is a signal. At the end of the day, Boris Johnson has to make a decision whether he wants this agreement or not, and whether he can sell it back to the British people if he's going to cross his own self-described red lines.
Heather, I love when we speak because you can put this into perspective. Every time we talk about the importance of that time and that being the final deadline, and then it keeps getting delayed and delayed. Explain to our American audience, what is the importance of this week and next week, why it may not be delayed if this really is the final moment?
So we are getting now into a danger moment of ratification. Of course, the British Parliament has to ratify any future agreement, as does the European Parliament. So what's happening now is getting so tight that once the legal draft is completed and agreed to, it has to go through translation services of 23 separate languages. It also has to be reviewed by the relevant European Parliament committees. So their last scheduled meeting is for December 14th. It's going to take some time for that translation and for that digestion of what they agreed to for the Parliament to agree. Now, we could push this past December 14th. And in fact, the parties could keep negotiating after January the 1st if they can't come to agreement. But of course, we know beginning on January the 1st, if there is not an agreement, the UK reverts to the WTO tariff schedule. And we really have chaos, I think, at many of the British ports of entry.
Silent screaming by many when you say that we could be negotiating past January. But talk to us about the chaos that is, the quotas, the tariffs. What is it that we haven't seen for a generation? What could be exerted upon the UK? How fearful are UK corporates becoming right now?
Well, I think they've continued to express grave concern, and just setting aside the status of the EU-UK negotiations, the UK is not adequately prepared for going into an entirely new trade relationship with the EU and the rest of the world beginning on January the 1st. Obviously the pandemic has certainly delayed this preparation, but again, industry doesn't know what they're preparing for. If there is an agreement with the European Union, they may not have to worry about collecting tariffs. If there's no agreement, then they have to start collecting tariffs. There isn't the digital information and the information systems to help truckers manage this labyrinth. And you can certainly hear from the haulage industry. They're screaming. They were given a manual from the government that was basically incomplete. They can't even tell their drivers the papers and the forms that they need to fill out to be able to successfully move goods between the EU and the UK. So this is going to be a very, very messy. And of course, we're so worried about Northern Ireland, which has its own unique system. And of course, we know if there are barriers or even the need for some sort of a checkpoints, this could really be a point of conflict in the future. So lots is at stake right now, for sure.
Given all of those uncertainties you just mentioned, what is the marginal hit to economics, to trade, to jobs, you just think, if there isn't a plan in place come January 1st?
So, this is the UK itself has tried to run some of these numbers, and this again is a projection. This was pre-pandemic, but with an EU-UK trade agreement in the next 10 years, you could probably see a hit of about 5% to British GDP. If there's no agreement, that could rise up to 8% of GDP hit to the UK economy. So those are real numbers. I think there's some perspective, though, in the British government that says, look, we are hosing everything down fiscally because of the pandemic. Perhaps we can get through a little bit of a more tough negotiation and perhaps not a deal, but we are already doing so much fiscal stimulus. So we'll have to see what they decide.
Heather Conley of the Centre for Strategic and International Studies, we thank you very much indeed. Now, of course, Taylor, let's move on from the Groundhog Day that is the UK and get the latest business flash headlines.
Let's start with a few stocks that are moving. We're looking at Home Depot. They've agreed to buy building products distributor HD Supply for about $9.1 billion. That reunites the home improvement chain with its former subsidiary. They split up more than a decade ago. Home Depot was paying a premium of about 25% over HD Supply's closing price on Friday. And the chairman of the Securities and Exchange Commission is stepping down. Jay Clayton will leave at the end of the year. He is a former corporate deal lawyer who has led the SEC since 2017. His term is set to expire in June. And Credit Suisse reshuffling roles in credit trading following the departure of one of its longest-serving managers. Chris Orr is leaving the Swiss bank after 13 years to pursue outside opportunities. He managed investment-grade and leveraged finance sales, trading, and strategy for Europe, the Middle East, and Africa. Orr will be replaced by the head of leveraged finance in the region. And Caroline, we move from this story about Credit Suisse into a broader story that we had a report from McKinsey saying that credit trading is going to be a hiring bright spot for banks. And what really fascinated me about this is you've seen companies like Wells Fargo, for instance, lay off or reduce their fixed income research team. So you go down that credit scale into credit, and perhaps that is where these companies can start to differentiate themselves.
But also, you can't be too niche when it comes to what credit you are indeed trading. They're saying that the reason people are going to be struggling to find the latest talent is because they're all going to have to be up to speed with the latest technology, the latest ways and means of making money off this asset class, because there's loads of innovations, aren't there, in terms of credit investing when it comes to portfolio, index, ETF trading. It's all bringing in potentially new revenue streams. The question is, who can make the most of it? Hey, Taylor.
CLO ETFs, that just says it all.
Dreamy. Meanwhile, let's have a look at what's happening in terms of your benchmarks, because we are at a record high when it comes to the Dow. An intraday period, we're up almost at 30,000. The Nasdaq is your laggard. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
I'm Mark Crumpton with Bloomberg's First Word News. Political experts say House Speaker Nancy Pelosi has her work cut out for her. With the narrowest majority in decades, Speaker Pelosi's ability to build consensus and keep Democrats moving in the same direction will be severely tested. Her first test comes later this week. House Democrats will hold leadership elections that appear to offer reprise of the existing team at the top, led by Pelosi, Majority Leader Steny Hoyer, and Majority Whip James Clyburn. One more sign that the fast-paced hunt by drug makers and scientists is paying off in the fight against the coronavirus. As we've been reporting, Moderna says its vaccine was 94.5% effective in large, late-stage clinical trials. The news comes a week after a similar shot developed by Pfizer and BioNTech was found to be more than 90% effective. The head of NATO has spoken with the new acting U.S. Defense Secretary about the alliance's commitment to stay in Afghanistan as long as necessary. The conversation comes amid speculation that President Trump might order a rapid withdrawal of U.S. troops in the country. Last week, the president fired Defense Secretary Mark Esper, who had tried to talk the president out of complete troop withdrawals from Afghanistan and Syria. Hurricane Iota is set to slam into Central America today as the Atlantic's strongest storm of the year. Forecasters say Iota, now a Category 5 storm, will bring catastrophic winds and torrential rain to a region still reeling from a storm 2 weeks ago. It will hit near the Honduras-Nicaragua border on the heels of Hurricane Eta, which killed more than 100 people. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Markets The Close. I'm Taylor Riggs.
And I'm Caroline Hyde. And it is just past 2:30. That's it. It means commodities closed for you. Let's have a check where we settle, because currently crude oil getting a bid up 2.9%. The reason, of course, COVID euphoria that spills into the equity market also fills into oil, and the hope for future demand. Right here, right now, demand not looking too pretty, but for the future we hope. Meanwhile, I'm looking also what's happening in terms of copper. The data out of China was strong in terms of its industrial production. We're helping, therefore, copper hit its highest since June 2018. We also shine a light on grains for you. Annual Global Grain Geneva Conference. It's virtual, of course, but it starts tomorrow, Taylor. And we are seeing riding high in terms of, once again, Chinese demand, weather-struck harvests as well. We're up 0.7% on that particular index. Gold futures as well, flat on the day.
Well, we'll take you from global grains back into the equity markets, and we do that with shares of PNC. Take a look at this, jumping earlier today as, of course, on the news that they are purchasing the U.S. banking operations of Spain's BBVA for almost $12 billion, making this now the country's largest regional bank and really eyeing some expansion into California and Texas. For more on this, let's bring in Bloomberg's Hannah Levitt. Hannah, what is the why behind this deal?
Hey, thank you so much for having me. So PNC sold out of its massive BlackRock stake that it had for years earlier this year. And the CEO, Bill Demchak, was very vocal at the time and in the months since about looking for ways to grow through deals during this period of market turmoil. So today they announced the deal with BBVA, U.S. operation, really big presence in the South, and that's an area that PNC isn't as large in. So it really opens up that whole area of the country for them in a way that it wasn't before.
So is the viewpoint that these regional lenders are going to go national once again, is that back in the fall?
Yeah, so what we have here is, they're opening up, they're creating a bigger geography for themselves. And they mentioned on the call today that this really gives them better access to California. It puts them in fast-growing markets. So they're really setting up to eventually have this national franchise.
Talk to me about the national franchise. When we think regional banks, we think smaller players not having to compete against some of the bulge brackets. Are they trying to now compete with the bulge brackets or just be the largest of the regionals?
Well, yeah. So in a lot of these markets, they are competing with the bulge brackets, but the bulge brackets have, the scale and the ability to spend on technology that some of the regionals don't. And so we saw this last year when BB&T and SunTrust merged to create Truist, and now we're seeing this again with PNC, really just, creating that scale and the ability to save on costs and spend on tech.
Of course, it was last year after the BB&T and SunTrust deal that you mentioned, everyone started thinking M&A was here, it was rife, we're going to be going for it. Mm-hmm. Will they? Are we going to see it?
That's a great question. Last year when that happened, we weren't predicting that. And it didn't really materialize. Now, here today we have this deal, and during third quarter earnings, there were a lot of CEOs of these regional banks that seemed a little bit more amenable than they had previously to eventually doing some kind of deal. And one of them mentioned, maybe into next year as some of the losses in their loan books start coming through and there's a little bit more visibility there, that's when we'll start seeing some more tie-ups.
Hannah Levitt, we thank you for that story. All eyes on the banking tie-ups. But coming up right here, right now, we talk about the race for a vaccine and it's speeding up. We have more details on the possible treatment from Moderna's CEO, Stéphane Bancel. This is Bloomberg.
Such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there is a Google problem in this country.
Moderna shares rising 10% today after its vaccine treatment for COVID-19 was found to be 94.5% effective. CEO Stéphane Bancel discussed his latest clinical trial results of a large late-stage trial with Bloomberg's Guy Johnson and Alex Steele earlier.
we have been working on mRNA vaccines for more than 5 years. This is the 10th vaccine that we have been running a clinical trial on. The other vaccine that you mentioned, it's the first time that they are doing an infectious disease vaccine. And so over the years, we've invested heavily in science, in process development that allows us now to have a much better storage condition than what we used to have 5 years ago.
Stefan, this is really important because it's going to have a huge impact on distribution. How much of an effect will that stability at a higher temperature have in everybody's ability to be able to get hold of this vaccine?
I think it's a huge impact. We're going to have a vaccine stored at -20 between our factory and the big distribution centers. And those are able to handle that type of product because they're already product approved by the EMEA in Europe, MHRA in the UK, or FDA in the US at -20 Celsius. But what is very important with today's news is we can now, for up to 30 days, have a vaccine stored in a regular fridge at 2 to 8 Celsius, like you do insulin. And as you know, every pharmacy, doctor's office, hospital has that capability. So we think it's a very important game changer. The other piece too, to keep in mind is our vaccine does not require dilution. The other vaccine that you mentioned requires dilution at the site. So you take the vaccine out and you need to dilute it. It's an extra step. What we have to do to get the world back to normal is a massive vaccination campaign that has never really happened before. And so every time we're going to be wasting doing these type of things for our product is going to be an issue. And so we think that between the fridge condition storage and the fact that we do not require any dilution on site, that's going to be a big advantage for nurses and doctors to be able to provide those vaccines quickly to the population who wants it.
Such a good distinction. Have you had conversations with the current administration or the incoming Biden administration about kind of distribution and how to mobilize?
Yes, so the Operation Warp Speed has been working in the US very closely with the CDC for a long time. And we are in daily discussions with them. What we're going to do, as soon as we got an approval or an EUA by the US FDA, is to ship the product via McKesson, who the US government has selected because they are very active in the seasonal flu process, to get the vaccines out to hospital and pharmacies. As I'm sure you read, CVS, Walgreens, Rite Aid, all the big pharmacy chains in the US have signed up to get the vaccine from McKesson to provide administration in the pharmacies. This is also going to be available, in hospitals, in some rural area, in community hospitals or GP's office. So there's a lot of work going on, and this is actually the government taking care of that step, whereas, the military is being involved to help with logistics.
Stefan, one of the key questions as we all watch the case count climbing around the world is what impact will these shots have on transmission? So what effect, if I have this in my arm, will this have on my ability, if I come into contact or get the virus, to transmit it to others?
Yes, and this we don't know yet. What we know from today's data is that if you get our vaccine, you're going to have a 94% chance to have no COVID disease. That's obviously a big deal.
Stefan Bancel, Moderna CEO, speaking earlier to Bloomberg. Now, let's get you a quick check on the latest business flash headlines. Here's Taylor.
And Caroline, we're going to fold in some of that vaccine data into what it means for markets. And Citigroup now saying that if those vaccines become widely distributed next year, the dollar may drop by as much as 20%. The Citi note backs up two other strategists who have said that vaccine breakthroughs, the U.S. election, and Federal Reserve policy could deal a serious blow to the dollar. Before today, the Bloomberg Dollar Index was down more than 11% from its March peak. And the world's biggest oil company, Saudi Aramco, is returning to the bond market for the first time since April of last year. It's turning to debt to help fund a $75 billion dividend commitment. Slumping crude prices caused Aramco's profit to fall 45% in the third quarter. And Walmart retreating from its two-decade attempt to crack Japan's retail market. It's selling most of the Japanese retailer Seiyu to KKR and Rakuten in a deal that values the company at $1.6 billion. The buyers will try to shore up Seiyu's digital operations. Caroline, everything is about our digital operations these days, isn't it?
Every company is a tech company. Meanwhile, let's look at another key company, which perhaps is slightly more bricks and mortar than many others, Simon Property and Taubaum Centers agreeing to a new price to combine their mall properties. That's as shoppers still hesitate to head back to said malls, said shopping experiences. Dave Wilson, looking at the new terms, it's helping the stock price. I'm sure so too is the news on the vaccine.
Oh, no question. I mean, you saw the same thing happen last week when we got the COVID-19 vaccine data out of Pfizer. So, yeah, that's part of the backdrop, no question. But Simon, I mean, there's a very specific story going on here. You know, back in February, they agreed to buy Taubman Centers for $3.6 billion. Then COVID-19 hits in March, and the business falls apart in the sense that shoppers stop going to stores, or they can't even go to stores because of orders that they had to close. So, you know, you put it all together in June. Simon backs out of the deal, argues that the pandemic gave them an opportunity to do that. Taubman, well, they said in a court document that it was, quote, a classic case of buyer's remorse. And at the time, some analysts figured that Simon just wanted a lower price. Well, now it has one. There was supposed to be a court hearing in a Michigan state court starting today about the scrapping of the deal in June. Instead, you got this revised transaction, $43 a share being paid for Taubman as opposed to $52.20. That works out to an 18% price cut. And so you put it all together. The deal's due to close by early next year. I mean, we've seen Taubman shares up even more than Simon. So clearly there's something more than just the reaction to the vaccine data going on. The Taubman family is going to be still involved with the company. Will have a 20% stake. You know, we'll see how the deal unfolds. When Simon pitched it back in February, they figured it would add to earnings right away. And we'll see if that's still the case, given what's happened to the shopping mall and outlet center business in light of the pandemic.
Dave Wilson, bringing us all the need to know when it comes to the mall operators. We thank you. Now, coming up, it's a green sweep with states across the country voting for cannabis legalization. We discuss what the future holds for prisoners currently serving time for something that's now legal. Sarah Gersten of the Last Prisoner Project joins us next. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Time now for a look at our top calls, and doing my best to remain Bostic impression. It's a look at some of the movers on the back of analyst recommendations. First up, we want to start with Tapestry, upgraded to an overweight from a neutral at JP Morgan, a $35 price target. The analyst citing management's clear confidence in earnings acceleration. Following the latest vaccine developments, shares are up 3.5%. And next up, it's Activision Blizzard, initiated with an outperform rating and $110 price target at Evercore. The analyst seen ongoing secular tailwinds for the gaming sector, including growing users, deepening engagement, and mobile adoption. Shares, though, down about 0.7%. And finally, McAfee, initiated with an overrate weighting, a $22 price target at Piper Sandler after a mandated quiet period. The analyst citing the need for strong cybersecurity solutions, positioning the company for consumer growth within its core enterprise base. Shares are up, Caroline, more than 1.2%. Those are just some of the top calls that we're looking at.
A great Roman Bostic impression.
Yes.
He would approve, I'm sure, but we wish him well on his day off. Meanwhile, time for Bloomberg Equality, where when we examine the bottom line impact of diversity, our focus this week, the green wave this election year. 5 states legalizing medical or adult use cannabis. We bring in Scarlett Fu for more.
Thank you so much, Caroline. And those 5 states add to the 33 that have already passed some kind of legislation. With legal cannabis becoming an American norm, voters are also increasingly in favor of changes to the law around past marijuana crimes. Joining me now to discuss is Sarah Gersten, Last Prisoner Project Managing Director and General Counsel. And Sarah, I know I just made it sound like there's a cause and effect between legalization and legal changes around past marijuana crimes. Is that actually the case?
It depends what type of retroactive relief you're speaking to. One thing that we have absolutely seen, particularly from more recent states that have legalized, is a really broad expansion of expungement provisions or clean slate initiatives tied to cannabis legalization. So what that means is for individuals that have already served their sentence but are still suffering from having a cannabis conviction on their criminal records, we're seeing a lot of states implement really broad legislation or initiatives to provide relief to clear those offenses. What we have not seen really widespread progress on is retroactive relief for those still serving active cannabis sentences, even in states that have fully legalized cannabis.
Okay, and Sarah, you've estimated there are around 40,000 cannabis prisoners in the U.S., but this is pretty much a rough number. Why is it so difficult to determine just how many actual cannabis prisoners there are?
This is a very difficult number to ascertain for several reasons. The first is that, of course, in the U.S., we're dealing with a complex intersection of various systems. So we have prisoners that are incarcerated on the federal level, we have individuals incarcerated on the state level, and then we have people in short-term incarceration in jails, in detention centers that are under different regulatory authorities at the county or municipal level. And each of those different systems have various ways that they account for incarcerated individuals. Some actually do provide information as to which drug offenders are incarcerated for which type of substance, but many of those systems don't actually categorize offenders based on the type of drug that they're serving a drug offense for.
Sarah, you've been working on getting compassionate release for prisoners who are sentenced for nonviolent marijuana offenses. How has COVID changed or accelerated that effort?
COVID has really accelerated this effort across the board for anyone that's currently incarcerated federally in the U.S. When COVID started really ravaging our correctional systems, the Bureau of Prisons, actually under the 2018 First Step Act, had modified the way that incarcerated individuals could apply for compassionate release through the sentencing court. But one of the biggest issues that someone needs to raise in one of these filings is basically a medical necessity or health reason for deserving compassionate release. Well, COVID presents a really urgent health risk for anyone that's currently incarcerated, but particularly for those with comorbidities or who might be part of the aging population, which is an increasing number of our federal prisoners. So we have absolutely seen a much broader use of this type of mechanism for release, but we've also seen many more success stories of judges granting compassionate release post-COVID.
Right. Interesting how that accelerated the effort. Now, one thing we haven't talked about, and one thing I've read about, is this idea that resentencing and expungement laws are petition-based. What does that mean in practice?
So in many of the states that have provided for some type of retroactive relief measure, whether that be resentencing or expungement, these initiatives are petition-based, meaning that the individual seeking the relief has to proactively apply to the regulatory authority for that relief. And what we find in states that have pursued a petition-based process is that there's an uptake gap. What that means is that we have this phenomenon where, on average, only about 6 to 10% of eligible individuals across the country that are actually taking advantage of these types of processes. And of course, you can understand when, first of all, someone has to know that they are eligible for this type of relief. Second, they have to navigate what is oftentimes a complex legal process to actually initiate those types of petitions. So what we are seeking in every state that is legalizing is actually automatic provisions for expungement and resentencing, which puts the burden on the state or the correction system to identify those individuals and provide that relief.
Now, Sarah, one thing that comes up a lot is the economic argument for legalizing cannabis. New job growth, for instance, increased tax revenues. Cannabis companies themselves, of course, helped support the ballot measures. There's also an economic argument for releasing prisoners. You reduce the cost of mass incarceration. Is there anyone or anything that's actually actively funding this last policy measure?
So many of our partners that fund the work that we do come from the cannabis industry. And I think that shows you that beyond the economic incentives for these companies, they understand that criminal justice reform, racial justice reform has to be part and parcel of any kind of legalization initiative. But to your point, where we see huge support for these types of initiatives from within the systems or from within states or counties are those that are actually seeking ways to address huge budget deficits amidst COVID, and they see a reduction in their prison population or their jail population as a huge way to do that.
So it all comes together in this very strange time of COVID in 2020. Sarah Gersten, thank you so much for joining us and shedding some light on this. Last Prisoner Project Managing Director and General Counsel. Caroline?
Thank you very much. What a fascinating conversation, and what a notable change there was from the election in terms of the green wave. We're still, of course, trying to work out the extent of any blue wave that might or might not have occurred. We are also awaiting comments from, as it stands, the president-elect, the office, as they say, of the president-elect. That is, of course, Joe Biden. And at the moment, Taylor, all eyes on the vaccine today for the markets, but there will be a lot of focus on politics and continuing.
We'll have a great conversation about some of those vaccines, the distribution around those vaccines in the next hour. And like you said, any parsing of the tea leaves that we can get. We have a great Tea Live blog on this, Caroline. Very interesting to note the economy was the #1 issue for voters as they went to the polls just a few weeks ago. And so this will be one of the first addresses, of course, or instances that we can hear some real plans and insights into the economy. And then, of course, how we can get back on track. There has been some going around that we may not need a national full lockdown. Perhaps we can get more of a piecemeal approach. That was according to a doctor on the COVID-19 task force from Biden. So perhaps trying to turn on and off the economy as cases come and go and avoid that national lockdown. So something, of course, that we'll be waiting to hear a lot of as we await markets that still continue to push higher, and we are near record highs.
Record highs on the S&P 500, record highs when it comes to the Dow, on the small caps as well when it comes to the Russell 2000, and record highs on the global benchmarks as well, all country world index at a record high. So it is notable the desire to get into equities at the moment on the back of this hope when it comes to some sort of a vaccine. But the vaccine's not going to come out tomorrow. This is going to be no initial immediate panacea. We've got a long, hard slog. And of course, we heard from the president-elect previously talking about what a dark winter we might have in the United States. We're currently seeing that unfold over in Europe with lockdowns. You're so right, Taylor, the fact that the market actually had been trading higher on the fact that we had heard from these Biden advisors that they wouldn't be looking for any sort of national lockdown. We're also going to hear about how they're navigating at the moment without the transition occurring, as would usually be expected. We know that over recent days, potentially President Donald Trump is coming to grips with his re-election defeat. That's according to aides and advisors. But at the moment, he's still continuing to tweet out. But let's get you up to speed with the first word news ahead of that all-important Biden speech. Here's Mark Crumpton.
Caroline, thank you very much. 8 months into the pandemic, the coronavirus is infecting Americans at an increasing pace, no matter where they live. New cases are climbing in all 50 states. The count of new cases is edging closer to 200,000 each day. The upper Midwest and Rocky Mountain West are home to some of the worst hotspots, with 7-day average rates rising as much as 30% in Wyoming and 24% in Minnesota. In the past week, 30 states saw single-day record case counts, according to COVID Tracking Project data. New York City schools will be open tomorrow as the positive test rate for COVID-19 remains below 3%. A rising infection rate led Mayor Bill de Blasio to warn parents that schools may be closed today. But the rate dipped over the weekend, and Mayor de Blasio said today, quote, "We've got to fight ahead to keep them open." New York City's 7-day average of new cases jumped to more than 1,000, something de Blasio called very worrisome. The World Health Organization's Director General says the UN agency is extremely concerned by a surge of coronavirus cases, particularly in Europe and in North America. Dr. Tedros Ghebreyesus said today health workers and systems are, quote, being pushed to the breaking point. He spoke to reporters at a regular briefing at WHO headquarters in Geneva after a 2-week self-quarantine as a precaution after coming into contact with a person who tested positive for COVID-19. A member of the Trump administration may be acknowledging that the president lost the election. Speaking at a global security summit today, the president's national security advisor, Robert O'Brien, is pledging a, quote, professional transition. O'Brien indicated that Mr. Biden appears to have won the election, something other top Trump officials have been reticent to say. Over the weekend, the president tweeted, quote, "I concede nothing," end quote. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
We're counting you down to the close with 1 hour left in trading. I'm Caroline Hyde.
And I'm Taylor Riggs. Romaine Bostic is off today. But like you said, Caroline, we are just 58 minutes now into the closing bell. What a wild Monday it has been. If you flip up the board, we can really see Caroline is kind of like we're exactly where we were 1 week ago Monday when Pfizer came out with its vaccine announcement. Then we have Moderna coming out with its vaccine announcement. And the S&P 500 sectors really show that cyclical reflation trade is firmly back on, with industrials and the likes really leading the charge. Tech, of course, is not the best performer